government shutdown. When you look historically speaking at both protracted government shutdowns and very short-term government shutdowns, they tend not to have a material impact on the overall market. And we're seeing that play out right now because earnings are what drive the market going forward. And what happens on the federal level may have a very slight impact on maybe some defense contractors or some very small pockets of the overall market. But by and large, it's not derailing any of these long-term, durable, secular trades like we've talked about in the past, like artificial intelligence, that's really front and center with respect to all investors globally. So while no one likes to see the government shut down, it's incredibly frustrating as private citizens to see that you can hold the government hostage one way or the other. From a market perspective, I don't think it has that much impact. And so if you do see any downside, I think it's a great opportunity to use that opportunistically. So far, we haven't seen that play out yet.
Matt, thanks so much for joining us as always. About last year, I think, or maybe midway through last year in the Indian equity markets, there was this conversation about overvaluation in the broader markets because of the kind of money that was flowing into certain ideas. And we were talking about a dislocation. I'm just wondering whether a similar argument can be made about the artificial intelligence theme that you've just spoken about, because come what may, people are putting money into these themes, and you probably saw the valuation of OpenAI.
Yeah, absolutely. And I think that's a question, Alex, that a lot of investors and clients are asking. And I think they worry because the market continues to push to new all-time highs, really guided by this AI theme. The word bubble continues to come up. And I adamantly push back against that narrative. I do not think that there is a bubble with respect to artificial intelligence because we are seeing incredibly strong earnings growth tied to this theme. So a lot of companies, especially the hyperscaler and the biggest companies where you see market concentration, they're growing their earnings at double digits year over year over year. And so that's very different from what we've seen in the past. And the massive capital expenditures that they continue to increase. We're going to spend $380+ billion just in 2025 alone from 5 single hyperscalers. All of that money goes into the ecosystem, and that goes to the top and bottom line of a tremendous number of other companies who are tied to the AI theme, whether it's industrials, electric equipment companies, other semiconductor, software names. So there's a very large virtuous cycle to the AI trade. And I think there's still at least 18 to 24 months before you see CapEx slow down.
So Matt, morning, Hiral this side. Now, the shutdown is grabbing headlines. In spite of that, you're saying this is something which is behind us, not something that will impact markets. What are the other economic factors that could be pressing concerns that investors should watch out for? And would you be an investor at this point in time with the American markets, with the way valuations are panning out and everything in and around it?
Yeah, that's a great question as well. And I think, yes, I would still want to have a core overweight to U.S. markets. I think the dysfunction you see at the federal level, again, I still would argue it's a little bit more noise. But the flip side is, if this does continue for a longer period of time, I think the question does then go back to the Fed. With the lack of data that we're going to get, could that influence how the rate path is going to move going forward? And I think it's difficult right now for the Fed to change the course that it has set itself on, because Powell's trying to ratchet down tensions with Washington, D.C. And I think he was very clear in both Jackson Hole and the September FOMC meeting in basically saying that while inflation remains sticky, the potential left tail of a significant shock to the employment market is outweighing that right now. So given that you can still argue rates are not at neutral at this point, why take the risk when you see the reports like ADP we got earlier this week where private payrolls are not great? Why take the risk and leave rates where they are, risk another fight with Trump in Washington, D.C., as opposed to continuing on the 25 basis point cut in October and then December that's already impounded in the dots? And so I think we can have a little bit more confidence this time without, say, the non-farm payrolls, or if it's delayed, that we're likely going to continue to see that play out.
Yeah, a couple of economic indicators that one should be watching out for before taking that risk. Thank you, Matt, so much for joining us on the show. And shifting focus to the Indian markets. Interesting day of trade on Wednesday because we ended on a pretty strong note. In fact, you actually closed near the 24,850 mark. The markets actually digested that status quo on the repo rate. Nifty maintained its upward momentum through most of the session. There were intraday dips that we did see, but they were actually being bought into. The sentiment overall was further buoyed by RBI's proposals on the capital market lending and banking operations. That was the booster dose. At close, if you see, the Sensex nearly gained little over 700 points and the Nifty rose close to 225 points. The breadth also positive, mainly the private banks, real estate, pharma, IT. These were the sectors which advanced in that range of 1 to 4%. Mainly the PSU Bank index that ended lower, and that was probably profit booking after the kind of run-up that we've seen there. Broader markets as well, a good show, almost a 1% up move coming in there. If you talk about the FI-DI data as well, the trend continues to remain the same in terms of what FIs are doing and what the DIs are doing. And in terms of individual sectors as well, I mean, there you go, 2,900 odd crores from DIIs, almost a 1,600 crore outflow that we saw from the FIs as well. So an interesting day of trade that we saw, Neeraj. If that uptick continues, and a couple of analysts and are of the opinion that there is a potential that it will be Bank Nifty or the private banking space that will spur today's demand in the markets as well.
By the way, Hiral, you're right, because we saw that on Friday as well. Right? I mean, if you just look at the Friday session as Hiral outlined, it was the banking stocks which led the rally, and maybe with reason, because I think in some sense what people are saying, you can very well argue that the mantra seems to be that it will be a consolidating market, maybe a bit of a bias here and there, but bottom-up stock picking remains the mantra. And you just look at the last 1 month, viewers, the markets may have completely consolidated, but you had bottom-up winners in the larger stocks, right? So GMDC, 43% gains in the last 1 month. Hindustan Copper, 41%. Vodafone Idea, 30%. Anant Raj, 30%. Adani Power, 25%. Sammaan Capital, the newsmaker of the morning. Some very strong gains for these stocks in the last 1 month. So there are a lot of stocks which have done superbly well, even as the markets have consolidated. So it remains bottom up with a consolidating market. But banks within that landscape could actually become the key talking points, especially post the MPC meeting. I dare say, when I spoke to a couple of fund managers, they said that this policy is as much about banks as it is about rates and the currency, because profit pools for banks have opened up. And we'll talk to Pranav Gundlapalli about that in just moments from now. So keep an eye out for the banking sector particularly. And broadly, as we said, even on day before yesterday's session, that the view seems to be constructive telecom and cautious auto, despite the auto numbers, simply because some of the stocks have rallied a bit. So be mindful where you bet on the auto pack, but telecom seems to be a consensus buy right now.
Yeah, and very interesting themes to take into today as well. But before we do dive into some of those, let's talk about the latest cues on the F&O front, and Puneet joining in to tell you about that. Puneet, what key levels are you watching out for?
Well, thank you for that. Definitely, the banking rally, as you guys rightly mentioned on Friday, was a key benefit, and hence we saw that 700-point up move on the Nifty Bank. We're back above the 55,000 level on the Nifty Bank, but on the Nifty 50 as well. While the implied open indicating a somber start, it's above the key levels of 24,800 and 24,900 as well. It'll be important if we can sustain that in the medium term, but that's going to be something to watch. When you look at the foreign investor positions very quickly, we've seen some kind of, on the Nifty futures, essentially some kind of selling, while index as well as Nifty options has seen buying. We've seen a very slight inch up of 70 basis points on the index long being added, but still very minuscule at 6.8%, and that largely seems to be the most bearish that foreign investors have been at this particular point of time. This was around 16% before the end of the last expiry, so they've started this particular month with increased shorts in the system. In terms of open interest distribution, that's my final plate. We've seen essentially 25,000 as a key level for calls, but between 24,500 as well well as 24,800, and increased interest essentially being added by the put investors as well. So we could be seeing this key level between 24,800 and 25,000 as one of the levels where you would be seeing an increased consolidation of both calls and puts, but a key trigger will be needed to go into the next level, and that will probably come with the earnings that will start next week with TCS amongst others.
Important point that you're making, Puneet. Certainly, earnings is going to be front and center very, very quickly. Before that, several stocks that are in the news, and I'll start with my list. We've got Coal India at the start, and the production numbers as well as the offtake numbers for the month of September has come through. September production down 4%. For the first half, the production is down 3.6%. The September offtake is down 1.1%. In the first half, down 2.1%. The reason this is negative is because the company has not really been able to hit the targets that it is set for itself. And just for context, the supply target for FY26 is a pretty ambitious 900 million tons. The production in the second half will have to rise from Coal India 29% in order to meet this target, and that's a pretty stiff target for Coal India. Bansal Wire, very interesting update. Not the largest company, about 5,000 plus crore or thereabouts market capitalization, but the total volume is up as much as 46% in the second quarter, coming at 114,600 plus metric tons, and the volume has increased 10% sequentially as well. So it's a significant update. This is apparently the best quarter that they have reported on the volumes front, so watch out for this one in trade. And finally, Adani Green Energy. The company continues to build on the capacity that it's creating in Khavda. It's already pretty much one of the largest solar fields in the country, but they've commissioned 50 megawatt solar power project at Khavda and a 31.2 megawatt wind power project. Remember, that's a hybrid facility that they have there at that Khavda area. And the total operational renewable energy generation capacity now at Khavda standing at 16,679.8 megawatts. The goal, of course, is to go towards that 30 gigawatt number. So it's quite significant. I think that it's one to watch. And of course, the standard disclaimer, NDTV Profit is part of the NDTV group, which is part of the Adani group as well.
On my list, one, we have the auto sales, the entire pack that will be in focus. It's interesting to see because your passenger vehicle market actually surged in September. It's actually seen a bounce back after a 4-month slump. Mainly your GST and festivities that have led the growth. Maruti has led the pack. Tata rose to second. Mahindra actually climbed third, while Hyundai slipped to the fourth position. Taking this forward with the two-wheeler space, the positive momentum continued, wherein Hero dispatched almost 6.87 lakh units. Scooter sales was also up. Bajaj Auto, it was mainly the domestic two-wheeler sales that were up 5%, but exports surged 12% on this one. So watch out for this entire pack pretty closely. And you have your Class 8 truck orders that have come in. So Ramkrishna Forging also will be in focus along with the Bharat Forge. Moving on, a couple of business updates from banks. CSB Bank, a strong double-digit credit and deposit growth is what they've seen. In fact, the gold loan portfolio has continued to be the major driver on this front. And you have an Indian bank where the operational quarter is seeming pretty strong. Your credit and deposit expansion is strong. Gross advances have grown by a robust 12 to 13% as well for this one. And their retail, agriculture and MSME portfolio has seen a 16% growth, which is a major positive. Very lastly, HDFC Bank, a thumbs down, wherein you have the senior management member, which is Rahul Shyam Shukla. He resigned effective the 1st of October 2025. He cited personal reasons and the resignation has been accepted as well. What is interesting is that there is no successor who has been named so far. And another exit, I beg your pardon, Parag Rao. He has also, resigned from the company, and the bank has a policy of around 60 years when it comes to retirement of its employees. He was the group head of payments, consumer finance, liability, product. He was also responsible for multiple businesses and held key leadership positions. So both of these probably will have some sentimental impact on a HDFC Bank.
Yeah, I struggled with a few words as well. Narayana Hridayalaya among them. Yeah.
Let's get to Samman Capital. No struggling with that name. That's the first stock on my list. Avenir Investments are going to invest about 8,850 crores via shares and warrants. This is about 43% stake, 43.4% stake post the investment. two things to keep in mind. One, this subscription is happening at 139, which is an 18% discount to the current market price. And the open offer to shareholders would presumably happen at the same thing as well. By the way, Avenir is the investment arm of International Holding Company, or IHC. Now, just two things to keep in mind, viewers. This is a big transaction. Noticeably or presumably over a long period of time, this will work very well. For the very short term, the negatives of this transaction are only a couple. The current book value of this transaction comes off, and the price to book for Sammaan Capital increases from 0.7 to some 0.85 or thereabouts. And since 2020, the average price to book has been maybe sub 0.6 or 0.5 or thereabouts. So it's not a cheap stock relative to its recent history, but it's a change of promoter, if you will, and that should augur well, maybe, for over the long term for shareholders. So keep that in mind. I suspect that a bit of a rally has been done, and therefore you may not see too much more, but I might be wrong. Unimec Aerospace will certainly have some reactions. That aerospace space is very decorated, but Unimec has said that they continue to experience a slowdown in revenues. They expect a decline in Q2 revenues and profits compared to Q1, mainly attributed to the imposition of the US tariffs. So I suspect that you will probably see some bit of a downtick in Unimec today, despite the fact that the sector is very fancied. And VMart Retail, no such problems for that one. So that could do well because it achieved 807 crores in total revenue, which is about a 22% YOY growth, 11% same-store sales growth. Not too many faults with this one. Presumably, what started in September will last for the October, November, December quarter. People will be penciling that in. The stock and its peers could have a good day in the run. But I hand it over to my colleague Vishwanath Nair for everything related to banks. And Vishy, it seemed that the policy statement and the measures were tailor-made for banks.
Yeah, so if you were to look at what the actual monetary policy decision was, I had been saying it since that day, but that was just a sideshow. The main focus was, of course, the norm changes that the Reserve Bank of India is bringing in, 22 specific norm changes. Now, yesterday we did talk about how the regulatory changes came in as far as the large exposure framework, as well as the draft guidelines for NBFC's forms of business, how those came about. What we're telling our viewers today is about acquisition financing. That was one of those key measures that was announced by the regulator, that banks, Indian banks, will be allowed to finance acquisitions by Indian corporates. This is something that they were struggling to do earlier. Earlier, of course, a foreign branch of an Indian bank could still do that. However, domestic lenders were not able to do that, partly because of the large exposure framework, but partly also because the regulator was not in favor of allowing leverage buyouts in India. So now, of course, it seems that things have eased up. What we are learning from our sources is that this was actually led by banks going to the RBI and lobbying for the rights, because they were seeing that their key corporate clientele was going towards private credit, and private credit competition and the intensity of the competition was too much, and banks were seeking a way to get into this space so that they could also start lending towards good quality, high pedigree clients wherever they needed any kind of financing for acquisitions. Of course, guardrails still exist. What the new norms are likely to see are very strong guardrails in place so that banks don't over leverage themselves. They also will have to follow internal lending norms. Remember that a bank is only allowed to lend up to 20% of their capital base towards a single corporate. So that will still apply. When it comes to investments, that number goes up to 40%, but that's inclusive of the 20% in lending. So you have an upper limit on the investment side as well. So even if they want to structure a deal with some amount of investment into the corporate rather than just a direct loan, they can do that, but those will be within specific rules so that Indian banking system is not ending up too exposed to a key corporate buying out its competitor.
Important groundwork that you've done for us, Vishy, in setting that up, because we're joined now by Pranav Gundlapalli, who's a senior research analyst at Bernstein, tracks the space very, very closely, spoken to us about key developments in the past. Pranav, always a pleasure speaking with you. Seemingly the tone and tenor of the notifications, some of which Vishwanath has already spoken about, is maybe giving a nudge or facilitating banks to lend to large corporates once again. We've seen that flagging off. What, according to you, are the key developments? Among them, of course, the 10,000 crore mark for banking system exposure for large corporates as well.
Hey, morning. So I think it's a continuation of a series of policies which are aimed at driving growth back, right? So I think we've seen this is almost like a regulatory easing cycle. So we had a tightening cycle starting late 23, and we seem to be clearly in a regulatory easing cycle. And this set of measures included reversing some of the constraints that were put in during the last asset quality cycle, right? So restrictions on acquisition financing, as he was talking about. They were also easing off the amount of financing they can provide against debt securities, a whole set of regulatory changes, including those that help the large banks. For example, there is a proposal for risk-weighted deposit insurance premium, which again will increase the gap between the large and the smaller banks in terms of deposit costs. So it almost seemed like a long list of measures, almost like saying we're doing all we can to help you drive credit growth back. So now it's up to the banks to see if they can drive credit growth back up, especially in the corporate segment, which has remained weak for a very, very long time.
Pranav, Vishwanath joining in. I just wanted to ask you this question about the risk in the system, right? So these guidelines, of course, ease things, and then banks can go out and maybe expand their business significantly from where they are currently. But I'm just trying to understand, writing these big checks, is the risk in the system adequately addressed?
I think yes, because two reasons. One, the amount of equity is significantly higher than where it was, let's say, a decade ago. So we're almost talking about, if you look at the private sector banks, they're all riding at almost 50% more capital than where they were, let's say, a decade ago. So the capital buffers are significantly higher. Second, as a segment itself, if you look at, for example, the credit to industry, as a percentage of GDP, it was almost about 22-23% back in 2013 when all the trouble started. Today, that number is dropped down to about 13%. So you've seen a massive deleveraging. So let's say for the next 2-3 years, even if there is a bit of euphoric lending, we think the risk to the system will be quite limited because you're starting off from a very good position, both from the borrower perspective as well as from the lender's perspective. So both sides seem to be in a nice shape. Now, obviously, I think the regulator will start tinkering once you see a few years of very strong growth. I'm sure there'll be a tweaking of the regulations, just like what we saw on the consumer side a couple of years ago.
Pranav, morning, Neeraj here. And maybe you briefly in part answered it, maybe not, but I'm still inclined to ask this to you. This decision of allowing banks to finance acquisitions. In a scenario wherein growth is not there organically per se, except a few sectors, and therefore inorganic growth is what a lot of corporates are resorting to, does this have the ability to give a leg up to banking earnings?
Yes, it could add a couple of percentage points to overall credit growth, but that alone would not be sufficient to take the system growth from the 10% that is today to anywhere near the mid-teens level. So yes, it is a positive, but I would still expect it to, at best, drive a percentage point or two. Bulk of the banking credit still is towards households, almost 55-60% is household credit. So you do need to see a consumption credit pickup for the overall credit growth to start seeing a significant improvement.
Pranav, Mane, Hiral on this side. Let's shift focus to the other announcement when it comes to credit to capital markets. Now, the limit for loan against shares has been also increased to almost 1 crore. You're talking about IPO financing limits that have more than doubled. Does this regulatory easing that has come in over here pose an elevated risk of banks, and taking that up from what Vishy asked you as well? Or is the new limit pretty much in line with the needs of what the HNI investors, family offices need?
I think it's in line with what is required. A couple of things. One, banks have always been at a bit of a disadvantage when it comes to products like LAS, for example. So it's a bit more of reducing that regulatory gap. That's one. And second, if you look at the change in market cap, the average holdings for even retail investors over the last, let's say, 5 or 10 years, you've seen a significant inflation. So I think it's a bit of an inflation correction as well. So I don't think a lot has changed in terms of what is allowed or not allowed, especially on the retail side. So this I see more as an adjustment of limits based on what has changed over the last 5 to 10 years. So not a significant easing should not allow, or I don't think it's aimed at suddenly allowing new forms of lending or a lot more relaxed lending norms. So I don't think that's the case here.
Pranav, just to now dot the I's and cross the T's, to close this out, you mentioned retail credit at 60% or thereabouts compared with corporate, and corporate has been lagging. 2016 was when those guardrails on large corporate borrowing were set in motion, and you've seen, for example, ICICI Bank that has moved completely towards retail banking. There was a time when corporate was larger, but do you see any incentive for them to shift? Because the margins are nice, the growth is good. Do you see any incentive for the large banks to shift at all?
So one, yes, I think margins will be a challenge, especially with the private sector banks having decided they will pick margins over growth. So, but even if the public sector banks, for example, were to move towards more towards corporate, it probably eases the competition on the retail side. So that's one. So overall credit growth improves. I think it improves for everyone. So that's a positive, whether they participate or not. Second, I think as the demand for corporate credit picks up, it would be hard for the large private sector banks to sit out like what they could have done 15 years ago. I mean, HDFC, ICICI have amongst the largest capital bases in the country. So barring SBI, they're not. It would be difficult for corporates also to borrow if the large private sector banks choose to sit out. So I think they might jump in with a lag, given that this is a segment that created a lot of trouble last time. They would be a lot more cautious, but I don't see why they wouldn't jump in as long as growth comes in. And at the end of the day, it's all about earnings growth. They have excess capital. So even if this comes at a slightly lower ROAs, but if it leads to a much better EPS growth, banks should be jumping in into this segment.
Thanks so much for joining in today and giving us your perspective. Really appreciate your time.
Yeah,
we take a very quick break. Back with a conversation with Maruti.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख। 60 लाख? अरे इतने में तो
लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी।
Hello and welcome back to NDTV Profit. We're now in conversation with the management of Maruti Suzuki post the September auto sales numbers. It was a bumper number to say the least, but to get some more perspective of what the company is seeing on the ground, as well as what's the outlook for October, we're now being joined by Mr. Partho Banerjee. He's the Senior Executive Officer, Marketing and Sales at Maruti Suzuki as well. Mr. Banerjee, thanks so much for joining in and a very good morning to you. Let me first start off with that question because, we just had about 8 to 9 days of sales essentially in this particular month, led by the GST cuts from September 22nd, as well as the Shraddh period where, the sales are quite limited. What are you currently seeing on the ground? And is that a momentum that you're seeing broad-based across categories?
See, first of all, I would like to share that this is one of the best Navratras which we are seeing in the last 10 years. Just to give you a perspective of the numbers, that in the first 8 days of this Navratra, we have delivered close to 1,65,000 vehicles. This is a record in the last 10 years for Maruti. So we are seeing in the month of September, the retail growth of almost 27.5%. And it may likely happen that by Dussehra, maybe we will be touching the magical 2 lakh figure. So, as per all standards, we feel that the response of the initiative taken by our Honorable Prime Minister, Mr. Narendra Modi of 2.0, GST 2.0 is really doing the job at the ground level.
Fair point, Mr. Banerjee, but also give us some perspective on one of the key segments, which is the SUVs. Now, in this month, you've done roughly about 48,000 versus 61,000 the same time last year. Is that largely because of the limited days for sales in this particular month, or is that because you're seeing some kind of limitations right now in terms of transportations and trailer availability? Because that's been something that we're hearing from dealers as well.
The number which you're talking about is the dispatches from the factory. That's the wholesale number, the dispatches from the factory. And I think you will appreciate that since due to the cess problem, which used to be 18% on the bigger vehicles, we were not dispatching any vehicle till 22nd of September. So the vehicle which has been dispatched from the factory, there is a limitation to the trailer which can only be delivering it every day. So the capacity was to the tune of 10,000 vehicles per day. And keeping in mind all the vehicles, I think it will take some time for the overall the logistics system to come to the equilibrium. That's the reason primary. Otherwise, in the retail, if we see the growth of the SUV vehicle for Maruti is 32% in the month of September.
Fair point, Mr. Banerjee. So effectively, would you consider that it's better that we look at September as well as October when the numbers come out because of the split of festive dates that we've seen in this year compared to last year? And also, do you expect that all the bookings which the company has received in this particular point of time will be delivered by the end of October?
I will give you a perspective. In the month of last month, we have got more than 350,000 bookings. And right now, when I'm sitting in front of you, we have got close to 250,000 pending bookings with us. Challenge is that transporting the vehicle from our factory to the dealer stockyards. So since the cycle of this logistics started from 22nd of September, it will take some time for it to come to the equilibrium. So we are expecting that if we see September plus October, we should be able to serve our customers. However, at the same time, seeing the response and the demand which is coming from the customer, our supply chain and production teams are going to work on Sundays and holidays to meet the demand of the customers.
Also, Mr. Banerjee, one of the most positive outcomes that we are seeing in this month has been actually not led by GST, it's actually the export growth of over 42,000 units that you already sold this month versus 27,000 the same time last year. Has this led by broad-based growth across geographies that you're seeing in Japan as well as Europe, as well as the different models that you cater in these markets?
Actually, right now for Maruti, I think all cylinders are firing, be it the domestic market, export market. In export also, we are seeing a phenomenal growth of 50%. And I think it's a product like the Jimny, which we are exporting to Japan, also to the Middle East countries and the Africa. I think the products are really doing well into the export market also. We did close to 42,000 vehicles in the last month compared to 27,000 vehicles which we did last year in exports.
I'm sure, Mr. Banerjee, that's also led by the EV momentum as well. But thanks so much for joining in, giving us perspective on what you're currently seeing on the ground. But back to you guys in the studio. It's been one of the better months, essentially, for the export market for Maruti, despite the strong momentum seen in the domestic market.
And this is what will lead to that uptick that brokerages are indicating so far as well. Thank you, Puneet, for that. But let's get in Dharmesh Kant, Head Equity Research of Chola Securities, and Kush Bora, founder kushbora.com, in our studios. Welcome to the show, gentlemen. A very good morning. Kush, with the kind of upside that we saw on Wednesday's session, I would say, we ended on a pretty strong note. Are you seeing that momentum that could continue today as well? And if so, what will be the levels that you will track on Nifty and Bank Nifty?
Sure, hi Hiral. That's what a mid-week break does, right? I mean, confuses you with Mondays and Fridays, right? But guys, it's a Friday, right? It's time to bring out that popcorn tub, and I have to ask you a question. which is a favorite mystery, suspense, kind of plot twist movie?
Can't think of any
Glass
right
Onion.
Oh, yeah, that was a good one. That was a good one. How about you?
Can't think of any, but probably Gupt.
We have a consensus there. We have a consensus there. It's on my list as well. How about you, Neeraj?
I think Memento.
That was a good one too. This is a good list we're making, right? As far as I go, I like Prestige. I don't know if you've seen that. The Prestige, fab. One of the earlier Christopher Nolan movies. Gupta also makes the cut, and the classic Sixth Sense. How could we miss that one out? But
sorry, just if you're comparing Prestige and Gupt, I think there is something wrong here, coach.
I was going Hollywood and Bollywood, so I was taking one from both the industries or both the areas. But yes, those. But then again, who needs Netflix? When you've got markets making these thriller moves practically every day, right? And speaking of mysteries and mixed signals, markets are sending on plenty of those. Let me just name a few, right? See, we saw the index surge on Wednesday, but the FII short covering on index was minuscule. They still remain 93% short, and that's still close to record levels. Sectoral breadth was very strong again on Wednesday, and the FII net selling in cash continues. In fact, if you see the net institutional activity, that was much better and much stronger on Tuesday when the markets ended lower than on Wednesday. India VIX is low, correct? Under 11 right now. But hand on heart, tell me if this feels like a low volatility environment to you right now, especially what's happened in the last couple of months, right? And lastly, Nifty is in that resistance zone of 24,800 to 25,000, but the put bases have shifted higher to 24,600 and 24,700. So now coming to the $1 billion question, what do you do in a market like this? See, like we've been discussing for the last couple of sessions, you play or you trade only for a short covering bounce, and we got a big one of that on Wednesday. You don't create positional longs until 25,000 is taken out, when the markets will have a much more comfortable stance, right? Once that is taken out, so you take positional longs once that is taken out. For now, you only play for short covering bounces. But the index to go long is Bank Nifty. The turnaround on this one started a couple of sessions ago, before Nifty did, and with the kind of momentum that you're seeing, I think this one still has room on the upside. So if you want to create long positions, stay with financials in general and Bank Nifty in particular on the index. Nifty, play only for short covering bounces and not a positional trade yet.
Okay. All right. If anybody has comments about their favorite mystery movies, then do let us know in the comment section, and we'll tie up the list. Maybe we'll end up with more than just Prestige and Gupt. But having said that, let's go across to Dharmesh Kant. Maybe he can tell us what his favorite movie is as well. But before he does that, Dharmesh, we were spending a little time talking about banks today, and the recent moves have been favoring the public sector banks, the private sector banks perhaps taking a bit of a back seat. What is your opinion on these norms, and would you go out and buy any of the large private sector banks in anticipation that their corporate book might just get a bit of a leg up?
Yeah, very good morning to you, Alex. See, the expectation is that corporate book will have a leg up going forward because of the consumption demand which may come through with all the macro tailwinds playing out. And for that, RBI has given them headroom for the expansion, and with a better, themselves profitability into place. So this is the expectation, but we have to wait and watch. I think the month of November and December is very critical in assessing whether this structural, multi-year story is going to play out, or there's still a pause before it plays out. So to our mind, and particularly to my mind, I think there will be a pause before it plays out in full throttle. We have to wait for next year, maybe Feb and March, before this entire thing can pick up in a significant way, because the demand has been there. I mean, look at auto numbers. There has been a lot been talked about the auto numbers. But the domestic sales, be it Maruti, be it Hyundai, has not been great enough. It is exports which have done the heavy lifting, and because of that, the numbers are looking good. And last year, both the periods, Navaratri and Diwali was in the month of October. So the base for the October goes very high when they report their numbers for the month of October. It may still be better, but not 20 or 25% kind of a year-on-year growth. It may be maybe 2 to 10% kind of a year-on-year growth. Because Maruti did a sales of 206,000 vehicles last year, October. Hero MotoCorp did a sales of almost 679,000 vehicles last year, October. So now the base shifts higher. I think it's still time to see whether the structural story is fair. Having said that,
Dharmesh,
if you are a multi-year buyer...
Dharmesh, sorry, just one very quick question and a quick answer, please, if you can. Sure, October numbers may not really benefit from the base, but because the GST impact is not for a month, but for the next 6, 9, 12 months, or maybe for posterity, could the subsequent months have good numbers relative to the past years?
Yeah, good morning, Nija. I mean, that's the hope which everybody is building on. So we have seen almost 6-7 months of direct tax benefit playing out, interest rate cut playing out, better monsoon playing out. Still, the consumption demand was not that great. It's more of a pushed up, pent up kind of a demand which we have seen. To my mind, sensing how the entire IT sector is playing out, because there are a lot of layoffs happening out there, and the tariff thing which will have a greater impact on the MSME segment, and the cascading impact on the ancillary segment. So how much it balances out has to be seen. So there's not a clear cut answer to that. But my assessment is there's more time to go before the things pick up. So we are not very gung-ho about all these rate cuts coming in the short term. Medium to long term, one has to wait and see how it plays out.
Moving on, Sammaan Capital, that's the stock to focus on. Abu Dhabi's IHC set to infuse 8,850 crores in the company through shares and warrants. Somit joins us. Somit, this has been on your heard on street as well since quite some time. What are you now picking up, and what is the kind of impact that you're seeing?
Last week, yes, we did indicate that there could be a big corporate development that could come in Sammaan Capital, something related to fundraise, and that has been announced on Thursday that we had seen. Now, what is the announcement here is the fact that IHC will be infusing close to 8,850 crore rupees in the company via shares and warrants, and these shares and warrants will be issued to IHC at a price of around 139 rupees, which is a steep discount of nearly 18% compared to the current market price. Given the fact that IHC will acquire around 41% stake, there will be an open offer also for the public shareholder, where IHC will look to acquire 26% from the public shareholder, and the open offer price is also kept at a steep discount of 18% compared to the current market price, that is at around 139 rupees. Now, post this 8,850, IHC will get close to 41.2% stake, and this stake could further increase depending on how successful the open offer turns out to be. Now, on the positives, obviously, this is a big, in fact, a significant fund infusion that is happening in the company. 8,850 crore for a company which has a market capitalization of just 14,000 odd crore rupees. Also, this will give the company access to large growth capital to achieve the management targets that were stated earlier, and a big institutional investor coming into the company. Foreign institutional investor coming into the company is also something that is positive for Sammaan Capital. Now, what are the targets that the management has set? They're aiming to increase their asset under management to close to 1 lakh crore rupees by the end of FY27 from the current number of close to 62,400. And they're also looking to lower the credit cost to around 1% from the 3% number that we had seen in the first quarter of FY26. But when it comes to the negatives, given the fact that it's a significant fund infusion, there will be a significant dilution, equity dilution for the existing public shareholders. Their stake comes down from 98.25% to just 57.74%. And when it comes to the book value, that comes down from 243.6, which is the number that we had seen in the first quarter, to just 200.5 rupees per share. And the valuation, that also increases from 0.7 times to 0.85 times. Now, obviously, a valuation below 1 could look quite attractive, but do remember that Sammaan Capital has been trading at a valuation of less than 1 since the 2019 crisis. In fact, the 5-year average valuation is just 0.5 times. So compared to that, the valuations become expensive at the current post the fund infusion. And given the fact that the deal is being done at an 18% discount, we could see some negative reaction coming in the share prices, given the fact that since the start of September, share prices of Sammaan Capital have jumped nearly 36%. This could be on anticipation of this deal that was expected to come in, and given the fact that now the deal is happening at an 18% discount, there could be some negative reaction on the share prices.
Oh, there could be a negative reaction on the share price, taking that September upside into consideration, and the deal being done at a discount. Thank you so much, Somit, for that. Kush, let me first take a question with you on Sammaan. We've been discussing this throughout the week as well, with the kind of up move that has already happened. Fundamentals are telling you that there could be a potential downtick in the stock in today's session. What are charts indicating?
Well, similar view on the technicals as well, but let me just reiterate this for the benefit of viewers that we discussed Sammaan Capital on the show, on the channel multiple times over the last week, 10 days. In fact, the first time we gave this call was on 10th September around the 140 levels. So you're making a neat about 25% or so in less than a month's time. Not a bad gain, and you might want to start considering booking profits now with the kind of news that's out and also the run up that the stock's already made. If you do get it close to those 150 levels again, or maybe just under, it'll be a good time to go long, but for now it's definitely profit booking time.
Okay, so profit booking time on Sammaan Capital, and remember the event, by the way, lends itself to it simply because of the open offer prices there. You might see some bit of a cool off out there, so yep, maybe book your profits. We'll ask this question again once the price is discovered at 9:08 or 9:15. Kush, what are the idea of the morning there?
Sure, Neeraj. Both of them on the long side and happen to be from the cash segment. The first one is Shriram Pistons. I was observing a good accumulation on this over the last week or so. Good relative strength. I was just waiting for that breakout, and that came about on Wednesday. 2700 was a bit of a resistance that's been taken out. So yes, this momentum would continue to 2790, 2850 levels, and the stop loss will be around 2675. APL Apollo, here too very similar structure, healthy accumulation. The volume action was more comforting than the price action, and on Wednesday here too we got a breakout above that resistance zone close to the 1700 mark. So yes, on the upside 1775, 1820 are your targets. 1685 is where you keep that stop loss.
Okay. All right. We've seen a few updates come through. Of course, the automotive pack, we've seen most of the numbers, in fact all of the numbers come through. Dharmesh, you did mention this as part of your consumption piece, but then my counter to that is that while you're saying exports was better, these are wholesale numbers that we're talking about, and we heard Maruti Suzuki earlier today saying very clearly that their retail sales are doing incredibly well during the festive season and heading into Dussehra. So what I'm asking is, perhaps on the wholesale numbers you could see that pick up towards the end of this year. But you've seen a run up in the prices. Would you go out still and buy any of these automotive companies, or if at all, the auto ancillary companies?
I mean, both, but from a structural long-term story. I mean, if you're willing to wait for, say, 1 year or more, then there's still, juice left and you can pay it out. And the top pick still, to my mind, would be Mahindra & Mahindra and Hero MotoCorp out there. But I would be buying them on declines and not at current levels, because valuations have done up quite so fast, and it's a retail sales is nothing but a conversion of wholesale to retail. So companies book on the basis of wholesale numbers. So already inventories are being pumped up, and maybe October month I heard the management saying like they are expecting almost 250,000 odd cars to be shipped to the retail dealer. So that may still be in place. But again, this is coming on the backdrop of 210,000 or 206,000, which they did last October. So the entire thesis is if you are already invested into these companies and holding on, maybe on today's pop-up or one or couple of days, you may still start taking part profit, if not full, and wait for a meaningful declines, which I think will definitely come in the month of November, to get invested for a long-term perspective.
All right. So that's the view on the automotive space. Watch out for them nonetheless. Some of them posting their numbers after market hours on Wednesday. Let's talk about an IPO that is open for subscription today, and this is workspace operator WeWork India. And Anushi joining in to tell you why this stands out, including how it stacks up against the competition that it's already listed. Anushi, an interesting space to watch out for. What stands out about this issue?
Hi, morning Alex.
Morning.
So if you've seen in the recent months or so, we've seen a couple of IPOs coming in this particular co-working space. Now what's interesting here is it's a 3,000 crore of an issue size that we are looking at for WeWork India, which is essentially an offer for sale that we are seeing. So that is interesting. There's no fresh issue for this IPO that we are seeing now. In terms of how the company is, it has about 70 centers in 8 cities or so, and this is with an occupancy rate of around 76% that it has maintained over the last 2 fiscals. Net average revenue being about 19,085 or so. What's interesting is kind of margin profile it has. It's a 60% plus margin profile that it has maintained over FY24 is what we are looking at. But currently, if you look at the financials in terms of net profit, that has remained on the negative side. Just doing a quick check in terms of how it compares with the recent IPOs or even the recent listings. Office space solutions, smart working, co-working spaces is something that we should be watching out for, wherein the company recorded about a 17% of revenue growth in FY25. These two had done a substantially higher growth, about 32 to 42% of growth is what we are looking at. Margin profile, however, is on the better side, but PE valuation for this one is 61 times in comparison with office space 81 times. So do keep this one on your watch out.
Got it. All right, Anushi, thanks so much for highlighting that, and watch out for that issue, of course. We've got a couple of listings to watch out for as well. But we'll talk about all of that after this very quick break, and more stocks also to talk about, so do stay tuned.
Co-presented by National Stock Exchange.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
ये वाला तो गुगली है।
वो वाला?
ये वाला तो सिक्सर है।
कौन सा फ्लेवर बिजनेस बढ़ाएगा? ये खूबसूरत चिंता आप करिए। बिजनेस लोन की चिंता हम संभाल लेंगे विद कोलैटरल फ्री लोन एंड टेन्योर अप टू 7 years।
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
Back with India Market Open right here on NDTV Profit. Now, we've been talking about how banks were at the forefront of the move in Wednesday's session, and it may not be done as yet simply because the policy, the MPC policy outcome that came in was tailor-made for banks, at least to my mind. Now, the question, therefore, as the pre-open session is about to kick in and as you see the rates this Friday morning when the rest of the Asian markets are actually doing well, the question is, will banks continue driving the markets higher, or will we actually see a bout of profit booking as the week comes to a close? Now, Dharmesh, that's not the question that I want to ask you. The question that I want to ask you is that did you think as well that banks are giving you an opportunity? And if so, what within the banking ecosystem would you want to buy currently?
Yeah, I mean, there are, a couple of opportunities out there, and I'm particularly, focused on public sector banking space, and there I think Bank of India stands very tall. Because if you look at the structural numbers of Bank of India for last 5-6 quarters, they have been a consistent 12 to 13% kind of advances growth with 9 to 10% kind of a deposit growth with stable NIMs and stable asset quality going forward. So, but this is the last quarter where there will be a NIMs contraction. So Bank of India, Bank of Baroda does look good on the public sector banking space. In the private sector banking space, I think the top two picks, Axis and ICICI Bank. These are the only two banks which looks pretty well placed. And Axis, why I say so, because I think all the, back problems seems to be over. So last quarter was when they had done the maximum technical writes-off and washing off the linen, the dirty linen, and now I think things are likely to fall into place. So valuation-wise, it's cheaper than ICICI Bank. So if somebody has to allocate a portfolio allocation, I would suggest 40% in Bank of India and around 15% in Bank of Baroda. So this takes your 55%, and 25% in Axis and balance in ICICI Bank. So that is the way to look forward to create a basket, and one can be invested for coming 1 year or so.
Okay, so that's on banks. You know, the other set of stocks are names where the rally has happened very, very swiftly, and we were talking about it on the trade setup as well. Kushbura, I want to come to you on a few names out here. And while we wait for the rates to stabilize, one of them is Sun TV, which zoomed in Wednesday's session. But beyond that, if you look at broadly the last 1 odd month, GMDC, Hindustan Copper, Adani Power, the stocks have had a stellar rally. Are any of these a candidate for either profit booking or building out fresh positions?
So GMDC, Neeraj, you'll recall, we've had a call, we've discussed multiple times, had a stellar run. Now I would suggest partial profit booking on this one, only because the weekly and the monthly structure on this is fantastic. So you don't want to let go of this, and there could be much higher targets, 700 and above also, which could come in a couple of quarters time. But it's a good idea to take some money off the table, partial profit booking. Volumes are shrinking, negative RSI divergence is setting up. So a couple of these technical factors suggesting that you might want to book partially. And if you want to re-enter close to the 575, 580 mark on account of profit booking, whenever it drops there, you could regain or re-enter with the positions that you've dropped. Hindustan Copper, similar, again solid run and now hitting overheated territory, so you might want to take some money off the table. Sun TV was never a big fan of. I think we discussed this on Wednesday also. When it had that big run. Take this opportunity to exit if at all you hold. There could be multiple supply pressures coming in because the stock's not done anything for a long time. So Sun TV is an exit on rise.
Okay, so Sun TV is an exit on rise. So that's going to be interesting to watch out for. Dharmesh, let me actually come to you as well. Overall, if you have to look at individual pockets that we're talking about, we've spoken about the banking system as well. The kind of growth that could be coming in over there on the back of the announcements from the RBI. But between the PSU space and the private banking space, where would your bets be?
So largely on the PSU banking space, and as I was just talking to Neeraj, it's like Bank of India, Bank of Baroda looks pretty attractive. I would be avoiding SBI for the simple reason because it's a very large bank, so the delta may not be enough or great enough there, and the prices have actually moved for SBI quite a bit. And these are underperformers. Look at Bank of India, it's available at 0.6 time price to book 1 year forward, and very likely by this year end, I think the ROE would be in excess of 1. So with a ROA of 1% or more, and you're still getting it at 0.6% price to book, with our rate growth of around 12 to 13% on the advances and stable asset quality, and getting ahead of names. And we had a management meet out there. I met the CFO of Bank of India, and they were very clear. The simple question I asked, that in your entire loan book, you don't have a personal loan or a vehicle loan growth is very minuscule, 2% and 3%. So why you are not doing that? And that's the focus area where they are focused on. And I think with this kind of delta which is coming through GST cut and all, if it actually materializes into real consumption, so that's a big catch point for them. And then the cost of income ratio and everything is going to be. So particularly on the public sector banking space, we are focused on. And in private, it's Axis Bank, which I think will give you a better return as compared to others in the same space.
A large amount of the pressure that you initially saw in the benchmark seems to be coming from one or two large counters. HDFC Bank seems to be one of them. Wonder if that rate will settle sooner rather than later. But speaking about banks, Axis Bank is something that we mentioned briefly. Let's talk about it in more detail, because Morgan Stanley has maintained an overweight rating and quite substantially increased its target price on the stock as well. To talk about this, Somit Sarkar is joining us. Somit, what are they saying? What is this new target indicating? And what is the thesis? Now, if you look at the Morgan Stanley note that has come on Axis Bank, they have maintained their overweight rating and have hiked the target price to 1,450, which suggests a return potential of over 23-25% from the current levels. Now, the brokerage is saying that the bank has taken significant additional steps over the last 1 year for this turnaround, and these steps that the bank has taken should see traction going forward as the macro environment or the macro climate improves. They're also expecting the bank to see a re-rating relative to the other large private banks, but this could happen in a gradual manner as per Morgan Stanley. They're expecting the trends in all the three important key growth drivers, that is net interest margin, growth and credit cost, will improve from the current levels and will turn much more positive compared to what we have seen currently. And they're saying that the extent of recovery for Axis Bank is clearly linked with the pace of macro recovery, which they're expecting to be good enough. When it comes to Axis Bank, they also believe that the benefits of the bank's strategic decisions that they have taken over the last 3 years will start to show result over the next couple of years, and that should be taken positively by the street. And however, given the fact that it will be a gradual recovery, till then they're expecting the bank's valuation gap to other private players would continue to remain. And they also believe that the key drivers for structural re-rating will be narrowing of retail deposit growth, differential with the private banks, and higher loan spread, better loan spreads versus other large banks is something that will be key positive and could lead to a structural re-rating for Axis Bank going forward. Okay. Yeah, important. Thanks so much, Somit, for getting us those details. Let's pull up Axis and see what the initial ticket is. Okay, so it is positive, up about 1% or so. By the way, I want to know whether Samman Capital is continuing to hold on to the gains that it had at the start. It was up 10%. It's lost ground, and this is exactly what we were talking about in the run-up to the open, where the tendency would be likely to book profits after the announcement has come through, and of course that price is 18% discount to yesterday's closing price, so that will have a bearing as well. A few other stocks that are moving, and by the way, we've settled at just about 1/3% lower after the pre-open session for the benchmark Nifty 50, but I'm just looking at the broader end of the spectrum to see whether there are any big movers. PTC India seems to be one of them. Hitachi Energy up about 2% as well. Schneider Electric, Niva Bupa Health all moving up about 2% each. Raymond also about 2% or so. So no real secular trend really playing out in the market as things stand right now. I wonder if it will shift when we start. But HDFC Bank proving to be a bit of a drag, down about 1.4%. Off the low that had been indicated earlier on in the pre-open session. Sun Pharma once again losing ground, 2.2% lower, and Sun TV, if I remember correctly, day before yesterday, it was one of the big gainers. Some profit taking seems to have started off here, so watch out for that as well. We've not spoken about consumer durables too much. I wonder if there are any opportunities, Kush, based on what you're seeing on the charts.
Not really. I think there has been this supply pressure that's come about after that shot in the arm, very similar to what happened in the auto, but that's been a more sustainable rally, not some of these names. So I would for now give them an avoid, close to your support zones, but not enough momentum in the Blue Stars and the Voltases of the world to suggest a buy right now.
Kush Bora, Axis Bank. We spoke about banks at length. Somit highlighted the Morgan Stanley note. Is there a buy there?
So, Neeraj, in terms of a catch-up trade, now Axis is a buy.
That's what people are saying, by the way. The brokerages are saying that there is a catch-up that Axis will do in terms of valuations to its peers.
And yeah, even in terms of the performance, just the price performance. If you look at it from June of 2024, where it made that high, amongst the four big ones, Axis, HDFC, Kotak, and ICICI, this is the only one that has delivered negative 13% returns, where the other three have given positive returns of various degrees. So there is this catch-up trade that could well come into effect. In fact, in the last 5 weeks, it's had a good run-up. It's close to some of the resistance zones, but I think 1175, 1180, it's there and thereabouts, and it's had a good run and good volume accumulation altogether. So I think once these levels are taken out, I think you could see a spurt towards 1225, 1250 levels also. So from that perspective, risk-reward ratio, catch-up trade, and that this shot in the arm that RBI has just given, I think this could be an interesting bet. Keep your stop losses near the 1125 support zone.
So by the way, that's interesting, guys. What Morgan is saying, that Axis and ICICI both have taken similar strategic decisions. the benefits for Axis will be visible over 2-3 years. So therefore, that catch-up will happen then. But for now, just the business momentum pickup will ensure near-term growth. It remains to be seen if it actually does happen or no. But from a trade perspective, very keen to see what Axis Bank does today.
Yeah, and we're not too far away from the earnings season as well. If you remember, of course, the first quarter earnings, ICICI Bank was the one that managed to defend its margins like nothing ever, right? And of course, we've highlighted over 4 quarters, they've managed to do, not 4 or 3 quarters, they managed to do it quite considerably, despite that 100 basis points cut by the Reserve Bank of India. I wonder what Axis will manage to do in the second quarter.
Should be very interesting to see. Okay, what else? Stocks that have gotten smashed. Now we talk about the winners, let's talk about the losers. Dharmesh Khan, I want to come to you on the EMS players and whether there is an opportunity to buy into a Dixon, into an Amber, into some of the others, which say for Wednesday's session have gotten smashed.
Yeah, definitely. I think the corrections will definitely step in because they are the overheated stock prices out there. But going forward, still, I mean, Dixon is a better play than Amber to my mind because of its multi-foray into the entire consumers appliances as well as the air conditioner space. So it's more to do with the EMS consumer appliances, and they also have their partnership with the overseas Chinese players. So there, I think it's the dips are likely to be important too. But again, this is a market where if you are buying overheated stories on a stock price and with this structural tailwind expected to follow of the GST cuts and everything, one has to be prepared for a long-term hold. So minimum 3 to 6 months kind of a holding if you are looking at, not on a day-to-day, price expectation, then these are good buys. And I do believe that, north of 25% kind of earnings compounding is there for Dixon for multi-years to come.
Dharmesh, a quick one when it comes to Sammaan Capital. Charts are looking weak for today's session, but from a fundamental perspective, would you be a buyer? What is your view of this entire deal?
Yeah, definitely. I mean, this is a very good news coming in for Sammaan Capital. So I understand that there's almost 37% of the legacy book is still there in the books. But this, fresh equity infusion into the company augurs well, though it's a lower price. So today profit taking will happen, but it does, put in place 140 rupees as a floor price for this capital. And even at, one time price to book, 200, 205 should be the upside. So I think eventually market is going to re-rate this company, and if the numbers flows in going forward for 1 or 2 quarters, then definitely it will catch up with its peer valuation, like the case of Axis Bank, and that is far higher. That is 2 to 2.5 times price to book. So it's a good, fundamental story turning out to be, and a good restructured play in place.
But on the charts, the indication, of course, was to book some profits, and that seems to be the thesis as well. Kush, anything else that you're spotting, particularly from the broader market, beyond what you've already suggested, that could well be the stock of the day?
A couple of them, in fact. TD Power Systems, a stock that we discussed on Wednesday, has done well, opening also on a good note. I think this could continue its momentum on the upside, 615, 625 levels and thereabouts. And Lumax Auto Tech, also a very smart recovery on Wednesday. Today also you're seeing a healthy upside. I think 1400, 1420 are good levels positionally on this one. And the stop loss, slightly deepish positional stop loss that we've discussed of about 1235, 1220 zones, that is still intact. So TD Power Systems and Lumax Auto Tech.
Okay, and some business updates on Adani Ports on your screen as well. Highest ever cargo volume in H1 FY26. So that's maybe some positive news that might help the stock as well. Standard disclosures. Adani Ports is owned by the Adani Group, as is NDTV, and you're watching NDTV Profit. But 7 seconds left, and we're likely to start off flattish. Asian markets are okay. We had a bit of a holiday. We're likely to start off flattish. Let's see what we do post that. Yep. So 0.13%, actually with a bit of, it's actually a flat start, right? Look at this. It's a very, very flat start. Let's get the IT index on the screen and see what's happening in that space. Okay, completely flat. Mid caps and small caps should come up on your screen as well. A third of a percent for the mid cap index, the small cap index, 0.25%. Not a bad start for the broader markets, must say. Maybe Alex will have more luck spotting names than I will. But let's get the heat map up on the screen and see whether any of the auto names, metal names, etc. are doing well. Tata Steel is doing well, 2.8% higher. Axis Bank on that brokerage note from Morgan Stanley is up 2% already. We'll ask Kush if he's buying this 2% higher. It was okay at 9. I don't know if 2% higher, it's still worth a buy from a trade. Asian Paints, Tata Motors, okay, Kush seems to be nodding. Yes, by the way, viewers. So if you are indeed wanting to buy an Asian Paints, Kush Bora saying from a trade perspective, it should still be a buy. Maybe tighten your stop losses. Yes, if you will. Kotak Bank is the other one. JSW Steel, Asian Paints, Ciplar are the others. But less green, more red. What is correcting? Max, Eicher, Eternal, Wipro, HDFC Life. HDFC Bank, interestingly, is also down in trade. So actually, save for Axis, the others are coming off today. So this brokerage impact, you can clearly see the brokerage impact, that this is the Morgan Stanley note impact, that Axis is in the green while the others in the red. And Alex has an update from Kush.
Yeah, I think it was a slip of the tongue for you. You said Asian Paints. I think you meant Axis Bank.
Axis, yes,
so
yes.
He was nodding for Axis Bank, not
Axis,
Asian.
okay, perfect.
You want to clarify
Thank you,
that.
Alex. No, thank you for clarifying.
Yeah, but so let's talk about the sectoral picture as well. And I wouldn't be surprised to see that there won't be too much of a big mover. And take a look at that. PSU Banks once again at the forefront, and I'd be curious to know from Kush. Already Dharmesh has given you a couple of names from the PSU banking pack that he likes about based on the fundamentals, but it is one of the big gainers today. Metal back in focus on the back of that big move by Tata Steel. And we'll look at the constituents of the Nifty Metal as well in just a bit to see whether some of the other names are also buzzing. At the bottom of the screen, don't pay too much attention to the media index. Sun TV is perhaps one of the factors that is weighing down on that index, but FMCG down about 0.5% or so. Consumption as a pack not doing particularly well at this point. Let's talk about the newsmakers though, and let's pull up something like a Wari Energies. This is a significant update from the company. 8,000 plus crore rupees to be spent to expand capacity. There's going to be electrolyzers that they or capacity that they build there. There's going to be inverter capacity, so the stock is clearly taking note of that, up about 3% or thereabouts. Adani Green Energy also adding capacity, significant update for them, but it's not too much. Remember, this stock has gained in the recent past, and so therefore to a certain extent must be some profit taking coming through, down about 0.7% or so. Significant business updates. V-Mart Retail for one was up and about. You have V-Mart Retail that's up about 7%, PC Jeweler significant 80 plus increase in turnover in the second quarter. You have Bansal Wire that is doing well as well, 40+% increase in volumes on a year-on-year basis in the second quarter, up about 1% or so, off the high point of the day though. Nuvama, it's an interesting update for this one. It's gotten approval from the Security and Exchange Board of India to set up a mutual fund, and soon you will have details on the schemes that it wants to start off with. And this is an interesting increase in business and outlook for this particular counter. KRBL, it's won a bid for immovable properties, 400 plus crore rupees, 1.5% or thereabouts for this particular counter. CSB Bank, among the banks that has posted its quarterly updates, it has in fact said that its advances have risen by as much as 29%. Interesting when you think about it in terms of the share of gold loans that this particular bank has in the overall book. Gold prices, as you know, have run up quite substantially. That allows the bank to lend more because the loan to value allows it to lend a larger amount. Samman Capital, we spoke about this at the start. We will likely continue to speak about it. Some profit taking in evidence. The price is significantly lower than the market price of the deal that we have already told you about. Beyond that, Unimec Aerospace was on Neeraj's list. It is expected to see some impact on account of the US tariffs, 3.5% today, and Hexaware Technologies as well. Natsoft complaint for patent infringement and contract breach. The stock is under a tad bit of pressure, down about 0.6%. So here are quite a few big movers on the back of newsmakers, but I think overall, if I'm not mistaken, and you'll tell me if that's true, the breadth seems to be favorable despite the kind of weak start for the benchmark. Broader market is looking okay.
Absolutely. I think the individual news flow in terms of the broader markets is pretty strong, and that's the reason why you're seeing this kind of a move. In fact, Sai Silks and CSB Bank, we should be looking at both these counters as well on the back of the business updates. Strong moves coming in on a Sai Silks. CSB around 2%. Sai Silks is another one which is pretty strong in trade. If we can just get that one on the screens. Apart from that, you have a PTC Industries that is in focus, and this is on the back of the multi-million-pound contract that they've got from Coolbrook. The stock is in focus. Atlanta, on Wednesday session, Atlanta did see a good run-up. I think that run-up has continued in today's session as well. If we can pull up Atlanta on the screens, and you'll see the kind of moves there. There you go, 20% upper circuit. Sun TV, we already mentioned, which is seeing profit booking after the run-up that we saw on Wednesday's session. 4% lower on that. Solar Industries is another one which is seeing good moves, and a NetWeb which is seeing good moves in trade. So these are a few of the other mediums. Sai Silks as well. If we can just probably get that stock, I'm not sure if we have it, but Sai Silks is also buzzing in trade on the back of that strong business update that has come in. Let me take this question with Kush. Lot of stocks which are seeing smart moves, from a CSB Bank to a PTC Industries to Atlanta. Atlanta, I think, second consecutive session where that stock is buzzing in trade. Anything that you would advise as a momentum play?
So, first up, I think you rightly spotted that, there is a lot of news flow and a lot of positive news flow at that, when it comes to the stock specific action. And that's why you're seeing a lot of stocks behave differently from what the index is suggesting. So, yes, definitely, even something that even I noticed, just at the start. To be very honest, Atlanta's not a stock that I've tracked very closely. But given the recent setup and the recent moves, it's very clear that, the stock's overrun. And if you had a position, it's not a bad idea to book partially. I am more keen on CSB Bank. This one's actually had a good run on the back of good volumes. Key resistance is taken out. Overall banking sector advantage also, as a tailwind. I would actually have a more constructive view for targets of 425 and higher on CSB Bank. There was a mild resistance around the 375 mark, so keep a stop loss at that. And the risk reward ratio after this breakout is fairly favorable. But if I can just take a quick minute or so, quick word on TD Power Systems, a call that we gave on Wednesday. As a top pick, we discussed just before markets opened. Stock flying 5.5%, 622nd target has been hit on this one. JSW Steel, incidentally, was also a call that we discussed on Wednesday. That one also seems to be doing well. And the reason I think I've mentioned, a call that we discussed multiple times on the channel is not because I'm great, it's so that you watch the channel more often and you get these calls and these updates more importantly. So yes, continue to hold TD Power Systems. Now the second target of 620 will act as your trailing stop loss. Ride this momentum. And
I think I would apologize for asking you on Atlanta, because it's a recent listing, so you will not really have too much data to analyze that one. In fact, coming to Dharmesh, metal counters are actually buzzing in trade today, from a Tata Steel to all of your other metal players, from a JSW Steel. But one interesting news spec that we've been talking about right now is the EU challenges that could be coming in for Indian steel exporters, because European Union is proposing doubling tariffs on steel imports to almost 50%. The proposal will boost the import tariff rate. Secondly, this is up from the existing temporary rate of 25%, and it will apply to imports once certain volume quota is reached. If this happens, there could be a negative impact. We don't know what's the exact breakup in terms of imports to the European Union from India. Anything that you're picking up on that front?
Not exactly. I mean, there's very minimal imports from India into the European Union. We are, more pressed to meet the domestic requirement, and Tata Steel already has a European presence. So there's no chances of steel getting imported out from here. So I think India has already worked out most of the FTA with European Union and UK as well. So this should be negotiated. This is more to do with, the pressure being created by US on European Union to have some kind of economic pressure on India so that they don't buy Russian oil. So I think this is part of that game. Not meaningful, impact out there to my mind and my understanding as of the data as of now. But we are, bullish on the metal space, and particularly the domestic-centric steel makers like JSW Steel, and Jindal Steel and Power. Those look pretty attractive to us. So, it's full of brave hearts. But, down days are to be bought into these two players. So, structurally, they are looking fairly good going into the second half of FY26. And one non-ferrous play like Hindalco looks pretty attractive to us from all its forays into aluminum, copper, and all put into place. So, these are the companies which we are bullish on, and we are buying and recommending buy on any declines.
Speaking of gold, why don't I extend that to the precious metal space as well? And Dharmesh, jewelry companies, we saw an update from PC Jeweler. I don't know if you track, but I'm guessing that the other companies will continue to report significant improvement in sales particularly because of the way that gold prices have gone. So naturally the value of what they sell will go up, even if volumes and footfalls are not necessarily what they would want them to be. Would you still be bullish on some of these names, and would you buy any right now in the jewelry space?
Alex, it's a very tricky space right now. The jewelry, I mean, the numbers reported are good, and to my mind, it's more to do with the carat being used in the making of a jewelry getting reduced. So earlier it was 18 or 21 or 22 carat kind of a gold jewelry. So that has come down to 14, and some are even reporting less than that, 12 and 13, with other better alloys getting mixed into the making of the jewelry. What it does, it improves your overall making charges, and there is where the margins are coming for all these players. So this is a festive season as well as a marriage season is going on. Somebody has to buy, say, 5 lakh of budget. So the person is going to buy that 5 lakh of a jewelry. So there's no change out there. But what is happening in the process is the gold which he or she is taking home is the volume wise, the quantity wise, grammage wise, it is less. But players are making a good margin out there because of this arbitrage which is there in the place. So numbers will keep on supporting the stock prices. So that is what we see going forward. And PN Gadgil is one jeweler where I think the valuation comfort is far higher than the others in the play. Though I understand it's a geographically concentrated kind of a play, but still we are bullish on that. Others we are avoiding at the moment, including Titan.
By the way, Waaree is up and about 3.5% on those plans to expand the battery energy storage systems to 20 gigawatt per hour. That stock is zooming in trade. What else is doing well? Well, maybe some of the banks might be, but Kush Bora, a thought on Waaree quickly, and a thought on Axis Bank, because I spoke about your penchant for buying into it.
No, so Waaree has a very strong upward trending support, upward sloping trending trend line support. It's rebounded from there. I would look into buying Waaree at the current level, but in small quantities, because this uptick that we've seen in the last 4 days is on the back of very low volumes. So that's where the confidence doesn't kick in. But yes, with the kind of move that it's made, it does make a case for a small allocation. 30 to 50 is your positional stop. And just to round off that conversation on Axis Bank, see 1170, 1180 is that zone, that resistance zone that we spoke of, right? And despite it having a good run on Wednesday and today also being 2% higher, I'd be happy if it closes above that 1180 mark. The resistance and the supply pressures will be taken off, and then the zoom towards 1225 and 1250 levels that we spoke of could well come about much sooner than expected. So yes, that is, despite the kind of moves that it's made and it's still trading higher, the confidence on Axis Bank.
By the way, Samman Capital now down 4.5%. It started off a little weak, but then that weakness has now increased. By the way, we have to talk about defense, and it's an interesting update coming through. Goldman Sachs report, which dives into the outlook for some of the most prominent players in the Indian defense space. A critical industry, of course, that continues to garner attention on account of its strategic importance and growth potential as India continues to indigenize. Anushi joining in to give you the breakdown of what they're saying in this report. Anushi, what stands out?
Alex, it's a couple of companies which are highlighted by Goldman Sachs, and they've initiated coverage on the same, and the standouts one here being Solar Industries as well as PTC Industries. In fact, for PTC Industries, they have a target of around a 54% of an upside, and this is the target price of 24,725 that we are looking at now. It's a tall target considering that they are valuing the company at around 50x or multiple or so by FY28. Now this is in contrast with the current multiple, which is around 327 times. Now what is interesting over here is the facility which would be on board by the end of FY26, that is for titanium castings, recastings that we are seeing in place, expected to compound companies' revenues and financials going forward. In fact, even the company came to us, they spoke about a 10 to 15 times of projection in the next 5 to 7 years as well. Solar Industries also, they've initiated a buy call saying that it has the best asset returns compared to its peers. Along with that, even for PTC Industries, they're saying that ROE is likely to improve by more than 30% by FY28. And for Astra Microwave also, they have initiated coverage, data patents, Azad Engineering being other stocks in focus. For Bharat Electronics also, the buy call remains at 455 with the target price. However, for HAL, they've initiated a neutral call with a target price of 5,255, saying that execution challenges regarding GE, what we've already seen, will offset the attractive valuation through which the company currently trades. However, for Bharat Dynamics, have initiated a sell call saying that the valuations continue to remain steep. So execution is something that we should be watching out for. But the standout companies in this particular note remains PTC Industries and Solar Industries.
Anushi, for that. In fact, Dharmesh, let me take this question with you on the defense pack. You know, we've got these bouts where you see that uptick that comes in. In fact, Solar Industries is one stock from this report which is seeing some good moves today as well. Would you be a buyer in terms of defense names, and what would your top pick be?
Yeah, definitely. I mean, defense is a structural long-term story, a multi-year, decadal kind of a story into a play. So no questions and no doubts about it. One has to just bear in mind these are very lumpy businesses. Execution does take time, and there are sometimes 6 to 7 months of delay in just getting the material approved to be used into a particular, say, a PCB or some other component or part of an aircraft or a tank or artillery. So this one has to deep dive into the segment to understand it. So there would be some place. So what we suggest is any company which is less than 1,000 crores of revenue right now, that should not be looked into very aggressively from investment or trading point of view, because the valuations are pretty high. HAL and BEL is our top picks from the broader market space. The price to book and the entire book to bill ratio is quite high and very lucrative for that. I don't think that would be execution challenges for HL. So they were supply constraint from GE, which is getting sorted now, and eventually it's 64% of the component is likely to be made in India. So this will pave the way for more execution efficiencies going forward. So those two plays from the direct defense play, and from the shipbuilder space, Mazagon Dock, that's our top pick out there. Again, it's a decadal kind of a growth story into play. So remain invested, do have some portfolio allocation into defense companies, and be invested in top tier names only.
Right. All right, Dharmesh. Thank you so much, Kush as well, for joining us on the show and giving us your views, the strategies that investors should be watching out for from here on. But shifting focus, EPAC Durables, the first quarter revenue declined 14%, and this was on the back of unseasonal rains which had dented AC sales. Post that, the rains that have continued and just don't plan to go away. I mean, that's the conversation that we are having. But, the GST cut, that probably has come in as a booster. Your components have surged around 556% for this company. Appliances are posting strong gains as well. Let's hear it from the management. Before that, we'll get Puneet to join us with the key insights. Puneet, over to you.
Well, thank you for that. So definitely unseasonal rains did impact the quarter 1 sales, but what the channel checks are indicating is a 25% growth essentially in room air conditioners that's been seen in India, and that's led by the northern market, and that's coming in from the offline retail space is what the channel check that we are mentioning. The northern Indian markets have actually done 100% like-for-like growth in this particular point of time, and the key number is that almost 5 to 6 weeks of inventory have actually been sold out in just 1 week post the GST rate cut. So that's a key positive for all players in the room air conditioner space, as well as the EMS companies that cater to these AC brands, EPAC Durable being one of them. So that's one of the key positive. Apart from that, the other key aspect is that 45% like-for-like growth has been seen in the e-commerce sales as well. So the two key conversations with EPAC Durable, and the two key questions is, one would be if that benefit has been visible for EPAC in this particular point of time to reduce inventory post quarter 1, and the second key question would be if the RFQs as well as the new models have started to shape up in this particular quarter, which generally is the case, and the current conversation they're having with all of these companies. So those will be the 2 to 3 key aspects to watch, but definitely a key positive for all AC brands as well as the EMS companies that cater to them.
Most certainly, Puneet. And Ajay Singhania, MD and CEO of EPAC Durable, joins in right now on the show. Ajay, thank you so much for taking the time out and being with us. By the way, just so that I don't make a mistake in the future, when I introduce you, should I call Ajay Singhania or should I say Ajay DD Singhania?
Either okay.
Either is fine. Okay, great. So, okay, thank you so much, Ajay, for joining in. Now, tell us, 3 days ago, we saw a note from a brokerage which said that in North India, where the rains have ceased, they have made up almost 100% of the RAC demand which was lost in those first 6-7 days, and West and South will now start seeing that as rains cede. Are you sensing that in your channel checks, in your conversation with companies and possible demands that companies would be laying with you?
Yeah. So good morning. First of all, yes, definitely the GST bonanza, I think it's clearly visible and the channel checks are in line with what the industry reports are. So pan India, it seems 35% kind of growth in September has definitely happened. And now that most of the channels have liquidated the overflow of the inventory, they've started demanding. So there is a lot of primary being done by the leading brands. And then those primary is again translating into RFQs for us. So yes, definitely we see a very positive sign. And the RFQs for the next season, which were earlier kind of subdued or precautionary considering the unseasonal rains this year, but now most of the brands have again renegotiated or have started looking at a better, bigger RFQ.
Sorry, so when you say next season, right, do you mean the current next 3 to 6 months, and do you expect demand to pick up for the next 3 to 6 months for primaries and thereby for companies like yours as well?
So it's a pull system. So when the inventory from the channel is pulled, they demand the inventory from the brands, and the brands in contrast demand from us. So it's all a pull system. So now that the channels have liquidated most of the inventory, they have started demanding. So this primary from the brand to the channel, and then brands who manufacture or who had inventories are also liquidating. So they have started at big fresher RFQs for the coming quarter. October as well, and then also because for us it's mostly Jan to June season, so the seasonal requirements also being relooked at or are going upside.
Okay, Ajay, good morning. Hiral this side. If you could also quantify this impact for us in terms of volumes. A lot of analysts are pointing out to around 8 to 10% additional volume growth for FY26. Is that which aligns with the EPAC durables, or do you think it'll be much, much better than that? And what number would you look at?
It will be too early to comment on numbers, but considering the first 6 months of rains and unseasonality, I think there was a lot of negativity in feelings, and then we were all looking at if we could even break even or be flat over the last year. But now this positive has definitely put a lot of has definitely charged us, and we are looking at definitely a growth in AC quantities. But on top of it, I think the small appliances and others also being Diwali products are seeing a much bigger sales and much bigger demands. So that's a more positive side for us.
And if you talk about market penetration as well, for room air conditioners, are you seeing that penetration increase in tier 2, tier 3 cities as well? And that's the kind of expansion that you're going to see from a sales perspective?
Definitely, this GST is going to now help us penetrate further into the tier 3, tier 4 cities. And on top of it, we are also expecting as an industry premiumization happening. Now that earlier, if like 3-star was the choice of the customer and 5-star being a slightly costlier product, there was a trade-off. Now that 10% reduction in price will definitely promote the premium product. So 5-star definitely is one category we are eyeing that will grow much faster.
One question. Okay, Ajay, one question I have in terms of liquidity and the working capital cycle. How does this actually improve that aspect? Because initially we were talking about 18% rate on GST, raw materials at 28%. So there was a mismatch happening on that front, which was impacting the working capital cycle. How does that improve for a company like yours? And two, do the cuts actually translate into any positive impact on the EBITDA margins rather than just a reduction on the MRP?
I think the most positive side of the GST reduction is the working capital for us. So the raw material earlier was at 18%, finished goods at 28%. So whatever in credit days we used to pass on to the customers, the investment in GST was from our side. So now that both are in line, the differential GST or our working capital will definitely reduce over the period, and this will lead to a better working C2C cycle and all that. So that is, I think, the best part of this GST reduction. And in terms of EBITDA margin improvement, definitely we believe that currently, because of a lean previous 2 months, most of the brands or we are trying to liquidate the inventory. But going forward, we'll also look at definitely rationalizing a lot of margins. So that could be the second step. But currently, I think the priority is to get over the inventory and then create liquidity in the system.
All right. Ajay, your July 2025, when you did the con call, your commentary was that the RAC industry will return to growth in FY26. The guidance was 10 to 15% for FY26 and long-term story of 20% CAGR. Then you didn't know about GST. Now that this has happened, you've seen the early signs. Are you changing this outlook for the current year and for FY26 as well, which you had earlier guided to 15%?
So definitely yes. Current year, earlier we were expecting a best case of a flattish kind of a year. I think now we are definitely looking at a growth of 10% for the industry, and then overall next year 15-20% growth earlier from. I mean, there's definitely an upward trend in everything we are planning currently. And I think that's the kind of energy this has brought to the industry.
Nice. Any chance of, how do I say, any chance of a revision in capex plans as well?
See, now a lot of it will depend on the outlook we get in next 3 months. I think this is a very critical period for us, wherein we are discussing with the brands day in and day out. So looking at the unseasonal rains and then this typical nature of the business, most of the brands, or a lot of brands which were earlier planning to expand their manufacturing capacity have decided to reconsider their decisions and focus probably more on balancing in-house manufacturing as well as outsourcing. So that kind of decisions will definitely impact our capex cycle as well. So in all, what I feel is that a lot of brands are reconsidering decision to invest on their own and probably balance their supply chain so that their dependence on EMSs remain equally important.
Okay. Coming to you in terms of the non-AC segments also that you have, are you seeing any benefits that are flowing in on the back of GST? Because you're talking about small domestic appliances, which has seen a growth of 16%. Your large domestic appliances has seen a growth of 29% in the previous quarter. What is the kind of booster dose that you're seeing on these two segments as well?
So most of the brands, I understand and I believe, have not only reduced, passed on the GST on the larger appliances like AC, but they have also kind of passed on certain benefits to the market in this whole Diwali bonanza thing, and that is also promoting a lot of smaller appliances. A similar kind of growth is also seen in the other appliances, be it the small domestic appliances, and then a lot of import substitution which has happened over the past few quarters has led to new energy in the market to promote the Make in India kind of product. So we see overall demand in all the smaller appliances as well.
Sorry, Ajay, I just wanted one clarity to the earlier question that I asked. I'm sorry for going back to that, but wasn't your earlier commentary that you will do about 10 to 15% for FY26? So if you're saying 10%, are you revising the growth downwards?
No, I mean industry, which earlier was looking at 10% growth, is now definitely looking at a 15 to 20% kind of revision.
For FY26?
Yeah. No, FY27.
FY27. No, for FY26?
26, we're maintaining a flattish to a best of 10% case. Now we'll say 10% of a minimum to a higher side of anything.
For the industry, and therefore for you, because I think on your con call, if I'm not wrong, you had said that the industry will return to growth in FY26. The guidance is about 10 to 15% for the year. Am I wrong?
I think FY26 is the current year. So we were always talking that this year best case was a flattish to a best percent, and then definitely returning back to 15 to 20% in the next year. Okay. So I think there's a return of almost 10% on the entire chain.
Got it. But net, effectively this first 9 days, 10 days have shown that there is a demand boost that is coming in, and it will probably spread across the country as well.
And on top of it, we are still to see the bonuses flowing into the employees and all that. So that will keep on pushing the demand even for the next 3 to 4 weeks, definitely.
Okay.
So this is the beginning. The Navratra was just the beginning. So we'll see a lot of cash coming in the hands of the consumers. So that will again keep pushing the demand for the current month as well.
Well noted. Okay. Ajay Singhania, thank you so much. Needed that update. We got it perfectly. We look forward to talking to you post your earnings season as well. Thank you so much, or your quarterly earnings as well. Thank you so much for joining in today and giving us that perspective. So that's, well, EPAC Durables. Didn't get a chance to talk about some of the other aspects surrounding EPAC, but this was a very interesting and a confident conversation from EPAC. That stock is up about 1.13%. I think you've seen a clutch of these cooling solution names do well in the recent past, Hiral, and not surprising. I mean, I haven't got on it, bought an AC, but I'm guessing a lot of other people might have.
Blue Star was also indicating from a negative growth, he's expecting a 25% growth. That is what could be on the card. So you can take that commentary with a,
no pinch of salt.
Exactly, no pinch of salt, I would say. And if the managements are so confident, I think it'll be a wait and watch mode for this quarter as well.
Okay. Well, let's see, and that's what we continue, because I think what's prompted the conversations on NDTV Profit India Market Open today is the kind of notes that came in last or earlier this week on the room air conditioner industry, and which is why the conversation with Vikas Gupta, MD of PG Electroplast, focuses a bit on that and a bit on other things as well. But I want to start off with where we left off with EPAC, right? And Vikas Gupta, thank you so much for joining in and giving us your time. Really appreciate this. But we're trying to assess the confidence that some of the agencies and brokerages have expressed in the demand scenario in North India, at least to start off with, which they believe will percolate to West and South as well. Are you sensing that in your conversations as well?
So good morning, Neeraj. As per our initial channel checks, we are seeing a robust demand for the air conditioners because of the GST rate cut and the festive season. So we are seeing a good demand for the air conditioners in the north area. South and west are still under pressure because of intermittent rains in the south and west regions. But we are hopeful that they will also recover. So we are quite optimistic on the back of this rate cut on the GST. The air conditioner industry will do well in the coming season.
Anything, Vikas, that you could actually tell us in terms of what is the estimated impact that you're seeing from a sales and demand perspective following the rate in GST rates? Because it's not only ACs, you're talking about large TVs, etc. as well.
So, yes, Hiral, basically, if you look at all the product categories, especially in the festive season, the televisions, they do traditionally very well. But on the back of this GST rate cut on the large screen size TVs, we are seeing a very strong migration from the smaller size TVs to the large size screen TVs. This premiumization trend was already going on, but with this GST rate cut, it has further strengthened, and we are seeing a good demand for the large screen TVs. Regarding air conditioners, definitely it will be difficult to put a number to it, but anything between 15 to 20% is the growth that the industry is saying as compared to the last year festive season. So there is a quite good demand for the air conditioners on this.
So Vikas, have you observed any immediate change that's happened from an order flow perspective, from a channel stocking perspective with your OEMs or brand clients after the GST cut that was announced?
So, Hiral, if you look at last 3-4 months, there were a lot of channel inventory among the dealer distributor community. So that is getting cleared. And that is a very positive sign that that channel inventory which was there, which was sitting with the dealer distributor, is getting cleared through the secondary sales. But we feel this will augur well for the coming season. So we will see a pre-production requirements coming from the brands, because we'll start stocking the material for the coming summer season. So we see that the order book and the forecast that we have from our clients, it's quite robust for the third quarter of this year and going forward for the fourth quarter of FY26 as well.
Because same question that I asked the earlier management as well. Is it too early to decide on capex plans based on 10 days of festive demand? Would you wait for some more evidence?
So, Neeraj, please understand, for us, as at PG Electroplast, we are very much convinced about the long-term demand trend for all the consumer durable products that we manufacture. We have not changed we have not made any major change in our capex plans based on the sluggish demand for the last summer season. We are building our capacities, we are building our capabilities, we are going ahead with our capex plans. So we are not holding it back, and we are hopeful that the market should grow well in the near term.
Okay. And now, in the con call, I believe, in August, in the month of August, Vikas, and correct me if I'm wrong here, but you had mentioned that margins could see a bit of a decline relative to last year because of working capital requirements, etc. Does the post-GST era change the working capital stress, for lack of a better word, stress, or whatever stress that might be on any company, including yours, and therefore does it help you shore up your EBITDA and margin expectations for FY26 itself?
So, Neeraj, definitely with the inventory getting cleared, the overall working capital will be much easier for us to manage. And we are hopeful that it should definitely play a positive role on the margin profile. But I'm not going to make any prediction or any forecast on that. We have to keep our fingers crossed. Let us see how the whole season goes. We still have another 6 months in the current financial year to look at it. Maybe we can maybe revise our forecast once we are very confirmed about that.
Got it. Okay. Anything, Vikas, to your mind that we are missing when we are trying to talk of what happens in this post-GST era? Because the conversations have largely been around demand picking up because of lower MRPs, inventories getting cleaned up, and the RFQs for the new season picking up. That's been the broad argument. And then a comment here or two on working capital, so on and so forth. Is there anything that we are missing in this whole thing? Can you tell us?
So I think more or less all the topics are covered in this, Neeraj. But we feel if you look at the long term, this has been our long-standing demand for the cut in the GST rates for the air conditioners. And as the summer, as the weather and the climate change is playing out, so air conditioning is becoming like a necessity and not a luxury. So we feel there is a long-term, I think the long-term potential for this air conditioning industry stands to gain from this rate cut. And I think we all are aligning our resources according to that.
Vikas, a two-part question, one related to GST and the other one with regards to the MOUs that you've signed. What's your current scenario when it comes to the inventory for you as well? And an update for your FY26 guidance, because that is something that you cut post your first quarter numbers. But now that GST benefits will come through, are we expected to see an upward revision on that front? And my second part is with the expansion that you're doing in South India with the land parcel that you've acquired in Andhra Pradesh and the MOUs that you've signed with the government of Maharashtra as well.
So I'll cover the first thing regarding the revenue forecast or the revenue guidance that we have given for the current FY26. Currently, we would like to stick to that. We will keep on updating all the stakeholders based on the visibility that we have. But based on the current visibility, we'll stick to the revenue guidance of 5,800 crores that we have given. Regarding your second question on our expansion in southern India, we have acquired a land parcel of 50 acres in Sri City, and we are putting up we have made an investment plan of almost 1,000 crores spread over a period of 5 years. Initially, we'll be setting up a capacity for manufacturing refrigerators there. That will be a capacity of almost around 1.2 million refrigerators that we'll be coming up with. And going forward, we will expand into other product categories like air conditioners and washing machines that we already manufacture at other locations. So by putting up our presence in southern India, we are trying to cater to the clients and all our customers on the pan-India basis to be able to provide the products to them at a timely manner, at a lower freight cost and a lower logistic cost. Regarding our MOU with the state of Maharashtra, that is also going to be, we are in process of acquiring a 70-acre land parcel in Maharashtra near our existing plant in Supa. In that also, we are looking at an investment of 1,000 crores spread over 5 years. That will be further expanding our capacities in air conditioners, in washing machines and other product categories.
Okay. Thank you so much for that, Vikas. Really helpful, but we will touch base again as soon as the Q2 numbers are out and see if there is an upgrade coming in from a guidance perspective. But moving on.
Sure.
Government has released the draft on online gaming rules, opens 30-day window for public feedback. Rishabh joins us with more details. Rishabh, what changes on the basis of the feedback that they are asking the public to give in that 30-day window now?
Right. These are the rules that will help operationalize the government's online gaming ban. So these are very, very essential in that sense. This is the first time that the government has put out these rules. There is a 30-day window that the public will get, that stakeholders will get to essentially put out their comments, tell the government that they are okay with certain rules, they are not okay with certain rules. That is the essence of lawmaking in that sense. What we're seeing is the fact that till October 31st, all these stakeholders have been invited to put out their comments. These rules are the same rules that criminalize online gaming, effectively all online money gaming. There are provisions to imprison those involved in offering those services for 3 years, fines of up to 1 crore rupees. So those are some of the rules that are a part of this. Remember, the Online Gaming Authority of India will also be set up as part of these rules. So these rules are very, very crucial. We will now wait for the final enactment of these rules post this 30-day feedback window that has been opened by the government.
Yeah, thanks a lot for that, Rishabh. Now, 4 minutes from 10 a.m. and the reason why 10 a.m. is important today is because two companies, Jinkushal Industries and TrueAlt Bioenergy, are set to list today. They had got very strong subscription, both of them, but that's nowadays not a ticket to a guaranteed strong listing. However, what are these companies about? What were the subscription details like? Let's get in Anushi with all of those details. Anushi, take your time, but tell us about both of these companies and the subscription levels.
Hi, morning, Neeraj. I'll start off with Jinkushal Industries first. As you mentioned, both of them have some strong subscription numbers. In fact, total subscription of this particular company is about 65 times, with just non-institutional buyers with about 146 times of a subscription is what we are looking at. Now, this company came out with a fresh issue of around 104 crores, with the total size being 116 crores. What the company essentially does, it's engaged in export of trading of new and used construction machines. The net proceeds to be utilized towards the working capital requirements of the business. Now, if you talk about the financials, 380 crore was the kind of growth that we've seen from 238 crore in FY24. This is, however, with the margin declining to 7% in comparison with 11%. Coming to the next one in focus is TrueAlt Bioenergy. This is with a total subscription of around 72 times. This came out with an IPO size of 839 crore, which included a fresh issue of 750 crore. Company engaged in production of biofuels with the primary focus on ethanol sector. Now, this is to be utilized towards setting up multi-fed stock operations is what we are looking at. So this is the overall picture that we are seeing in terms of both of these listings today.
Thank you, Anushi, so much for both the counters that will be listing today. In fact, we will be watching out for in terms of what the rates look like, but we'll quickly slip into a short break on the other side. Lots of news lined up. Please stay tuned.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार।
Welcome back to watching India Market Open, and those are visuals coming in on the listings of True Alt Bioenergy as well as Jinkushal. In fact, primary business verticals for Jinkushal have been export trading of customized new construction machines, but there you go, we'll just get the rates. A premium of 10% on True Alt Bioenergy is what you're looking at, and a 3.5% on Jinkushal. You know what's interesting over here is Jinkushal was a pretty small IPO, Neeraj, but the kind of subscription it got was pretty strong, not really translating in terms of the stock price or the listing price today. 3.5% is what you're looking at. True Alt Bioenergy looks pretty good. 9.5% up move on a True Alt Bioenergy on the listing. And with regards to True Alt as well, if you see the size, around 850 odd crores was the IPO size. And if you talk about the key metrics for this one, a good growth in terms of the top line is what they saw. It actually nearly more than doubled in the last 2 to 3 years perspective, and the subscription also was pretty okay. So that's with True Alt, but 8.5% on a True Alt Bioenergy. Jinkushal absolutely flat now, in spite of the strong subscription. But you know, and this is what clearly tells you, I think, with IPOs, the story is way before the listing now because of the grey market and the unlisted market that is developing and shaping up really well. The listing gains are not something which anyone is able to predict anymore.
Yeah, most certainly not. Most certainly not. And I think that sums up the thing about the listing. So let's move on from that piece as well. Good listing though for True Alt, thankfully, 9% for now. And for a 60 times subscribed company, 9% these days is not considered bad. The listings earlier this week had 2-3% gains. But the National Information Technology Employees Senate takes a bold stand, writes to Maharashtra's Chief Minister alleging layoffs at TCS. The union claims that nearly 2,500 employees, many with decades of service, are being coerced into resigning under pressure. Though TCS has denied these accusations, stating no such layoffs took place and emphasizes its commitment to employee welfare. Puneet Johnson with more details. Puneet.
Well, thank you for that. So there has been a couple of key updates coming in from NITES, and they've written, as you rightly said, to the CM. Now, this comes after there has been some reports speculating further layoffs at TCS. Now, it's important to note that they already laid off roughly about 12,000 people, or 2% of the workforce in July. This letter is dated as of July of 22nd, and post that as well. Now we're starting to see a lot more coming out of TCS's Pune campus as well. Now, roughly 2,500 employees have been essentially forced to resign, is what this letter says. Apart from that, the affected employees are also in the mid to senior level, where the experience is also quite high, between 10 to 20 years of service. And essentially the point is that this termination actually violates the Industrial Dispute Act of 1947, which is there's no notice or compensation provided. So this is largely what the letter is stating as well, but a lot more conversation with NITES as to what has been the key issue, and this will follow up into TCS's earnings as well, which is scheduled on October 9. So a lot more to talk about then with the company as well.
Thank you so much, Puneet, for setting this up for us. In fact, let's get in Harpreet Singh Saluja, President at NITES, to talk to us about what has actually happened, because you know, labor concerns or employment concerns with IT as a sector has been an issue that we've been talking about since quite some time. TCS post the first quarter numbers itself, the numbers that we've been hearing versus the numbers that the company has reported, also there are a couple of differences coming up there. And now you have TCS Pune laying off almost 2,500 employees. Harpreet, welcome to the show. Pleasure to speak to you. What is the latest that you're picking up? Because a couple of developments over here, and now the union has written to the CM as well.
Right. Thanks for inviting me to the show, first of all. The problem arose when TCS abruptly on one Sunday evening, sent an email to the employees stating that we will be removing 12,000 employees from our workforce. Then we approached the central and the union labor ministry, because the issue was widespread. It is not related to one particular state, and the labor laws in India are designed in a way that the state government is the appropriate authority, but TCS does not have one office in Maharashtra or in the country. It is spread across the nation. So we approached the union labor ministry regarding that. There was a meeting scheduled which TCS missed out, and they had sent just one informal letter to the Chief Labor Commissioner, and then they forwarded the matter to Maharashtra Labour Ministry, the Principal Secretary of the Maharashtra State, regarding this, that the government needs to step into this issue and take concrete steps and safeguard the interest of the employees. Now, that letter was sent on 18th of August. And since then, we had been following up and we have not received any kind of statement or intervention from the state government of Maharashtra. Hence, we were compelled to send a letter to the Chief Minister of Maharashtra, because the way in which this layoff has been taking place, it's highly unethical and unacceptable. First of all, from law perspective, I'd like to clear one thing, that the Industrial Dispute Act clearly defines layoff and retrenchment. So while in the news and everywhere we hear that TCS has laid off employees, it is not a layoff, because layoff, as per the Industrial Dispute Act, the definition is clearly mentioned in the act that layoff is a temporary thing and it is not a permanent thing. When you remove employees permanently, it becomes retrenchment. And for retrenchment to be ethical and legal according to law, you need to apprise the government, you need to take proper permission from the government, you need to approach the government with a prospectus and a letter and a request that due to so and so reason, you need to clearly define the reason why these employees are being retrenched or removed from the organization. So in this place, if the appropriate government is Maharashtra state government, our question is very clear. So, whether the company has approached the government with such kind of permission or not.
Okay,
and
Harpreet, the question over here is as to what is happening with the TCS, because I do see a letter that was written to TCS as well from, the chairman as well at United States Senate, and they've also indicated that there is a shift that's happening. It's not only the local, it's not only people who've been sacked in India, but people also who are locals in the US are being sacked. What is it that you're hearing from TCS is the key question that investors want to hear right now.
Right. See, the problem over here is, I will call it crony capitalism. You remove of old employees and you hire new one and at such a lower cost, and you just show the investors that we are creating or generating profit out of that. It is a clear case of cost reduction. In US also, the letter that I have read from the United States Senate, they have clearly questioned TCS that why you are removing our employees in the particular location and then you are going and applying for H-1B visa. You are the second highest in the US for the approval of visa applications, H-1B visa applications. So how come you are removing the employees at the same time you are declaring layoffs that we are worldwide, we are removing employees from the organization, and at the same time you are the highest, second highest company that has been applying for the visa. So that question comes to Indian prospect also. The situation is very clear that they are removing and targeting the mid-level management employees who have given certain amount of time to the company, who have spent a lot of time with the company, and suddenly and abruptly you take a decision in the month of July that no, we are not capable of handling such kind of workforce and we are going to remove the workforce in the name of restructuring. That is not restructuring. This is unethical and illegal layoffs and retrenchment.
Very strong statement to make, Harpreet, as well, that unethical and illegal way of layoffs. I think we'll rest this conversation here and take this forward during the day as well in terms of what happens from here on with regards to employees at TCS. Thank you so much for joining us on the show and sharing the views. Neeraj, any comments on this? Because one is that they've responded to the government, that's one aspect of it, but we have been talking about TCS layoffs since quite some time. The numbers what the company put out versus what the street is talking about, there is a mismatch there. Right now we're talking about layoffs not only in India, they've been laying off employees even in the US, the ones who are locals over there, and they are one of the largest appliers of H-1B visa. So a lot of things evolving around them, and it is one of the biggest losers on Nifty IT, which is, I think, the only stock which is at a 52-week low on the IT index.
Yeah, maybe we ask Vinay Jaising about this because he tracks this and other things very, very closely. He's CIO and Head Equity Advisory at ASK Private Wealth with us on the show. Vinay, always good talking to you. Thank you so much for taking the time out and being with us. Now, before we get to the macro, Vinay, and want to talk about the RBI policy takeaways, etc. as well, but since we're on the topic of IT companies and layoffs, etc., what borders on legality and ethicality is a separate conversation, but does this give in any fashion an indication of what could happen to the near-term fortunes of IT companies, especially the ones which are doing large layoffs?
Well, it clearly tells you that the IT sector is having a lot of uncertainty. If your growth expectations globally were being questioned because of global slowdown, now the cost element will also increase. The advantage of having Indian labor working in US are, you know what you're training, but B, the cost advantage. Now, if you start hiring more people globally, your EBITDA margins would contract because your cost would move up as well. So ineffectively, the IT sector is having two headwinds. One is on the top line because of a slowdown, and the second is on the bottom line because costs are moving up. So there is stress in our eyes for the IT sector for sure. Will this change? Will this go away? That's another big question. And somehow, if you were to talk about tariffs, which everybody does talk about, or what's happening for US tariffs in the future, in a way, the US president has put tariffs into the IT sector by questioning the H-1 visa. People can say in the longer term, you'll go back to more offshore-centric work, which will improve margins. But in the shorter term, I think on-site is here to increase and costs are going up. So that's not good news.
Got it. Okay, Vinay, what have you made of all the rumblings in the last 1 month since the time we spoke? Most noticeably, the policy statements that have come in from the Fed as well as RBI, which has paused, but it seemed like a policy tailor-made for banks.
You said it really well. So very quickly on Fed didn't have much of a choice, because if you've got a duration of about 71, 72 months for the debt of US, $6 trillion comes up for renewal every time. If you do not reduce the debt, the interest costs of debt, the incremental cost which Fed would pay for their debt, $6 trillion times, let's say, 4.5 plus 50 basis points markup, would be $300 billion, as against the $6 trillion 5 years ago was getting 0 to 0.5% interest plus a 50 basis point markup. So there's a $250 billion interest element which is increasing for the fiscal of Fed, and it is in their incentive to cut rates lower, leaving aside the consumption angle altogether. So Fed has done what it had to. There's not too much of choice they had. But coming down to the RBI front, RBI had done two amazing moves, right? They have cut interest rates already by 100 basis points this year. The impact of that has to be seen. They had suggested CRR cut of 100 basis points. So that 25 basis points of the CRR cut has happened, 75 basis points is left. So what they've done is they've kept a bullet with them. They've not changed the rate in the short term. The market is clearly viewing that as negative because if rates were cut, consumption could have become a little better. Having said that, if you think of what RBI is doing, first there's the GST relief come to the consumer. That would get inflation down further. So they're waiting for that act to trickle in for the consumption to see if really there is a consumption slowdown even post that. And if the answer is yes, then they could always cut rates. Also on the liquidity front, what RBI has done is it's managed liquidity pretty well for the banking system. We are not negative. We are 0 to 2 trillion rupees on the market. So liquidity is not a problem. The third big change, I think what RBI has done is, be it the risky assets, be it for infrastructure, be it for MSME, they're suggesting that, they could take that lower. So there is liquidity, for growth for the country. So I think the government and RBI is doing what it takes. We can be cute and say that inflation numbers could have been cut further. So RBI again has that one ammo with it. And the GDP numbers have raised. So as far as the economy is concerned, thumbs up to India and RBI for what they've done. And they still have bullets left in case things slow down, my friend.
Okay. Vinay, one question I have with you is the way India is pegged right now with global peers. Absolute underperformance is what we are seeing so far. However, everyone is now talking about the opportunity that lies when you talk about India with the reforms that are coming in. If that is the scenario, are you seeing anything which is unusual with the underperformance? And two, where are you seeing those opportunities? Because IT, we're talking about headwinds. BFSI, yes, if the FIs have to come back, these two are the largest sectors where you do see FIs coming back as well. So how would you advise investors to approach the markets at this juncture?
So I'm going to break this question up into two. First, I'm just going to take on the outperformance and underperformance of the sectors in 1 to 3 months and come to what themes we are advising investors to play. So having said that, you've started really well again. The markets globally are up 20 to 25%. In dollar terms, India is down 5 to 10%. So there's a 30% underperformance come in the last 12 months. And guess what? Indian GDP has grown. The earnings of India has grown 6, 7, 8%, not 12 to 15%. So there has been a time correction and even a PED rating for lots of places in the country as far as stocks are concerned. Moving on to stocks or sectors which have done well in the last 1 month. Clearly, the auto sector has done a lot better based on news of GST. So has banks and metals. Interestingly, FMCG sector, has moved to the underperformance zone in the last 3 months. IT and healthcare have been consistent as underperformers since the time the Trump dynamics have come into picture. So people are looking a lot more at geopolitical risk coming in. Going to your second question, which is what would we advise investors to do? I think this is the time for investors to look a lot more of what's happening globally. The currency is at 88, 88 versus the dollar. But if you would see it versus the European currency, it's further depreciated a lot more. So the currency has been questioned in India because of what Trump has done in terms of tariff. If we had to take just the net bill of what India gets from US and exports, that's $86 billion. $35 billion of that is exempted. But for the remaining $50 billion, as long as the tariffs are 25 to 50%, it's fair to assume at least of that $50 billion, you could have $1 to $2 billion every month slipping away from India as far as the current account deficit is concerned. So though it's curtailed now, there is some stress in the system because of, if I may use the word, as geopolitical risk. So in such an environment, we would put our eggs in three themes. The first theme is the capex cycle. The good news is the Indian government has, for the first 5 months of the fiscal year, spent around 40% more on a year-on-year basis. About 4.3 trillion of its 11 trillion has already been spent. So that's really good news. People were concerned that if GST comes in and some part of the pie is taken in, what's going to happen to capex? So, that's partly been addressed by the government. So that's some place where we are very, very positive on. The second is financials and consumption put together. This is the space which probably the FIs would look at even first, more before the capex space comes in. Out here in the financial space and the consumption space, I think two spaces in particular we would like would be, the hotels, maybe three, telecoms and investments in capital markets here, because the growth is being buoyed by the SIP inflows coming into the country. And finally, the manufacturing or the Make in India theme, which we think is going to take off in the country, is taking off and will keep on taking off in the country because of the modes India is making in certain spaces. That could be in electronics, semiconductors, CDMOs or pharmaceuticals. Or otherwise where, you're seeing a good production rush. So these are the three spaces I think, the FIIs or even domestic should look at, but more so with a bottom-up basis. You can't blindly buy, sector classes currently based on the amount of uncertainty the global data is putting out.
Got it. Okay. Vinay, interesting that you're choosing capex at the current point of time, and we spoke about it the last time as well. Maybe you briefly spoke about it, but there seems to be a clear bent towards consumption, though the one thing that looked very interesting in the RBI policy to me was the RBI allowing banks to finance acquisitions, which technically isn't capex, but in some sense is more a corporate expenditure. Why capex at the current point of time?
See, our perspective, home bias is more important than global bias. That's step one. One of the key problems, and you spoke about TCS and layoffs. One of the key problems India has is job creation. So how does the government solve the job creation part? I think the only way is spending more in capex. The private capex is not taking off as much as you and I would want. Utilization rates are still, 78 to 80%. So you probably got a year more before really private capex takes off in a big way. So technically, the government is hitting both shots, right? One is consumption. In the consumption part, we're actually more bullish on the capex part and the consumption part. In the capex part, you can directly see, what's happening on infrastructure, what's happening to cement companies in terms of demand, what's happening to the ports, how certain pipeline networks are coming up, what's happening to the piping company as well as the tube companies. So the demand coming in from, I would say just construction or infrastructure being built as the government has spent this 4.3 trillion, can be seen. And, hopefully when the results come out, you'll hear a lot of news out there. So that's something which is a home bias, domestic consumption growth for the capex industry. But on the other side, what we should also remember is GST got applicable from September 22nd. And from August 15 to September 22nd, there was about 40 days and a 90-day tenure for a quarter. There was confusion, so there was a slowdown. So the quarter which comes up may surprise you for the negative for the consumption space. Because technically, even if you're up 20 to 25% in the last 10 days since GST has been applicable, you're not going to be able to cover up what you lost in the quarter. You've got numbers as much as 300 to 400 basis points, for the FMCG companies, which could have a revenue question mark. You could have, people are expecting the auto sector to do exceptionally well for data which has come out in the last month. But if I would keep the two-wheelers aside for a bit, and I look at the domestic consumption for the four-wheelers, even that number technically on a quarterly basis is negative. You're waiting for the festive season for them to happen. And post that, will you get the impact? Now, if GST could get profits of the auto companies up by 20% and the stocks are up by 20%, that's understandable. But what if, the profits are up only 2% on a year-on-year basis and these companies are up 20%? So for me, it is more discretionary spend consumption like hotels or telecoms than even consumption in that platform. So that is why capex is a lot more easier as a theme for us to play.
Vinay, my last question. FIs have been sellers. We just have a minute or two for the response. What will get them back in terms of investments in the country? And two, are you seeing any arrest in terms of FI selling?
So there, very interesting question again, right? FIs have sold immensely. They're at a 12-year low at 16% of their ownership. What can get them back is first the currency. The currency has to stabilize. The DXY has fallen versus the dollar. Every other currency has done better, but not the rupee. So that has to stabilize. So that's step one. Step two, the amount of IPOs which are coming in are taking in 200 to 220 billion of inflows going into them. So technically, even that is a question mark of what comes into the equity markets. So if you add these two, what FIs want to see is robust growth. They're probably waiting for the quarter for the structural reforms to happen and see the dollar stabilize. Once these two get done, I think, FIs with such a low ownership, I think in the next 12 months, it would fair to be bet that they would come in a lot more. But timing would be when these two elements are taken care of. First is the rupee stabilizing, and second is you see some more earnings ticker come in once the reforms have taken care of it.
Stabilization in terms of rupee and an earnings upgrade, that should be something that could be triggers for the FIs to come in. But thank you, Vinay, so much for joining us on the show. Always a pleasure to speak to you at NDTV Profit. A packed show that we had, Neeraj. A couple of comments that did come in from a consumption side. We've spoken about the financial space as well, because that is where you need that bump up to happen. IT, there is no one who's positive on right now.
Yeah, and gives with reason, Hiral. As you said, there's a reason why maybe TCS is trading at the 52-week lows and not everybody else. I mean, I don't think any of the IT stocks are the 52-week highs. So quite tells your story. But with that, it's a wrap on this leg of India Market Open from the team that has put this show together. Thank you so much for joining in, but stay tuned because Ask Profit is up next.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. and it was among them that they spoke. यार मेरे सोसाइटी में माइग्रेट लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने.
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and happy Friday to you. My name is Alex Matthew. With me is Anushi Avakaria. Anushi, good morning to you.
Good morning, Alex, again.
Good morning again. And the equity markets this Friday seeing a little bit of profit taking, at least for the larger cap stocks. But we're off the low point of the day. Gains of, or rather, cuts of about 0.1%. What I meant to say is that the broader markets are seeing gains, and as a result of which the market breadth is actually not terrible this Friday. Gains of about 0.33% or so for the mid cap index, similar gains for the small cap index. And pull up the market breadth while we're at it. There is a bit of a gap. It has closed a little bit, but it's still a sizable gap between the gainers and losers today. What are the sectors that are doing well? Let's pull that up and see. And you will likely see once again that the public sector banks are up and about. You have the metal index is doing particularly well, and really some of the measures that came through from the Reserve Bank of India beyond the monetary policy. A lot of people were saying that it's a no impact monetary policy, but really a lot of the measures that were announced, particularly in the corporate banking side, are what is causing the PSU banks and banks in general to be in focus over the course of Wednesday and today. Gains of about 1.4% for the defense index as well. Metal index is up and about close to 2%. And Tata Steel is really the one stock that is in focus on account of that. And several factors playing through for the metal pack as a whole, but gains of 4% for Tata Steel. Quite a few business updates also coming through and a few smaller counters reacting to them.
Yeah, we had the likes of Bansal Wire, which was in focus. Along with that, even PC Jewelers, it was a strong set of an update that we saw from there as well. A couple of big names. You also had Coal India, which reported their numbers. So, those are a couple of, PC Jewelers, in fact, up over 4% is what we are seeing. V2 Retail, there were a couple of retail names also that we are seeing. What is also interesting
V-Mart.
is,
V-Mart and V2 both.
V-Mart and V2 both were in focus. Apart from that, what was interesting was also Unimec Aerospace. Now, they had said that the Q2 would continue to see pressure and they may not achieve their FY26 guidance. We did see that impact on the stock price
and
as well.
that's because of US tariffs, right?
Yes, that is because of tariffs, which has, resulted in the exports being on the muted side. So, 5% of a downtick is what we are seeing for Unimec Aerospace as well.
And Samman Capital, the deal that was struck was at a significant discount to the closing price on Wednesday, and of course the stock has run up quite substantially in the recent past, seeing a bit of a cut today, 4% or so. Let's get our experts on board. We've got Sameer Dalal of Natvarlal and Sons Stockbrokers, who joins us as usual on Friday, and Rajesh Palvia, who's Senior Vice President, Technical and Derivatives Research at Axis Securities. Gentlemen, thanks so much as always for taking the time. Let's kick things off. And by the way, I didn't mention this at the start because a lot of you already know this, but I will repeat it. The ways that you can get in touch with us, you can send us a message on the number at the top of the screen, or you can call us, and we'd love to hear your voice. You can call us on the landline number at the bottom of the screen. Before we kickstart things though, there's a new listing, TrueAlt Bioenergy. You heard them on the channel before the issue kicked off. It has listed at a premium. It's off the high point of the day. Let's listen into what the management had to say at the listing ceremony.
Now that whole India will participate in your growth story, what are the targets that you have set for yourself? Because if you see the revenue has grown almost 2.5x over the last 2 years. Is this growth sustainable?
At the outset, thank you so much for having us, ma'am. So getting listed on the very next day of Vijay Dashmi or Dashera is actually, we couldn't have thought for a better day to get ourselves listed and present our company for more partners in the capital markets to join. Now onto the company, I think this gives us a very big opportunity. The biofuel space is a story for energy independence for India. It's a story of farmer empowerment. It's a story of great national importance. So we are very happy that we could bring one of the first of its kind to the capital markets. Now onto the financials of the company or the fundamentals. We've been growing at almost about 50-55% growth rate year on year since FY 2023. So right from revenue numbers of 730 crores to 1280 crores in FY 24 to almost 1980 crores in FY 25. I wouldn't say it is very difficult for us to sustain it because going forward the capacity is already there, and we've got further new capex in the CBG space and aviation fuel coming up in the next few years. I would not give this as a guidance, but I would say the potential to have greater to sustain this level of growth rate is definitely there.
Understood. And if any outlook, if you could give us on EBITDA margin as well for next 2 years.
I'm sorry, I probably wouldn't be able to give that out just yet, but I would give you this, that 3 out of our 5 ethanol plants are becoming multi-feeders. So by having multi-feed plants, we have got potential to consume 6 to 7 kinds of raw material from the range of almost, let's say, sugarcane juice, sugarcane syrup, B-heavy molasses, C-heavy molasses, rice, maize, damaged fruit grains. So we've got more than 7 feedstocks that we can consume, and we've got a different price for each of the ethanol derived based on the feedstock. So our objective would be to try and source the cheapest available raw material and ensure we sell at or map the product to the highest selling product. So I would say the EBITDA rate should be maintained, or we should have this focus to keep increasing the EBITDA in the days to come.
Understood. Also, Mr. Nirani, now coming to the current ethanol production, what's the capacity there and how much this is already contracted with the OMCs?
So as on date, ma'am, we've got 2,000 kiloliters of installed capacity across 5 locations. So that gives me a potential to manufacture close to 6 crore liters per month, or let's say on a 300-day basis, up to 60 crore liters of ethanol. And lucky for us that all these capacities have been installed under the EBP program, and entire of the quantity is registered with the OMCs for supply for the blending program.
Also, Mr. Nirani, what challenges do you face when it comes to feedstock availability, especially during weak sugarcane season?
So in terms of feedstock, what we have seen so far in the last 2 or 3 years with the government's decision-making process is India has about 50 to 55% of its population dependent on agriculture. And India has one of the highest MSPs for the agri inputs, or rather the agri products. We are a rice surplus country, we are a maize surplus country, and definitely we are one of the largest sugar cane producers in the world. So having 3 products which are much above the consumption rate, it is a natural decision for government to divert these excess products into meaningful opportunities, like in our case, biofuels. So we are definitely sure that we've got multiple opportunities for feedstock. So we wouldn't call feedstock as a concern because to make this product, I've got 6 or 7 different potentials as raw material that we just made a list of. So I would say sourcing or / availability of feedstock would be the least of the worry for us in the EBP program.
Right, so the management of the newly listed TrueAlt speaking to NDTV Profit, and you saw them on the channel even before the issue opened for subscription. Quite an interesting play. We'll see if you've got any questions. I'd encourage you to write in and ask them. Kiran is calling us from Hyderabad to kick things off this morning. Kiran, thanks so much for calling us, and how can we help you today? Kiran, hi, can you hear me? Okay, Kiran can't hear me apparently, so we'll go back to him when he can. We've got the first question that we'll take therefore from Aniket. He was writing in from Karnataka. He's asking about Ramakrishna Forgings, which he's bought at a price of 653. He's got 20 shares. He's looking at the next 5 to 6 years. So it's a pretty long-term outlook that he's looking for. Samir, on the fundamentals, what's the view?
Yeah, so it's a good counter, but again, we find there is a little bit of an issue when it comes to exports to the US, which they do cater to some amount. So if that problematic issue resolves itself, I think Ramakrishna Forging could probably see a bounce back. It's been sold off quite a bit. Valuations, if you look at it on a historical basis, are not too expensive. It's just a question of whether we can resolve some of the issues that we have, the trade deal we have with the US. If that gets taken care of and the exports open up again, I think Ramakrishna Forging is another counter that can do well and probably can move up by 10 to 15% in the short term. Over the longer term, they do have operational benefits that could come through with increased capacity utilization. So I think one could probably stay invested in this long term.
So stay invested is the view for RK Forgings. Now next is an interesting query that we are seeing. This is Shrikant writing to us from Bangalore. He has about 3 lakhs to invest and he wants to invest it for a period of 3 to 5 years in mind. He's currently identified a couple of names in which he wants to invest. This includes the likes of ABB, Siemens, Ultratech, Sudarshan Chemicals and such. Samir, want to come to you in this one, with this kind of a horizon in mind plus a long-term approach is what, Shrikant is looking for. Of these list, what is the kind of, options that he should go ahead with?
Yeah, so unfortunately, I didn't catch all the names on the list of yours.
I'll just repeat it for you. ABB, Siemens, Ultratech, Sudarshan Chemicals.
Okay, so from these 4, Siemens is one of them that we remain positive on. Ultratech, as much as people remain bullish on, we don't have that much of a positive view given where the valuations lie. Yes, they are the largest player, and yes, they're turning around India Cement, so some operational benefits will come from that, profitability will rise. But for cement, we think the valuations in Ultratech are quite rich. If he wants to make an investment in cement, I think maybe Ambuja at this point might be a slightly better bet. I think there you could probably make more upside. The stock has also corrected quite a bit. So I think that is the play I would rather make. Chemical space, Sudarshan, unfortunately, we don't cover, but we are very positive on the entire chemical space longer term. I would look at the companies that we track. The one that we like the most in that space, there are 2 of them actually. One is Clean Sciences and the other is Balaji Amines. Now, Balaji Amines is something I would specifically want to point out and say you can probably take a long-term view on, because they're getting into making certain chemicals that is going to go into the lithium-ion battery manufacturing. They're going to be the only player making it in India. And what's going to happen is they're going to replace some of the their import demand. So once they get that market and they're able to do that, I think the profitability for Balaji will rise quite significantly. Again, please go ahead and do your study. And the 4th company you said was which one? ABB, was it?
Yeah, it was ABB.
So, well, if you want to take a call, you've got a call in Siemens itself, then you might want to try something in the green energy space. If you ask me, ABB is also good, but if you're taking Siemens, then you can avoid ABB for the time being. You can look at something more like Suzlon or your Sterling and Wilson Solar, or you can even look at something in the banking space, because banking is something you don't have an exposure, and we are very positive on that. Axis Bank or IndusInd Bank both look good for a turnaround, and valuation re-rating plus growth will remain strong for both of these banks.
All right. Short-term question then. Rajesh, coming your way. Anantraj is the name of the counter, and KV Rao is writing in from Hyderabad asking about this. He's bought at levels of 530 rupees and he's wondering whether to hold or exit at this point. He's making quite the gains. Should he book it right now?
I think he should hold the position as stock managed to give breakout of almost 6-7 month consolidation range on the monthly chart. And looking at the near term, short term structure also, stock has attracted buying interest in the near term perspective also. I think he may trail now stop loss towards 685. And I think if it's not breaks below 685, possible upside towards 780 to 820 we may see in the short-term perspective. So I think hold the position with trailing stop loss of 685.
That's the view for Anantraj. Now next we have a caller joining us. So this is Kiran calling to us from Hyderabad. Hi Kiran, how can we help you today?
Good morning, ma'am.
Good morning.
Happy Dashara for all the people in the panel, ma'am.
Happy Dashera to you as well.
Yes, ma'am. So my query is regarding Macrotech developers and VA Tech Wabag, ma'am.
Yeah, please go ahead.
I would like to invest rupees 3 lakhs, ma'am, in both the counters. So I'd like to get a view for short term and long term as well, for 3 months and more than 1 year perspective. So what are the right levels to enter into these stocks, and what sort of targets could I expect in short term and long term as well, ma'am?
Kiran, just a follow up. What was the timeline in which you invested in both of these counters?
So I would like to know both 3 months time frame and more than 1 year time frame, ma'am.
Okay. So with that, let me go across to Rajesh first. Rajesh, your view with VA Tech, Wabag as well as Macrotech, short-term views for both?
So if I analyze Macrotech developer, Lodha is in downtrend, and on the weekly chart, if you look at the structure, stock is moving in down sloping channel. Though stock is now approaching towards its multiple support area, which is placed at around 1060, 1070 zone. So this may act as a support for this corrective move. So I think he should monitor the price action. 1060, 1050 is the zone. If stock able to absorb all the supply pressure around those level, and if it's not break below 1060 level, so some pullback action we could see from those level. On the higher side, 1200, 1220 is the key hurdle for the stock. If at all stock crosses those level, then on the higher side, 1300 would be the target for the counter. So at this juncture, 1200 to 1050 is the range. If you want to buy, wait for further dip towards 1080, 1050 zone, where you can deploy some long trade with small stop losses. Wabag is again in corrective mode, but again on the long-term structure, stock is holding the strength. In this near-term correction, 1350, 1360 is the immediate support area. So that level needs to watch closely. If it's able to hold these levels, some pullback action we could see from those level. On the higher side, the major supply zone is placed at around 1540, 1540. So that level needs to keep in mind. If it's able to cross those levels, then I think 1650, 1700 would be the next target.
Okay, I would request our viewers to refrain from posting multiple stocks. We won't really have the time to take more of the questions, and you might just lose out as a result of that. We'll take the next question on JSW Cement. Mohit from Ludhiana is asking about this. He's bought at levels of 138. The stock price is currently exactly here. And I know that, Samir, you've already spoken about cement to the extent that you've given your view on Ultratech Cement. Any specific view on this one?
So this is a new listing, and look, they're still at the early days. They're still growing entity, capacities yet coming up. They do have a lot of aspirations, and JSW Group has not been averse to acquisition, so I'm sure they will go ahead and do something and scale up the size. And once they do that, the operating leverage for them too will start playing out. But again, if I had to take a pick in the entire cement space at this point of time, my top pick in the space remains Ambuja Cement. So since you're asking specifically about a JSW Cement, I think it's if you have a very, very long-term view, maybe 3 years or 5 years, I'm sure you'll be able to make return because management credibility is very strong. We know they'll be able to grow the business. Operating leverages as they play out will benefit, and the stocks will give you 10 to 15% CAGR returns. But if I had to take a call, I would rather take it on an Ambuja Cement. So specifically, if you want to, I mean, since he's bought JSW Cement, he can stay invested. But in the cement industry, my top pick at the moment is Ambuja, and I would suggest to make, if he can, make that switch into Ambuja.
Okay, fair point. You want to very quickly tell us why you're saying that?
So Ambuja at the end of the day is scaling up quite nicely. And again, your group, Adani Group, is again very, very aggressive, and we believe they will keep increasing capacities, which will lead to increased profitability. Yes, Ambuja looks a little bit expensive when you look at valuations, but it's still profit making at the moment compared to a JSW Cement, right? And we believe the profits will only increase as the demand for cement keeps increasing, given the construction activity that is going to happen within the country, both on real estate and on the infra side. So as demand grows, what will happen is, as the utilizations increase over a period of time, the profit growth number as a percentage will be far higher than the top line growth number. And we feel Ambuja, which is working at about 70% utilization, if it moves to 78, 80%, that will lead to a great jump in profitability. So for me, that's one of the key reasons. Plus, we've seen the stock has corrected from the top. If I'm not mistaken, about a year and a half ago, the stock was probably close to 680 or something. And so you're seeing it much lower than the lifetime highs. So we feel that has given us some valuation comfort, and the stock can probably run up again.
Okay. Yeah, it was above 600 for sure. Point well made. By the way, the standard disclaimer, Ambuja Cement, as Samir has already pointed out, part of the Adani Group, and so is NDTV Profit through the NDTV Group. We've got a next question. Aether Energy is the name of the counter we're talking about next. Oh, actually, before we do, let's go across to our caller. We've got Udit calling us from Mumbai. Udit, hi. Thanks so much for calling us. How can we help you today?
Good morning, Alex. I heard you like a good student. I'm just asking a question of a single stocks now here.
Thank you.
Good morning, ma'am. My stock is TCS, Alex, and the other experts. I had bought 50 shares of TCS at 3666 levels. For wrong reasons, this stock is going down the hill, and maybe there must be some fundamental reasons for that. I'm not worried about it. I just need to know if I can average it out at the present level and can hold it for 1 year, 2 years, or I want to leave a will for my children also. That doesn't matter.
Understood. So therefore, you're looking for the long-term prospects of this particular counter. I will go to Samir on this one. Samir, really the argument is on valuations, because I think a lot of people have suggested that the frenetic growth phase for IT companies is far behind us. These are companies with significant amount of cash and growing in single digits on an ongoing basis. So the thought is there. It's good that he wants to leave a legacy for his children. But is TCS that counter that will be that legacy stock?
So I can safely say that valuations have rightfully corrected because the fact that we are growing at single digits to trade at 25, 30 times was a bit of a stretch. We've now come off that valuation stretched multiple. I'm not saying that we are done coming off that, but we are closer to where maybe the fair valuation lies. Now, coming to the growth prospect, which has been the big issue for TCS, right? So, all IT companies in India to some extent have a little bit missed the boat of the AI revolution. We are a little late in that. You see the kind of AI investments that are happening in overseas. India has not been able to keep up, and especially the large IT companies that have stuck to their core. Now, I'm not saying the core will not work. Obviously, it will continue to have needs. But the growth opportunity will start reducing, and that is a problem. They have a lot of orders on their hand, and I'm sure they'll execute it. And what you rightfully said, Alex, cash flows are fantastic for these companies. So the question to answer for him, he's saying that, can I leave this as a legacy? I think it's a stock you can leave as a legacy. Of course, you have to keep monitoring it. You can't just buy and forget at something. Because you got to see, IT is something that the technology side, things change very, very fast. So you have to keep monitoring it and make sure they're staying relevant. But as long as they are, I'm sure you will get some returns over a 5-year, 7-year horizon, which will be significant, meaning it'll be about 10% CAGR return. So, you're making a decent return. Now, the question is, will it be like it has been in the past? Probably not. There will be other counters, other sectors that will probably give you higher returns, but TCS is a safe stock. They have cash flows, buybacks will come and it will support. So you can go out and average it. And if you want to hold it for a long term, you can hold on to it for the long term.
Got it. Okay. Hopefully that answers your question, Udit. All right. It's time now for the rapid fire round. And by the way, this week we've started doing it twice in the show at the end of every half hour. Let's start with the first question. Ather Energy is the name of the counter, and long-term view is being sought by Giri. Should he hold on if he's bought at levels of 370? Samir, what's the view?
So hold on because it's at 370, but if someone's looking to buy, wait for a correction closer to 500.
L&T Finance is another stock in focus, bought about 10,000 shares at an average price of 96. Wants to understand a 5-year outlook. Samir, your view?
So the 5-year outlook is good, but valuations have moved up in the short term quite a lot. You're not going to get any more valuation re-rating. Now you're playing the growth story. So you can stay invested, but expect slightly lower returns than you've got over the last couple of years.
Rajesh, Orient Pro Solutions is the name of the counter. 1250 is the buy price. Sangeeta wants to know whether to hold for the long term. What's the view?
So I think for long term, yes, she may hold down the position, as if you look at the near term, short term, so stock has already corrected and now available at support level. So I think any pullback towards 1160 may attract again fresh buying action. So keep a stop loss of 1100, above 1160. She may add more positions.
Okay, 50 shares of Adani Green is what Narishma holds, and this is at a price of 984. Samir wants to understand the long-term picture.
Sorry, no view on this one at the moment, but we remain positive on the entire green energy space.
Okay, any view on the charts though, Adani Green?
So stock is in process of bottoming out. Weekly chart has given a signal of bottoming out. So I think if stock continues to hold above 1020, we may see more buying action. Above 1100, there would be a breakout, and then possible really towards 1200 to 1300 we may see on the short term perspective.
Okay, Naveen wants to know about Nalco for the short term. I believe he's bought levels of 220. Rajesh, what's the view?
Hold the position, as stock is now managing to cross its previous swing high. So looking at the breakout, I think 210 needs to keep as a stop loss. On the higher side, 230, 240 would be the next target.
Okay. Rajesh, on that note, thanks so much for joining us. I understand you have to leave us. Happy Friday to you. Samir, we'll be back on the other side to take more questions, so do stay with us. Viewers, do stay tuned.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The gate of the community was becoming a friction point or choke point while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone will say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
रहमान
सोनू निगम के लिए जोरदार तालियां.
presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
Hi, welcome back. You're watching Ask Profit. You can connect to us via, WhatsApp or, even the numbers flashing on this screen. So do call us and, drop by your stock queries. But with that, let me go to our next caller. Manav from Gurugram is calling us. Hi, Manav. How can we help you today?
Hi, good morning, everyone. So today I have a query on Oil India Limited. I'm holding on to like 40 odd shares at an average price of 680, somewhere around 680. Currently, I'm facing loss in this one. So I want to know what is the long-term prospect on this. I have no issues in holding on to for a year or two more. But will it be a wise decision to holding on to it, or should I wait for a time to exit from this counter?
Okay, let me go to Samir for this one. Samir, your view on Oil India. We've seen a steep correction from those levels of 675 or odd. So just want to understand your outlook for a 1 to 2 year perspective.
So I'm not very positive on the oil sector, ONGC or Oil India, which are actually companies that trying to find crude and pulling it out from the ground. I think with global uncertainty, prices are not going to see a major uptick in oil, which means that profitable growth is not going to happen unless they make some large oil discovery. I've not been reading anything around those lines. For me, bounce would be a time to probably book out. There are far better, more long-term secular growth companies. I think those are ones that one should invest in, and All India for me is a total avoid.
The latest updates, of course, reinforce what you've just said, Samir, where reports are suggesting that the OPEC Plus will meet this weekend and will increase production once again. 500,000 barrels is the expectation, and over the course of the last 10 days or so, or a week or so, you've seen Brent crude prices drop quite precipitously by as much as 10%. $64 to the barrel is what Brent is currently at. Bear that in mind. Oil prices have been soft by and large over the course of the last 1 year. Reshma Bhatia is writing in from Pune, and she's got a question on BSE. She's holding at the moment with a considerable loss. She says it's 18% right now, and the losses accumulated to as much as 50,000 rupees. She doesn't mind holding for the long term, she says, but should the fundamentals be encouraging? She's wondering whether she can book short-term losses and wave that away, or set that off against future long-term gains or gains of any such. On the fundamentals, any view on this, Samir?
Yeah, so we've discussed this in the past, Alex. I told you I'm not very positive on the capital market space. Yeah. And there are two reasons. One, we are in a very, very highly volatile, highly elevated market. And this means there's a lot of volumes that are happening on the exchanges, which is allowing these companies to make a great amount of profitability, which is fabulous. But the cycle always turns, right? Whenever a bear market comes, you will see volumes dipping. And the minute volumes dip, your profitability for these companies get affected because that is their revenue stream. Now, secondly, there is a paper that is saying that SEBI wants to reduce this weekly expiry also. And if you see for BSE in the option side, the bulk of the volume is still coming from in the option side, coming from the weekly expiry product. It's not really there in the futures and option segment, in the cash, in the individual stocks or any of those. So if this weekly expiry gets tweaked a bit, maybe they make it, bi-weekly or something like that, then obviously what it will do is it will reduce volumes. And if that happens, again, profit gets hit and valuations are a bit stretched. So for me at this point of time, I would avoid it. For the second part of the question, should you book the loss? Irrespective of whether it was a hold or a buy, you should book the loss and buy the stock back if you feel like holding on to it. So you can offset that loss against any other profit. But for me, at the moment, capital market stocks, especially ones that are related to transactions, are an avoid. Stocks which are related to like mutual funds where AUM will keep growing, those you can continue to hold. But the transactional ones like Angel, like BSE, MCX, all of these for the time being can be avoided.
Okay, so that's the fundamental view that we have for you. But with that, let me also welcome in our technical guests for today. Rajesh Bhosle of Angel One joins in as well. Now, Rajesh, coming to Tushar has another query, and this is on PG Electro Plus that he wants. He's bought about 184 shares, and this is at a price of 582. He's currently facing a loss of around 13,000 on the counter. Wants to understand what to do with this stock at the current levels as what he's looking at. So, what is your view regarding this?
So hi, good morning. So if we see during the August month, we had seen a sharp rally in PG Electro Plast, where the stock prices from the levels of 800 had a drastic fall towards the 500 levels. As of now, the stock prices are consolidating and are forming a base somewhere around 500. So short-term bounce back is expected with some positive divergence, but I would suggest him to exit position or book loss on a higher level, somewhere around 535 to 540. There are steep resistance of key moving averages. So as of now, I would suggest to hold with a stop loss somewhere around 490, but somewhere around 535 to 540, I would suggest him to exit.
All right. The next question is on. Okay, so we've got Ahmed calling us, I believe, from New Delhi. Ahmed, hi. Thanks so much for calling us. How can we help you?
See, actually, I'm holding about 400 shares of Reliance Industries.
Okay.
Which have been accumulated over a period of more than 20 years by way of rights, bonus, etc. So now I am thinking to sell about 100 shares of Reliance and buy and invest the same amount in
RailTel, right.
Airtel. So is it right move at this time?
What is the quantum of shares that you currently hold, Ahmed, in Reliance Industries?
About 400.
400 shares, okay. Okay, it's an interesting question, Samir, especially because in the recent past, Reliance Industries has underperformed. But if we look at the last 2 decades, there is even a time frame, if I'm not mistaken, of 5 to 7 years where it did nothing, and then after that it created a significant amount of value. There's a lot that is currently underway, and not least to which the listing of several entities. I don't know whether holding the conglomerate right now will benefit you as a shareholder, because you might just have a split and list separately, right? So would you hold? That is the moot question.
So to answer the moot question, hold, yes. Now, if you're asking me what the question of the speaker is, of the person is, should I convert a Reliance to a Realtel? It's 100% no. You're comparing two entities which are totally different, totally on different growth trajectories. I think Reliance is going to grow a lot faster. Alex, you also discussed it, and I've also discussed on your channel. There have been periods of 5 and 7 years where Reliance has not done anything, and from after that, it's gone 3x and 4x its stock price, right? So we are in the consolidation phase in Reliance because they're putting in a lot of the capex. But once the capex is done with in their green energy spaces and all of that, I think Reliance is going to do extremely well. Their retail operations are not even close to valued at what stocks like Trent and DMart are valued at. So if I were to give that kind of valuation to a Reliance Retail who has the largest footprint, I think there's huge upside potential. And then let's talk about the telecom space, where it's a 2-horse race. The third one is limping along. But it's a 2-horse race, and any increase in ARPU, these guys are going to do extremely well. So for me, Reliance is a hold, if not a buy. And this conversion is a definite no-no.
Okay, so that's the view. I hope, Ahmed, that answers your question. Now, moving on, Neha is writing to us from Bangalore, and she wants to understand about an outlook for Ashok Leyland, and this is for a period of 1 to 2 months that we are looking at, currently making around 30% plus profits on this one. Whether she should continue to hold or sell, that's the question, Rajesh, that I want to ask regarding Ashok Leyland.
So definitely a hold kind of counter. We are expecting strong outperformance, possibly 155 to 160 is what we are expecting. But the viewer is saying 2 months. So maybe from a 2 months point of view, the stock may consolidate, because in the month of August and September, the stock has already rallied from the levels of 120 to 140 plus. So from a 2 months point of view, the stock may consolidate. But if we consider a point of view of 6 months or 1 year, then possibly the stock can head towards 155 to 160 levels.
Okay, so that's the view for Ashok Leyland that we have for you. Next, we have a caller joining us, and this is Yogesh calling to us from Jaipur. Hi, Yogesh, how can we help you today?
Hi, good morning. Excellent. What I want to know, I have a urban company share.
Right.
It's a professional company, and that I want to invest for next 5 to 6 years. So I have 168 rupees for 500 shares. What I do for that? Yes. I hold or I buy on in downsides and everything. That I want to know.
So you just want to understand, you want to add further to this particular stock. Can you just repeat what your query is?
Yeah. I can hold for next 5 years, and I want to accumulate more shares. Okay. What I do for that?
Okay, Samir, let me come to you on this one. Do you track this company? What's your outlook on this one?
So we don't have active coverage, but yes, I have studied this company and I do like the long-term prospects of the company. We will soon release some update. But having said that, because the question has been asked, I would say, look, even I am someone who wants to accumulate this counter, but I want to accumulate it at better pricing. I think post the IPO, the pop that has happened has been quite large. And also what's happened is there is a lock-in period for some of the investors who were there in before the IPO. I think a lot of them may come to take some money off the table when that lock-in ends in 6 months. Over the next 6 months, you will probably get opportunities closer to maybe like 140, 130. And whenever that opportunity strikes, I would look to buy, and that is the price I would like to buy. So I would advise the same for your investor. If you're feeling comfortable even at these levels, you can keep adding slowly all the way down as well. But my purchase price, I would like it to be around 130.
Interesting. All right. New listing, and bear that in mind. You still have to look at the earnings, and you'll have an opportunity to do so soon enough. Yogesh, hopefully that answers your question. We've got Tejas, who's writing in from Nagpur, asking about CAMs and asking what the technical levels are suggesting for this particular counter. Would you suggest a fresh entry? Rajesh, what's the view?
So what we are saying is that since October, the stock is forming a base around 3600 to 3650 levels. So if he's holding any long, or if he wants to add any long, he can buy with a stop loss of 3600. Last session, we saw a bullish engulfing pattern on the key support levels. So with a stop loss of 3600 can be bought, and in the near term, a bounce back towards 4200 can be taken as a profit booking levels.
Okay. An interesting question that Ramya is asking, may not get you the entire answer. She's asking whether she can split her 5 lakhs which she wants to deploy into bonds, stocks and liquid funds. That depends entirely on your risk profile and what you're looking to achieve. Try to look up a show that we did last week on Your Money Matters. We talked about a bucketing strategy. So this will allow you to split your investments over a longer period of time, depending on when you need the money in the asset class that is most appropriate to achieve that goal. All right, we've got our next caller. Ajay is calling us from Ambala. Ajay, hi, thanks so much for calling us. How can we help you?
Good morning, sir. आप सबको सर मेरा क्वेश्चन HDB फाइनेंस पे है सर. मेरे पास 776 पे 600 शेयर्स हैं. सर मेरा क्वेश्चन इस तरीके से कि सर जैसे कि अभी टाटा कैपिटल का IPO आ रहा है, क्या इसमें से निकल के हमें IPO में लगाना चाहिए? अगर वो लिस्ट 10% या कहीं पर भी होता है 370, तो वहाँ पे लेना चाहिए इसको चेंज करके, या सर मैं इसमें से निकल के बजाज ऑटो ले लूँ सर? ये क्वेश्चन था सर
जी. आपने इस IPO में भाग लिया था HDB फाइनेंशियल में?
नहीं सर, ये मैंने अभी पहले लिया था 776 पे. यस सर. तो अभी ये नीचे आ गया. ये चलता तो है नहीं, बट ये है कि वो भी NBFC में टाटा कैपिटल आ रहा था, तो मैंने बोला कि ये बेटर रहेगा कि टाटा कैपिटल बेटर रहेगा, कि अगर मुझे IPO में मिल जाता है तो ठीक है, अगर नहीं मिलता है तो क्या मैं जैसे 10% ऊपर अगर लिस्ट भी होता है तो मैं इस तरह से इसको शिफ्ट कर जाऊं कि इसी में रहूं, या आइदर इसमें से बेच के मैं सर बजाज ऑटो लेना चाहने को, अगर ऐसा है तो.
अच्छा, पूरा फाइनेंशियल
अगर आप रिजेक्ट करते हैं तो
HDB फाइनेंशियल से हटके आप बजाज फाइनेंस की बजाज ऑटो.
यस सर, बजाज ऑटो सर.
बजाज ऑटो. ओके समीर, मैं समझ गया. समीर, आपके लिए सवाल है फिर, and it's an interesting one क्योंकि you know he's wondering whether to stick in the primary market and probably get Tata Capital. I don't know what the prospects are based on the kind of interest there is in this particular stock, or switch entirely into something like a Bajaj Auto.
So it's a very odd thing to, shift from HDB Finance into a Bajaj Auto, or should I invest for a pop in Tata Capital? It's a very confused question, to be very frank. पर मेरा उनको एक एडवाइस जैसे रहेगा, अगर आप लॉन्ग टर्म इन्वेस्टर हो तो HDB फाइनेंस, ये जो HDFC ग्रुप के कंपनी है, अच्छी ग्रुप है, उनके ग्रोथ अपॉर्चुनिटीज, ग्रोथ प्रोस्पेक्ट्स काफी अच्छे हैं. एंड वी थिंक जो टेम्पररी अभी उनका जो पेन पॉइंट्स है वो रिजॉल्व होके वी विल सी देम बीइंग एबल टू जनरेट वेरी हाई ROEs. तो मेरा एडवाइस होगा कि स्टे इन्वेस्टेड इन HDB फाइनेंस. मेरे हिसाब से अच्छा है. अगर आप HDB फाइनेंस और बजाज ऑटो में कंपैरिजन कर रहे हैं, आई प्रेफर HDB फाइनेंस. आई वुड नॉट शिफ्ट टू अ बजाज ऑटो. टाटा कैपिटल के लिस्टिंग गेन्स के लिए अगर आप खेल रहे हो तो इट्स अ लॉटरी, क्योंकि एप्लीकेशंस काफी लार्ज होगी, एंड यूजुअली इतनी लार्ज IPO के बाद इट्स वेरी रेयर दैट यू विल गेट अ वेरी बिग लिस्टिंग फॉर ऐसा 10% ऊपर या कुछ, क्योंकि काफी लार्ज IPO है. तो आई थिंक बेटर आप HDB फाइनेंस में ही रहे फॉर अ लॉन्गर टर्म पर्सपेक्टिव.
Hold is the view for HDB Financial Services. With that, the next question is from Subramanian. He's writing to us from Chennai. He has about 220 shares of City Union Bank, which is bought at an average price of 173. Rajesh, this question is for you. He wants to understand whether he should book profits at these levels.
So he can hold on to it. We have a positive view on a City Union Bank. In fact, we expect an extension of up move towards 225. So he can hold on to it. He can keep a trail stop loss of 204 levels where we are seeing a higher bottom. So with a stop loss of 204, 225 to 230 would be the targets.
Okay, Intellect Design Arena is the name of the counter we're talking about next, and Ranjit wants to know about this. He's holding at a price of 1,200, elevated levels to say the very least. Rajesh, what's the view on the charts?
So it's been a very volatile counter. We have seen swings on both the sides. So as of now, I would suggest him to hold with a stop loss of 900. We can see multiple bottoms and 200 DMA at 900. So 900 would be a sacrosanct support. But on a bounce back, once it backs back towards 1150 to 1200, try to book loss or book profit around those levels.
Okay, the next question is from Balaji. He's writing to us from Tamil Nadu. He has bought about 5,000 shares of Niva Bupa, and this is at an average price of 82.5 that we are looking at. Wants to understand whether he should hold this one or exit. Sameer, your view?
I think one can hold on to the entire, Niva Bupa especially, but entire healthcare insurance and insurance space, because the opportunity, like we said, is always very large. We think we are massively underpenetrated when it comes to health insurance. People haven't taken adequate covers. Number of people taking policies is also only going to increase. They have a focus towards health insurance. So, it is something one can stay invested for a longer term. But for me, like I said, I like the space. But for me, the top pick, if someone asks me in this space, is ICICI Prudential General Insurance, because it caters not only to the health but across the various other travel to autos to fire policies, home insurance. I think that entire space has a lot of opportunity to grow. So that would be my key focus. I would rather be in a larger player in a general insurance than be in a health insurance, but Niva Bupa is also good.
Niva Bupa also good. Angelina is calling us from New Delhi. Angelina, thanks so much for calling us. How can we help you today?
Oh, actually, I have some shares, almost 90 shares of KPI Green Energy. I just wanted to know if I should hold it, should I sell it, or should I buy more?
What is the time frame that you had in mind when you bought it, Angelina? Can you hear me?
Almost 2 to 3 years. I wanted to keep it for 2 to 3 years.
Okay, and when did you buy it?
I bought it almost 7 to 8 months ago.
7 to 8 months, okay. All right. So since it's a slightly longer term question, let me go across to Sameer on this one. Sameer, KPI Green, what's the view?
So a slight disclaimer, I'm currently buying the shares as well. So my advice obviously would be to add on to your stock. And I'll give you my reasoning. So, we believe that the green energy space is going to do really well over a period of time. These guys, apart from having their own power plants, they also have a lot of land bank where they set up plants for companies, for corporates who need to put in their green energy. And then they have the evacuation, they do the maintenance, they do the running and servicing of those plants and earn a steady stream revenue. So they earn rental income from the land that they rent out, from the power plant that they set up, they earn for the EPC work, and then they also earn for the maintenance, O&M charges. So we think this is a business, companies that do not have their own huge land banks or getting their own large setups can buy it from these kind of guys at a very nominal cost and do well. And KPI Green, being one of the leaders in the space and having the right kind of location and evacuation, will do well. So I've been buying, and my suggestion, because I've been buying, I request you, I suggest also that you can add on some more.
I understand. All right, it's time now to hit the rapid fire round, and this is the second one and the last one of the show. I'm coming to you, gentlemen, over the course of the next 2 minutes to answer as many as you can. Shalini from Kerala has got the first one. Vedanta Limited is name of the counter. She's bought at levels of 470, she says. Should she hold for the short term? Rajesh, what's the view?
So we are seeing a fresh breakout, hold on to the levels of 500 levels.
Okay, the next question is regarding Suzlon. Mahesh has bought it at a price of 67. He has about 1,200 stocks of this. Your view, Sameer?
Buy.
Okay. Jayaprakash Associates, would you hold on to this one at this moment? Bhaskaran wants to know. Sameer?
I would avoid it. It's a defunct.
Okay. Next question is regarding Bajaj Housing Finance. 500 shares that Shashidhar has bought. Rajesh, your view, wants to understand whether he should continue to hold.
Yeah, continue to hold. 125 to 128 would be the levels to expect.
Sempro, which is formerly ITT Cementation. Any view on this one, Samir? Would you hold on if you bought?
No view on this one, sorry.
ITT Cementation, Rajesh, any view?
Even I'm not able to find the symbol.
Okay, Bajaj Housing Finance then for a period of 6 months. Bought at levels of 126. Shashidhar wants to know whether to hold. What's the view, Rajesh?
Yes, hold on to it.
Okay, next question is from Shashi Kumar. He holds 1,000 shares of Ixigo. Wants to understand the long-term picture. Samir, your view?
I think one can hold on to it. Growth opportunity is very good.
In the AC space, Samir, would you buy Voltas or Blue Star? Arpan wants to know.
At the moment, neither. On corrections, Blue Star looks interesting.
Okay.
Bharat Electronics is stock in focus. Deepak has bought about 100 shares. Is it the right time to buy further? Rajesh, your view?
Yes, can buy. We are expecting targets of 440 to 450 levels.
Transrail lighting for the long term, 5 years is defined. Sunita wants to know. Samir, would you buy?
No view on this market, sorry.
On the charts, Rajesh, any view?
Yes, can buy with a stop loss of 700 and 800 would be the targets.
Okay, gentlemen, thanks so much as always for taking the time, and happy Friday to you, and look forward to speaking to you next week. All right, well, viewers, that brings us to the end of this edition of Ask Profit from Anushi and myself and the team that put the show together. Thank you so much for watching, and do stay tuned. Lots more coming up. And on the other side, of course, is Know Your Company. This is NDTV Profit.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 AM till 10 PM in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है NDTV के साथ वो बहुत बहुत पुराना है।
रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems.
Hello and welcome to KYC. This is Hira and with me is Varsha Chandani. Clearly, the show is meant for someone who really wants to look at a company from an investment perspective, and a long-term investment is what you should be thinking about. One company which is in focus on the back of everything that's happening, on the back of the weather in the country. The flu season is on, and that's where hospitals come into focus. Jupiter Hospitals is what we're talking about on this show. Let's quickly first understand what are the key questions that we are actually going to ask the management on the back of responses that we should be getting. First up, the company has been seeing a high depreciation. Now, the kind of impact it could have on its profitability growth on the back of the high depreciation is the first thing. Secondly, when you talk about their greenfield projects, there are 3 of them that they're looking at. What are the kind of timelines that the company is looking at in terms of launch? Their target EBITDA margins is the next big question over the next 3 years, because that will actually tell you what's the operational efficiency when it comes to this company. And the growth in the average revenue per occupied bed. What is that expectation going to look like? Are they expecting growth, or will it remain stable at current levels, Varsha?
Well, on my list, I would want to know what is the sustainable debt levels that the company will have considering expansions, because recently they've added more debt. Number 2 is the total number of beds that they want to add, plus what is the capex that they are expecting over the next 2 years. And lastly, I would also want to know the revenue growth which the company is expecting over the next 2 years. So these are 3 questions on my radar.
Interesting ones, I think, that we will ask the management. But first up, let's understand all about Jupiter Life. Now, it's a multi-speciality healthcare provider, and it mainly operates in the Mumbai metropolitan region and the western region. Currently, around 3 hospitals is what they have, with a total bed capacity of around 2,500 beds.
Well, when we talk about hospitals, the main metric that we want to know is ARPOB, that is average revenue per occupied bed. For this company, it stands at around 67,300 rupees. Now, if you see over the years from FY22 to Q1 FY26, ARPOB has increased in a decent way, and that is actually important. So we would want to know what is the sustainable growth in ARPOB that the company is eyeing over the next few years. And also, so overall, so the 60, so as of FY25, if you see, ARPOB stands at around 60,600. And a healthy growth, about 6-7% is what one should expect when it comes to ARPOB.
With this, the next important factor becomes your occupancy, because until and unless the occupancy is strong, you will never see that ARPOB improve as well. But now what's happened is your occupancy has declined by around 380 basis points. The reason for this is the new bed additions that the company has done, and that's the reason why you've seen that decline happening. But from a 54, it's actually gone up to 65.3% in FY25, which is absolutely encouraging. So that is a good number to sit with, because you're seeing improvement that's happening on the occupancy levels as well, Varsha.
Now, the main aspect when it comes to hospitals right now is the expansion. Every hospital is actually expanding when it comes to greenfield and brownfield. For Jupiter, if I were to talk about, 3 new hospitals are expected. One is Dombivli, where they're expecting 500 beds, 500 crore of capex is what they're going to spend, and it is expected to be operational by Q1 FY27. Then we have, Pune Hospital also, wherein the operation is expected by, calendar year 28, wherein they're going to invest 500 crore. And lastly, if I were to talk about their Meera Bhayandar Hospital, again, the approvals are underway, operations are expected by, calendar year 29. So overall, 3 greenfield projects that they are expecting over the next few years.
Interesting. Let's now decode Jupiter Life. All the factors that we will be considering over here, we're looking at the income statement. That is something that is going to be checked. The balance sheet, cash flows and return ratios. These are the top 4 parameters. Apart from these, you have the shareholding, street credentials, valuations, and the street coverage with outlook are the 8 parameters that we're looking at. But first up, when you talk about the income statement, let's understand, if you have to talk about the first quarter of FY26, clearly the impact was led by higher interest cost and depreciation, and hence we're asking that question to the management. The revenues, a 3-year compounded growth of around 19% is what they've seen. EBITDA also around 24%. Profits 56% in terms of the compounded growth, and hence a thumbs up, because over the last 3 years, the profit growth has been aided by higher other income. The higher growth that has come in from FY23 to 24 has been led by, again, a higher income and lower tax towards interest cost. The companies had higher interest cost in FY22 and FY23, and this reduced in FY24 and 25, and the debt in FY24 actually came down to 0, and hence we've given it a thumbs up.
Now, talking about balance sheet, now overall we have given a thumbs up. If you see, the borrowings as of FY25, stand at around 321 crore. But the company has almost 600 crores of cash as of Q1 FY26. So overall, on a net debt level, if you see, it's 0. Now, one of the reasons why we have given a thumbs up, and though the gross debt, if you see, is around 321 crores, this is the new debt that the company has taken because of the expansion that they are doing. So overall, a healthy balance sheet would, I would say, considering the cash sitting almost 600 crore as of Q1 FY26.
And that takes us to the cash flows, which is also healthy, and hence a thumbs up, because your overall cash flow from operations has remained healthy. Your net cash flow has been negative in FY24, but that's mainly on the back of investing items. And when you talk about FY25, the net cash flow at around 345 crores is due to the cash flow for borrowings being positive, and the ratings given is on the back of the healthy cash flow, mainly from operations. So that's the reason why a thumbs up on this aspect.
Talking about return ratio, so overall, if you see the chart, except FY25, the ratios, return ratios, ROCs have been healthy at 21-22%. The reason you are seeing dip in FY25 are because of two reasons. One is, of course, some pressure in profitability and the company investing a lot. So there's been huge capex that the company has done. That's why the ratios are depressed. And the other reason is because of huge cash sitting on your balance sheet will also depress your return ratios. So overall, these are the two reasons why you're seeing 17% of ROC, and one of the reasons why we have given a neutral rating when it comes to ratios.
Okay, so that's return ratios, which is a neutral rating. Let's shift focus to the shareholding pattern. It's very interesting because overall, your promoters have absolutely remained stable in the last 3 to 4 years. Your FIs did see an increase. In fact, from a 4.17, they've gone up to 10. A minor sell has happened, and that number is at 9.77% in FY25, but it's almost the double of what they were in the March quarter of FY24. DIIs as well have steadily increased a small portion from 14 to 15.82 is what you're looking at in terms of the DIIs, and the public has also remained pretty okay. It's gone down though. Your free float has actually gone down from 40.76 to a 33.51, but a lot of promise from FIs and DIIs, and hence a thumbs up.
Well, on the contrary, Hiral, the street cred, if you see, we have given a thumbs down because the company has not given much returns to their shareholders. In last 1 month, the stock is the stock is up only 4%, while in last 6 months it's down 2.6%. Rather, in last 1 year, if you see, the stock has given only 7% to its investors. While if I were to talk about longer term also, in last 5 years, or rather since when the company has been listed, the stock is up only 42%. This is from 2023. So overall, a thumbs down, when it comes to the returns that the company has given to its investors.
Okay, so that's with regards to where the street credentials go. Let's look at valuations now. You can say that the stock is not very expensive and is not very cheap as well, because if you have to compare it to your peers, it's sitting somewhere in between. Narayan Hrudayalaya is the only one which is the cheapest out of the 4 that we've mentioned, and this is taking into consideration FY26. If you have to look at FY27 as well, a similar scenario is what you're seeing. Around 39 times is where Jupiter Life is, where Narayan continues to be the cheapest one, and you have Kim's and Globus, which are Global Health, which are still more expensive as compared to a Jupiter Life. In fact, even the other ones, from an Apollo Hospital to a Fortis to a Max Healthcare, it seems this is pretty much in between. And if you have to compare a Jupiter Life to a 3-year average as well, it's somewhere in between to the mid, to that range. So again, a neutral rating with the way it's sitting at.
Well, talking about analyst recommendation and outlook, so 6 analysts have rated buy, well, the potential lies at almost 14%. On the outlook, company is expecting organic growth to continue when it comes to, Pune and Indore with new beds and, of course, ramp up in those areas. And most growth will come from Pune, Indore until the Dombivli hospital comes online, and the ramp up of Dombivli, if you see, and the other hospital will be the key metrics to watch out. Lastly, if you see, increased depreciation and finance costs will actually have some pressure on PAT margin. So because of this, we have given a neutral rating, when it comes to analyst recommendation and outlook for the company.
Okay, so that's the overall. Let's look at what the picture looks like from here on Know Your Company. First up, 3 greens: income statement, balance sheet, cash flow, a neutral in return ratios. And if you have to talk about shareholding, again, it's 1 green. Street credentials is a thumbs down, and your valuations and street coverage and outlook are a neutral, which takes you to a 5.5 on 8, which is also a good rating so far. But let's get in. Ankit Thakkar, MD and CEO of Jupiter Lifeline Hospitals. Ankit, welcome to the show, and always a pleasure to speak to you at NDTV Profit. We have these 5 or 6 key questions that we want you to talk about. First up, the interest and depreciation cost has been absolutely high, and that is what is impacting margins and profitability. How are you seeing the impact in FY26? And are you seeing that impact recede over the next couple of years? What is that trajectory going to look like?
Good morning. So, on the interest and depreciation side, I think you should expect the numbers to continue to look high over the next couple of years. We are currently in a serious capex mode. We are putting up 3 new greenfield hospitals as we speak. The first one is in Dombivli, which is 500 beds, which will come up first quarter of next financial year. Then another 500 bedder in Pune and a 300 odd bedder in Mira Road in the MMR region. So over the next 2 or 3 years, there will be serious capex, and all of that will lead to increased depreciation in the times to come. On the interest side, we have currently we are still net cash, but we have some debt on the book in anticipation of the 7th greenfield project as well, which currently we haven't signed, but we are negotiating a few things. So if that comes up, then the 7th hospital may be partially debt funded, and that will also give rise to some interest component. While we have been debt free for the last couple of years, but going forward, we may have some debt on the balance sheet.
So Ankit, then what does this do to your profitability and to your margins over the next few years? Are you seeing any dip, or you think they will remain stable at current levels?
So I look at it, when you analyze the operations, I look at it more at the EBITDA level, which is more reflective of the strength of the operations. So on the unit EBITDA levels of the current operating hospitals, that is Thane, Pune and Indore, we don't expect any impact or dips. Indore, on the contrary, should grow and improve upon margins a little bit. But as the new hospitals come up, each hospital, would take a year or two to mature. So I would forecast maybe the first year to be slightly negative at the EBITDA level for each new hospital that comes up. The second could be neutral, and the third onwards, it starts contributing a little. So we are in this growth cycle, and therefore, the below EBITDA line items are expected to be higher than what they were.
Hi, Mr. Thakkar. Varsha, this side. Pleasure to have you at NDTV Profit. Mr. Thakkar, the occupancy, if you see, dipped in Q1, of course, because of the addition of new beds. How long do you expect the ramp up, or when do you expect the occupancy to reach at the peak optimum level, and what would be that level be?
So the peak levels generally for all the hospitals should be somewhere in the mid 70% of occupancy. Thane is already there. Pune is close. It is in high 60s. I think the next year also it should pretty much get saturated. Indore, you see a significant percentage dip in occupancy because of an expanded base. Like you pointed out, we have added close to 100 beds in Indore. So while on the absolute terms, the occupancy continues to rise, but on the percentage terms, you do see some dilution there. Again, we believe that in the next year also, once these occupancy numbers cross 60-65%, we have one more round of expansion possible in Indore. So we may add a few more beds in Indore. And then that will be the last of organic expansion as far as Indore is concerned.
Okay, so that's the overall expansion plan and what occupancy could look like. To add to this, let's talk about the average revenue per occupied bed. A good number that we've seen so far, I think, if I'm not mistaken, in double digits as well. Is this something which is going to be sustainable, taking the kind of competition that is coming in at play in the MMR region? Because a lot of other hospitals, in fact, majority of them are on an expansion spree as well.
Well, I think, and I always maintain this, if you want to extrapolate the RPOB number, I think it is the safest to extrapolate it to grow in line with inflation. Anything beyond that, I would not guide or recommend you to build into your model. As far as, the growth in beds is concerned, I think it is still a lot to do with demand, a lot to do with unmet need. So I would not attribute the growth or the lack of growth in RPOB to competition, but I would attribute it more in terms to reality, which is that we are at an optimal pricing level. And like for all other things in life, inflation is a reality. The inflation is a reality for healthcare costs. So to that extent, ARPOBs will grow.
And also, Mr. Thakur, considering the expansion that you are doing, what would be the sustainable debt level, for at least next 2 years?
So the expansion which is currently underway, that is our journey from 3 to 6 hospitals, we are doubling our size. That will be completed free of any debt. So technically we should be able to complete this round of expansion with the cash reserves that we hold on our books and the internal accruals that we will generate over the next couple of years. The debt is going to be used if we do the 7th project. So the 7th project then will be debt funded, and that will probably sit on the book for some time.
Okay. From here on, in terms of the capex that goes as well, we're talking about the expansion right now. How significant is the upcoming capex going to look like? Because the ones which are in the pipeline, everyone is aware of that. But if you have to look at any further additions, the 7th hospital you said probably could be funded through debt. What is that capex going to look like post that?
So depending on the land and location that we eventually finalize, our one thing that I can assure you and your viewers is that we are not changing our broad philosophy. That is, we are looking at a greenfield project, we are looking at Western India, and we are looking at the size of 3 to 500 bed scale. Within these parameters, depending on the land, location, etc., that we do finalize, we will be able to give you a better sense of what the capex will look like. But X of land, I think pretty much everything else remains the same. That is, we should see the project come up at anything between 1 crore and half per bed.
So Ankit, to take that expansion into consideration, what are the high growth specialities that Jupiter Lifeline could focus on? And currently, any percentage of your revenues that come in from high growth specialities? And do you see any opportunities lying there?
So honestly, we don't really track specialties as high growth, high margin, all of that. See ourselves more as, community comprehensive health providers. We do everything from childbirth going up to, cancer, organ transplants, all of that. I think it is not very wise in healthcare to really hair split these numbers and look at, a P&L at branch level or specialty level. We don't consume that data even internally, because I don't believe that there is any actionable insight that can come from that data. So, for example, if I learned that gastroenterology, for example, I'm just throwing something, is a low margin business, what am I going to do? I'm not going to shut it down. We don't look at those numbers because we don't think those are actionable numbers.
Thakur, just wanted to so we are clear when it comes to EBITDA margins, but what kind of revenue growth are you expecting considering the expansions that you are going into, the revenue growth expected for the next 2 years?
So next year, with Dombivli coming in, that should add to the revenue on the consolidated level. Pune is maybe 2 or little more than 2 years away, so that will not figure into your 2-year projection. Thane should grow in line with inflation on the pricing front because the occupancy is pretty much matured. Pune also has a little bit of occupancy growth, so it can grow higher than inflation. And Indore has 3 levers besides pricing, occupancy. It also has a third lever of criticality of procedures or case mix optimization. So Indore should show the fastest growth of the 3.
Ankit, in the end, investors want to know what the return ratios are going to look like, because you did a peak of 22% on a ROCE in FY23. When do you come back to that number? How long will it take you? and anything beyond that that you're targeting?
I think you are the expert in that, and I think
no, but I'm sure. I think an investor would want to hear from the horse's mouth, because that is, something that will probably stick by.
Absolutely. So from the horse's mouth, I think what I very strongly believe is that I should do what I am good at, and I should do my job rather than somebody else's, which is to do two things. A, continue to run the existing hospitals well, efficiently, and in the best interest of the patient, so that we continue our operations well. And two, make sound capex decisions for the future growth. So on that front, guidance from me can be limited to what we are planning to do next. We are planning to build 3 more hospitals and double up our capacity. You can, make an educated guess what double capacity can translate into in terms of financial performance. We can make sure that our capital allocation is not out of whack. We spend right amount of money. We don't overpay for things, and we are efficient in terms of capital employed. Eventually, that has to translate into returns if run efficiently. But I don't like making predictions on numbers. I would rather
make predictions on performance, I think. Thank you, Ankit, so much for joining us on the show. And that's Ankit Thakkar clearly telling you as to what could be in store from here on. But very quickly, any key takeaways, Varsha, on this?
Yes, surely. So over the next 2 years, what he said was, because of the depreciation, high depreciation, there are going to be some pressure when it comes to PAT. Number 2, the peak occupancy level is expected at 70%. Soon they're going to they're going to reach at that 70%. And lastly, the ARPOB growth is expected or will be in line with the inflation. So
and they're going to take care of the returns to the investors as well. But thank you so much, for joining us on the show. To this, and that's all that we have on this edition of Know Your Company, only on NDTV Profit, for your profit.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in. Where investors are looking for you.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
The US federal government remains shut down after a deadlocked Congress failed to reach a funding deal. Republicans and Democrats are at odds over Obamacare subsidies, among other things. White House warns of mass firings. And back home then, a volatile day of trade on the Wall Street. Nifty manages to hold 24,800. Most sectors in the red as we speak. Media, auto and realty lead losses. Abu Dhabi-based international holding company set to acquire a 43.5% stake in Indian financial services firm Sammaan Capital, deal valued at over 8,800 crore rupees. And flexible workspace company WeWork's IPO opens for subscription. The 3,000 crore rupee issue is a complete offer for sale with a price band between 615 to 648 rupees. And gold prices, meanwhile, poised to gain for the 7th straight week. Uncertainty over a US government shutdown bolsters safe haven demand for the yellow metal. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. And first things first, let's take a look at what the markets are doing today at this point in time. And when you take a look at the Nifty managing to hold up above that 24,800 level, at least at this point in time, when you take a look at the list of sectors, though largely tilted in the favor of red, media, auto, consumption, realty, oil and gas, exactly in that order. Those are your top sectoral laggards. And on the flip side, there's metal that's holding up quite well, 2.5% uptick on that sector. Defense, PSU Bank,
as well as IT also marginally holding on to a tinge of green as we speak. But let's also quickly take a look at the list of gainers from within the Nifty 50 pack. So what makes it to that list is Tata Steel up about 4% as we speak, Hindalco, JSW Steel, Hero MotoCorp, as well as Kotak Bank and BEL are some of your top gainers as well. And when you take a look at the list of losers, SBI Life, Coal India, Eicher Motors and Sun Pharma and Tata Consumer make it to that list, down anywhere between almost 1% to 1.5% thereabouts. So that's the kind of move that you're seeing coming in. When you take a look at some of those auto space counters as well, there's a Maruti Suzuki, in fact, that is on the back foot. Select few of these auto stocks, in fact, holding on to a tinge of red as we speak, despite a strong set of numbers in the month of September in terms of the sales. But let's also take a look at one interesting conversation that we had. In fact, earlier today, we caught up with Partho Banerjee, who's the Senior Executive Officer, Marketing and Sales at Maruti Suzuki, to try and understand his perspective on the decrease in SUV production on a year-on-year basis. Let's go across and listen in.
The number which you're talking about is the dispatches from the factory. That's the wholesale number, the dispatches from the factory. And I think you will appreciate that since due to the cess problem, which used to be 18% on the bigger vehicles, we were not dispatching any vehicle till 22nd of September. So the vehicle which has been dispatched from the factory, there is a limitation to the trailer which can only be delivering it every day. So the capacity was to the tune of 10,000 vehicles per day. And keeping in mind all the vehicles, I think it will take some time for the overall the logistics system to come to the equilibrium. That's the reason primary. Otherwise, in the retail, if we see, the growth of the SUV vehicle for Maruti is 32% in the month of September.
All right, then let's move on. In fact, it's time for an NDTV Profit exclusive. Let's take a look at that. Acquisition financing may get a green light, but with conditions. In fact, the financial sector acquisitions are going to be remaining barred as well. Vishwanath Nair is joining in with that update.
Yeah, so if you were to look at what the actual monetary policy decision was, I had been saying it since that day, but that was just a sideshow. The main focus was, of course, the norm changes that the Reserve Bank of India is bringing in, 22 specific norm changes. Now, yesterday we did talk about how the regulatory changes came in as far as the large exposure framework, as well as the draft guidelines for NBFC's forms of business, how those came about. What we're telling our viewers today is about acquisition financing. That was one of those key measures that was announced by the regulator, that banks, Indian banks, will be allowed to finance acquisitions by Indian corporates. This is something that they were struggling to do earlier. Earlier, of course, a foreign branch of an Indian bank could still do that. However, domestic lenders were not able to do that, partly because of the large exposure framework, but partly also because the regulator was not in favor of allowing leveraged buyouts in India. So now, of course, it seems that things have eased up. What we are learning from our sources is that this was actually led by banks going to the RBI and lobbying for the rights, because they were seeing that their key corporate clientele was going towards private credit, and private credit competition and the intensity of the competition was too much, and banks were seeking a way to get into this space so that they could also start lending towards good quality, high pedigree clients wherever they needed any kind of financing for acquisitions. Of course, guardrails still exist. What the new norms are likely to see are very strong guardrails in place so that banks don't over leverage themselves. They also will have to follow internal lending norms. Remember that a bank is only allowed to lend up to 20% of their capital base towards a single corporate. So that will still apply. When it comes to investments, that number goes up to 40%, but that's inclusive of the 20% in lending. So you have an upper limit on the investment side as well. So even if they want to structure a deal with some amount of investment into the corporate rather than just a direct loan, they can do that, but those will be within specific rules so that Indian banking system is not ending up too exposed to a key corporate buying out its competitor.
Well, absolutely, and thanks, Vishy, for getting us that update. So that's an NDTV Profit exclusive for you. But let's move on. Let's get you that entire list of stocks that are buzzing away in trade at this point in time. When you take a look at the first one, Adani Green Energy is the one in focus on the back of the commissioning of a 50-megawatt solar power project at Khavda. They've also, in fact, commissioned 31.2 megawatt wind power project as well at the same location. And you're looking at the total operational generation capacity to the tune of about 16,600 megawatts in this particular unit as well. So that's very important to note. Other than that, of course, there's PTC Industries that is in focus on the back of that track precision, receiving a multi-million pound project with Coolbrook as well. And when you talk about this one, this is supply critical machine and cast components for rotodynamic heater. Revenues as well anticipated to reach in excess of 10 million pounds annually. So that's the magnitude, the quantum, in fact, for this particular project that you're looking at. Let's also move on to the next one that we're looking at. Bari Energies, in fact, they're also in focus on the back of the board approving capacity of lithium-ion advanced chemistry as well. And you do have that particular counter in focus on the back of this manufacturing plant capacity as well. That is going to be increasing now to the tune of about 20 gigawatts GWH as well. That's something that you're looking at in terms of additional capex. You're looking at 8,000 crore rupees in terms of the expected increase there. So that's something that's important to note. Other than that, there's also PC Jeweler that you should be taking a look at, because you do have for this one as well, the second quarter revenue has seen an uptake of about 63%. And in fact, the debt reduction is something that we should be keeping an eye on. 23% is the kind of debt reduction that they've seen. In terms of the outstanding debt, they've reduced it by approximately 23%, which is, it's important to note that this is in line with the company aiming to become debt-free by financial year 26. So that's something that they're marking on their calendars. And in line with that, 23% is the kind of debt reduction that they've also seen coming in, as well as you also have Unimec Aerospace. In the second quarter, the revenue, in fact, has decreased due to US tariffs, and on the back of that, that particular counter is also in focus. Let's also take a look at the business outlook. When it comes to the financial year 26, the company, in fact, continues to experience a slowdown in revenues. Revenue is also expected to marginally be lower versus the first quarter. And when you talk about the reasons for this particular decline, this is largely due to the imposition of US tariffs. So there's that entire tariff uncertainty piece that is playing into this one. And that's also impacting exports. Now, the company may achieve challenges in achieving the revenue guidance as well. And that's largely after this sort of downtick that we've seen coming in as far as the revenue is concerned. Let's also very quickly, before we move on, take a look at Coal India, because that is also in focus after the September production data. So when you take a closer look at the data, September production, you've seen a decline of about 4% coming in. And it now stands at 48.97 million ton as well. In terms of the first half of FY26, you're looking at the production figure declining about 3.5% thereabout. And the figure that you have now is 341.35 million in terms of the first half production as well. When you take a look at the September offtake as well, there's been a decline of 1.1% there as well. And the company's supply target for financial year 26 at this point in time stands at 900 million tons. And the company's production must in fact rise 29% in the second half to meet this particular target that I just spelled out. So that is Coal India that is in focus. The stock is down about 1.5% as we speak. So that's also one important counter to look at. So that's something that we're looking at. But let's also move on and get you the word going as far as one important brokerage call is also concerned. Morgan Stanley, in fact, has maintained an overweight rating on Axis Bank, raised their target price as well to 1,450 rupees, citing also a strengthening turnaround story for the company. The stock is up about 1.5% as we speak. So that's something that you're looking at in terms of the brokerage call as well when it comes to Morgan Stanley. And they've also, in terms of the overweight, let's also quickly take a look at some of the key triggers that they've also highlighted. So they're talking about this being a very clear turnaround story. The bank has taken significant additional steps over the past year, and the bank should get traction as macro climate as well improves. In terms of the re-rating, you do have Morgan Stanley also stating that they expect the re-rating relative to large private banks to be gradual at this point in time. They're also expecting trends in all three drivers, that is NIMs, growth, as well as credit costs. So that's something that they're also penciling in, and the extent is going to be linked to the pace of macro recovery. Now, when they're talking about the benefits of the bank's strategic decisions, that could be visible over the next 2 to 3 years. So that's something that they're marking in terms of the timeline as well for the benefits of the bank's strategic decisions, in fact. But until then, they do expect the valuation gap to remain wide. In terms of the key drivers for this particular re-rating, let's quickly take a look at those drivers as well. They're talking about the narrowing of retail deposit growth, differentials, loan spreads versus large banks is also something that they're talking about. So that's largely the kind of outlook that you have coming in as far as Axis Bank then is concerned, and that's very important to take a look at. But tell you what, let's also very quickly take a look at gold prices because they are in the spotlight. First things first, let's take a look at the sparkling week, in fact, that gold prices have had. And you do have gold that is set for a 7th straight weekly gain already. US government shutdown is something that is really helping safe haven demand. And the 5-day rally, in fact, is also pushing prices to a record. In fact, joining on the show right now, we do have Aditya Agarwal, who's the co-founder of Wealthy.in at this point in time. Thank you so much for joining us this afternoon, Aditya.
Hi, Shreyanshi. Pleasure to be here.
Well, absolutely, and when you take a look at the triggers when it comes to gold, this has been a record run, and in terms of the streak as well, you're looking at whether you talk about ETFs or whether you talk about gold as well. The fundamental drivers are intact, but I'm just wondering if you're seeing a change in terms of investment strategies as well when it comes to gold, right? Because there's a bunch of benefits that you have when it comes to ETFs, whether you look at no GST being applicable, whether you look at no making charges being there, there's definitely a clear change in consumer preferences that we're perhaps seeing because you do have that being reflected in the robust ETF flows. So keeping all of that in mind, what are your thoughts when it comes to the change in strategy from traditional to ETFs?
No, I think great question to begin with. So we all know, right, that if Indians hold 100 rupees of net worth, almost 20% of that is in physical gold. And that is changing very rapidly. And I'll tell you, because what is happening is now that if you ask me, for example, if I'm purchasing 100 rupees of gold in a year, that is largely through financial products. Because financialization of savings is a long-term theme that is happening. And that also is touching gold as an instrument, gold as an asset class, because we Indians love gold as an asset class. It's an asset class that is a great hedge against inflation, also protects us against bad times. And incidentally, it has also given the best returns. I was seeing a graph where actually gold has beaten Nifty 50 in terms of how it has actually helped beat inflation for household savings in the last 10, 12 years. Right. So gold, but clearly there is a clear shift towards holding gold in a financial product. And there are three products actually which have come. One of them is financial, one of them is digital gold. But gold, whether you talk about gold ETFs, whether you talk about fund of fund that hold these gold ETFs, or whether you talk about digital gold, there's a lot of adoption of digital gold as well, which is similar to physical gold, but just it's digital in nature and you don't take delivery. So there's definitely a massive shift, and today you see more and more people buying gold as an investment in sort of financial products. But of course, it doesn't glitter as much as your jewelry or your bullion or your gold coin.
Well, absolutely, and that's a very interesting shift that we've also seen in terms of consumer preferences. We'll also delve a little deeper on this one. Thank you so much for joining us. Just wait by for a bit. We just do have a very important update to cover at this point in time, Mr. Agarwal. Let's move on to Sammaan Capital at this point in time, because you do have that acquisition that is in the spotlight. Abu Dhabi's IHC is set to infuse 8,800 crore rupees in Sammaan Capital through shares and warrants. Let us cut across to my colleague Soumit Sarkar, who's in conversation with Gagan Banga, who's the Managing Director and CEO at Sammaan Capital.
A big fund infusion in Sammaan Capital. Abu Dhabi-based IHC will infuse close to 8,850 crore rupees in the company. How does that help and what changes going forward? To understand more on that, we are today joined by Gagan Banga, the MD and CEO of Sammaan Capital. Firstly, sir, thank you for joining us and congratulations on the fundraise. It's quite a significant fund amount that you're raising from IHC. But why this fund infusion? Did the company need funds at this point of time? And does Sammaan Capital actually need a strategic investor at this point of time?
So if you trace back our journey, especially over the last 7 years, we've we did hit a reset button about 7 years ago in the aftermath of the IL&FS crisis followed by COVID. And our understanding is that when a large balance sheet in the financial services sector hits a reset, it takes about 6 to 8 years for it to normalize and start growing again. And there are several examples of this between banks and non-banks. So we were at that stage where 21 to 23 were years where we were trying to stabilize the operations. 24, 25 were years where shareholders gave us a significant amount of money. We were able to make provisions and move on and try and start moving in the direction of business as usual. As we progress on that, we are clearly mindful of the fact that in an NBFC business, the foundation is provided by the equity capital. We already have sufficient equity capital. What we did need was a high quality partner or a promoter to solidify that base. And on that base gets built the building of the balance sheet, which is largely financed by debt. So for every rupee of equity, we raise 4 to 5 rupees of debt. Right? The ability of being able to borrow that 4 to 5 rupees efficiently at the lowest possible cost with the longest tenor across maximum number of lenders is clearly an outcome not just of the absolute amount of equity, but also by the quality of the people standing behind that equity. IHC, given its size, its governance framework, is that organization which brings in the solidity. More so, their decision to come in as a promoter even increases the strength further. So from a stability as well as from a growth perspective, not only do we have the requisite growth capital now, we have the right kind of a promoter. The other big thing is that what one is very mindful of is that will people need loans 5 to 10 years from now? Most certainly. Would loans be getting appraised and lent out in the manner that they are today? Most certainly not. Right? There is a very rapid tech evolution happening. And in order to stay ahead of the curve, there couldn't be no partner better than IHC, which has a massive ecosystem of tech-enabled organizations, AI-focused organizations. That ecosystem is second to none. We do a plug and play into that ecosystem and get several years ahead of whatever else is happening in our peer set. So it's a great combo of capital and tech combined with the management expertise and experience, right? I think now sky is not the limit.
Right. As you were mentioning that it takes nearly 6 to 8 years for a company to hit the reset button and start going. So in this 6 to 8 year period, where are we at this point of time?
So we've done our 7, and so we are absolutely at that inflection point where growth has to happen. We've done all the hard work in terms of identifying loans we don't want to continue, work streams we don't want to continue, alter our distribution model, build partnerships with banks. And even today, the realization is that I'm fairly sure that our rating trajectory will be very positive. I'm very confident that the bond markets will respond very well. If as I'm made to understand, our international bond yields are already down by 150 basis points overnight. So that's the kind of influence this transaction will happen. But one of the big learnings of the last few years is, as an NBFC, if you can build a collaborative model with banks, that's the long-term sustainable model. So we are not deviating from that model. For whatever we originate and keep, we have a very solid base. We have a solid base in terms of assets that we are managing for our banking partners. All in all, the whole asset liability profile becomes extremely robust.
Right, sir. But when you look at your book value, in the first quarter and it was at around 250 rupees, then why have you done this fund infusion at a much lower rate? Because your book value goes down significantly from 250 to 200 rupees. So why this fund infusion at lower rate?
See, book value is a balance sheet item. It is reflected in the net worth of the company, in its tier 1 ratios and all of that. Where such transactions will get priced is more an outcome of the valuation of the company basis net asset value or discounted cash flow, or as per this SEBI prescribed 10-day, 90-day VWAP formula. Right? The board took on the valuation advice provided by the valuers to see that the offer coming in at 139 rupees per share was a offer at a fair value, and therefore decided to give its consent to the issue. Book value and fair value for a stock capital infusion are two different things, right? Secondly, what is perhaps not appreciated enough is that unlike a manufacturing business where a promoter is manufacturing A and nothing stops them from using whatever profits are there in that business to start manufacturing B, C, D, E, in a regulated business that is not possible. Right? In a regulated business, it's actually the other way, that the promoter is taking ownership of a very high amount of debt. Right? In this case, if business projections are to work out fine, we will go back to a borrowing program of 1.5 lakh crore. The incoming investor has confidence that the management team has the ability to manage such a borrowing program. But at the end of the day, it is their name, it is their reputation, it is their equity which is also at stake, right? So I don't want to get into, what's a good price, what's a bad price. There is a process. That process needs to be followed in letter and spirit, and the interests of the minority shareholders have to be protected. That has been done to the T.
Okay. Now, given that an FI is investing, also becoming a promoter, how does the business perception of Sammaan Capital change, and does the business strategy also change going forward?
Yeah, so the strategy is to, over the next 12 to 18 months, get the company into a format where the lowest hanging fruit for us is to stop breaking the asset up into legacy and growth, right? Whatever assets have to be unbound will get unbound. What we are left with as of end of fiscal 27 is all the right kind of asset which we want to grow. That's point number one. Point number two is that over the next 12 to 18 months, I would imagine within about 6 months of the approval coming, we should be operating at a interest cost which is at least 150 basis points on our debt lower than where it is today. These are two significant milestones to achieve. As an outcome of these two, we will get to the third big picture goal, which is to get to a AUM of 1 lakh crore by end of fiscal 27. Now, what is life after fiscal 27? While we are doing all of this apparently visible stuff, what we will be doing also at the back end is in the segments which we've identified as our target segments, which is the low to mid income group. Currently, we are focused on the mortgage business, giving out whatever loaning products are available to us, provided a property is being mortgaged to us. That will expand to the segment stays the same, low to mid income, but whatever are their general loaning requirements, we need to critically examine each of them to see which one makes commercial sense for us. Whichever is a commercially viable loaning product to offer, we will expand ourselves to that. Second, if we have such a large customer base running into several lakh borrowers, right, and each of them being a fairly robust income profile borrower, there are a whole lot of other financial services which are required by them, which are beyond loans, which we don't want to do, but we can certainly leverage on our client base to partner with other service providers to see how we can do it in a more focused, in a more profitable manner for Sammaan Capital. So that's broadly the lay of the land. Focus remains low to mid income. All loaning options are with us. All financial services options are with us, but those are in partnership mode.
So anything that you have outlined that you will look to enter, any new segments that you plan to enter, anything that has been outlined
it's
internally?
Too early right now because we are in a land where the regulator is being extremely proactive and is therefore evolving regulations very rapidly. So we don't know which product will have what kind of regulations behind it in, let's say, calendar 27, right? It's still 2 years away, so to say. Without regulations, to be able to go on the drawing board for any product is being foolish, right? So we will wait for regulations to evolve. We know these are the type 4, 5, 6 products that are there. How do regulations evolve? For example, there was a news article that I was reading that the RBI is considering that if a mobile phone is bought on borrowed funds, if you default, it can get locked, right? That's a game changer, right? Suddenly a product which is running at X% delinquency will run at delinquencies which will probably, in my estimate, will be not significantly different to a home loan delinquency. Right? Today, without your phone, you will feel as helpless as practically you will feel without a roof on your head, right? So why should the behavior be any different? Is that going to play out in the market? I don't know today. Will that regulation ever come? I don't know today.
So you were talking about that legacy book. I believe it's around 20 to 23,000 crore at this moment. So will some of these funds be used to write off the legacy book? To what extent can we expect writing off of legacy book to come in going forward?
So let's not go to whether we need to write off the legacy book or anything of this sort. There is a action into which we are firmly on the driver's seat, which is to recover, cash collect 10,000 crores in this financial year. We are firmly in sight of that number. We will do that number. As a result of that, the legacy book will shrink further, right? The second objective very clearly is by end of fiscal 27, I don't want any part of my balance sheet to be legacy or growth, right? It is all growth. So let's take each step of the journey and not try and run ahead of ourselves. The other clear message that I want to give via you is I'm fairly confident that for the new loans that we are underwriting, right, our annualized credit costs would be steady at about 100 basis points, right? We will, from the loans that we have technically written off, recover 5,000 crores. So between 10,000 crores of cash collections, incremental credit costs of 100 basis points, 5,000 crores of recoveries, equity capital, the right partner, I think we have all what we need to do a very good growth from here, right? Everything else will keep doing, that's technical stuff for which management is paid.
This 10,000 crore of recovery you're expecting, cash collections, 5,000 of recovery, and this 8,850 crore. For how many years this entire amount can be sufficient for the growth plans of Sammaan Capital, given that you have a target to reach an asset under management of 1 lakh crore by FY27? Will the company need further
goals? One sort of medium term, the other sort of long term that we are working towards as a team is fiscal 27, we want to get to an AUM of 1 lakh crore. Fiscal 30, we want to get to a profit of $1 billion, right? So these are two goals. We know what we have to do. We know when we have to do it. We have to look at regulations. We have to look at macro and keep on working out the fine details of whether our decision is right or it needs to evolve. But the picture is pretty clear in front of us.
Till FY30, no more fund infusions?
No more equity capital infusion. Debt we are borrowing every day. That's our raw material. That will, if you don't borrow on a single
nothing on
day,
the equity side. Nothing on the equity side till FY30. Right. Now, if you look at the first quarter, your asset quality did improve. But is there any pain point that you're seeing that could worsen this going forward?
Again, asset quality will play out in a range. So from wherever gross and net NPAs are, a range of 50 basis points can never be out of question, right? It can't be out of question for any lender, not for us. We have managed to maintain a fairly stable asset quality. If you look at the last 7 years through these challenging times, 7 years ago, the company's equity capital was 16,000 crores. Today it is 22,000 crores, right? Through this whole period, it's not as if we went and sat on a 15% NPA, right? So again, this is par for the course as far as execution is concerned. Do we have all the tools with us? We have all the tools with us. We should be able to maintain a reasonably stable asset quality.
Post this fund infusion, what does this mean for your credit rating? Are you in talks with the rating agencies? Can there be a couple of upgrades that we can expect?
So if we are targeting 150 to 170 basis points reduction in costs, we are assuming a very, very positive rating trajectory, right? And it's, for me, it's, there is no reason why with such a solid promoter, for a company which was AAA, it can't, without such a large conglomerate. We did have a promoter, but he was not a conglomerate at that time. With such a large conglomerate backing us, I see no reason why we can't go back there.
And any timelines on that? Anything that the rating agencies have indicated?
No, it's too early, and it's also immature to try and preempt rating agencies, regulators, etc. They will take their own time. We have a good case. We will go and present our case, and we hope for the best outcome.
And lastly, sir, any ROE target that you have set for the company for FY 27, 28, 29 or 30?
So 27 onwards, we should be a mid-teen ROE company, going up the trajectory, and then we will follow any classic financial services model. You go past 20, you dilute, and you bring it back. So on a longer term basis, we are a high teen ROE company.
Thank you, sir. Thank you for joining us and giving us the growth forward for Sammaan Capital. Well, that was the management, Gagan Banga, MD and CEO of Sammaan Capital.
Alright, then there you go. That's the word coming in from the MD and CEO of Sammaan Capital. But tell you what, with that, we're timed out on this edition of Markets at 12. Thank you so much for tuning in. You don't go anywhere because Profit Buzzers takes all of the action forward.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना, हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आप बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना, हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interest? Gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mystery
Hi, thanks so much for joining in. You're watching Profit Buzzers on NDTV Profit. My name is Alex Matthew and with me is Puneet Javeri, and we'll take you through the next 45 minutes of trade. All right, and it's a range-bound day of trade, pretty boring end to the trading week. Would you agree?
A little bit to say the least, but it's quite an active Friday for us at least. There are multiple key aspects, and that is something that's occupying our time today.
So, and that's a great way to put it, because if you look at the benchmark, it's just about treading water right now, very close to the flat line, about 0.1% or less than 0.1% lower, and you see that brief spurt above the mark, the flat line, and that was around 12 o'clock, and from there you've actually seen a bit of a cool off. But all told, between the high point and the low point of the day for the benchmark Nifty 50, it's less than 100 points. So after the big move that you saw on Wednesday, that was driven by banks, and after the RBI monetary policy, you're seeing a little bit of a cooling off in certain pockets. And of course, before Wednesday, you had 8 straight days of declines for the benchmark. Let's see where we go from here. But interestingly, the broader markets are seeing gains. You have pretty steady gains both for the mid-cap index as well as the small-cap index. If we can pull those up on the screen, 0.4% or so for the mid-cap index, and around that same mark for the small-cap index as well, as a result of which the market breadth, it's actually higher than that for the small, no, this is micro cap. Let's pull up the small cap 250 if we can, because that's more or less keeping pace with the mid cap index. And let's pull up the market breadth as well, because that will give you a perspective on how things have gone. And more or less, it's been a steady state for the last 2.5 to 3 hours or so. Sectorally, this is where it gets a little interesting, because you have the metal pack as a whole that's doing quite well. led higher by Tata Steel. You also have the defense pack that's doing well today. And there are newsmakers specifically, we'll get to that in just a bit. Realty index trading with cuts of about 0.7%, and the media index the worst performer on the day. But auto has been a sector to watch, and particularly, Puneet, after the volume picture that you saw at the start of the month, you looked at that very closely. What stood out to you?
Well, the key aspect is that 7 out of the 10 automakers actually beat estimates very handsomely in this particular month. And despite players like Eicher Motors, amongst others, that had over a 40% growth, they've actually come in slightly below the estimates. And hence, on the Nifty today at the start, we saw some pressure on that particular stock. To talk more about this, as well as what he's seeing on the ground, we're now being joined by Mr. C.S. Vigneshwar. He's the president of FADA. Mr. Vigneshwar, a very good afternoon to you, and thanks so much for joining in today. The mood seems to be buoyant, to say the least, amongst the auto pack, and that seems to be a lot of purchases which were delayed prior to September 22nd that seem to be coming in and taking those now. Is that something that you're seeing currently on the ground as well?
Puneet, to take from where you left, I think a lot of this demand is also which has been carried over from the last 40 days. But quite a few of it is actually has come in the last 10, 12 days in terms of inquiries, in terms of bookings, in terms of the retails we have done. We will be releasing our numbers in the next couple of days, but I think we are in for a very, very positive shock. It's fantastic. We perhaps have gone through our strongest growth in terms of Navratri, the first 12 days from whatever has happened last year to this year. We're going to see some really awesome growth. The dealers have been very happy about the kind of walk-ins. The customers are able to choose because we have a lot of vehicles with us, so the customer has a big choice of vehicles to pick up from. We've seen a lot of growth happen in the two-wheeler and four-wheeler entry-level segments too. So I think it's going to be a good run for the automobile industry for quite a few years to come.
Mr. Vigneshwar, we haven't seen barring a few players, a very, very strong growth. So it does signify that there's not been as much inventory filling for the likes of Mahindra amongst others, because they've shown low double-digit growth, and that seems to be currently what they are anticipating in terms of demand. Would you concur that there is not so much inventory filling that has happened in this particular month? And I know you will come out with your official comments in a very few days. Just some perspective if you can provide on that.
We don't have numbers for now. Probably we'll be having only in a couple of days' time. So I don't want to comment on it until I see the numbers and see the wholesales and the off-takes compared to what we have done in the retail. It's been quite high for the last 15, 16 months. And hopefully we're able to bring it down. Let's see how it goes.
And just one question on, the small car. You mentioned about, that segment also seeing some boost. We've had some positive commentary coming in from Maruti as well in terms of bookings that they're seeing currently in Tier 1, as well as in Tier 3 and Tier 4 as well, because that's almost what they've told us is 100% like-for-like growth compared to the same time last year. Would you say that post almost, 2019, this could be the first time that we are seeing a revival in that segment? Do you currently seeing that on the ground as well, that people who were on the fence have now come out and put those purchases, especially in the small car segment?
We have been having a lot of headwinds in the small car entry level and also in the two-wheeler segments, entry level again. A lot of issues, headwinds, a lot of challenges there. But this huge price cut in terms of GST cut, what GST cut has brought in, has been fantastic. And I think we've also been seeing ground level reality where people have been telling us, our dealer friends have been telling us that there's a lot of traction in the entry level two-wheeler and the four-wheeler segment, which is fantastic. I think the entry level segment is pretty much a barometer regarding how well an industry is going to perform, not only today, but 3 or 4 years from now, because these entry level segments would also come into a replacement in the 2 or 3 or 4 years from now. So it also augurs well for the future too, with the entry level being very strong. Of course, entry level segments have been quite timid in its aggression in the last few years. I think that's set to change.
Final question, Mr. Vigneshwar, from my side. What are you currently seeing in terms of rural versus urban picture? Because we've seen last 2 to 3 months actually being slightly subdued for the urban market. With this GST cut, we are seeing a lot of proactive moves from a lot of people who are looking to purchase the vehicles right now. But rural on the other hand are actually doing well in the last 2 to 3 months. What is that the trend that you've seen that both markets are now firing, or is that you're seeing some higher growth now on the rural side as and when this GST cut news has now been spreading across like wildfire to say the least?
In the decades gone past, we've always seen the urban market really outperform rural in terms of the growth projections. But in the last couple of years, we've actually seen the Bharat of India, the rural markets of India, really was the engine which was driving the auto industry. We've been having a lot of price pressures in our urban areas where the cost of the vehicles and the increase in salaries were not keeping pace with each other. With this cut, we have seen a fantastic growth, at least great reports about it. We need to see the numbers, as I told you, in the in urban India too, which is very, very important. We need the urban and the rural to work very, very hard so that we go back to our double-digit growths in the automobile sector. We have seen that the urban do really well in the last 12 days. We've also seen the rural market also do well. So I think these are good things to come. The auto industry should do really well. And as I've told before, that this is a GST reform, which is not only for a Navratri or the festive season or for the quarter, it's perhaps for many years to come. So we really thank the government for getting this done. And we hope we could make use of the opportunity.
Well, Mr. Magneshwar, thanks so much for joining in, giving us perspective of what you're currently seeing on the ground, and we'll wait for official release to talk more and continue this conversation. But thank you, sir, for joining us today. Well, let's move across and go across to some key stocks that are also in focus. PC Jewelers, Unimech Aerospace, as well as something like a V-Mart and Science Silk actually is in focus on the back of business updates. My colleague Anushi is now joining in to give us perspective on all of these. Anushi, take it away.
Well, a couple of these stocks are buzzing on the back of these, second quarter business updates that we are looking at. PC Jewelers, I'll start off with that. It's a strong set of numbers that we are looking at. 63% is kind of the revenue uptick that we've seen for this business in the second quarter. In fact, with this, they've also reduced their outstanding debt by around 23% on a YOY basis. This is again in the company's line to become net debt free by the end of this fiscal. Now, coming to Unimech Aerospace, on the other hand, it's a weaker set that we are looking at. In fact, that's the kind of outlook that the management has given, wherein they're expecting that they'll continue to see a slowdown in terms of revenue for the second quarter as well. In fact, the revenues for the second quarter would be marginally lower than the first quarter, and they may in fact not be able to meet their FY26 revenue growth guidance of 35 to 40% as well. What's also interesting is the kind of impact that this, the kind of impact the US tariffs are playing on the export business of the company, which is the primary key driver of the growth of the business. Now, coming to V-Mart Retail, if you look at that, total revenue if you see was up around 22% at 807 crore. In fact, the same store sales growth has also seen a healthy uptick of around 11%. The company also opened 25 new stores, bringing their total headcount to about 533 stores. Last one on the radar is Sai Silks, and this is even Kala Mandir. This is here the revenue was up around 28% at 444 crore, while revenue was up around 34% in the first half of FY26. The company is planning to expand its presence with 10 more openings expected going forward.
Well, thanks so much for that, Anushi. But, we're now being joined by Mr. Tapan Doshi. He's the research analyst at catapan.in. Tapan, very good afternoon to you, and thank you for joining in today. Let me ask you on a couple of consumption plays essentially. One's of course V-Mart. They've come up with a strong Q2 update, and I think if my memory serves me right, they were just 1% same-store sales growth last quarter. It's gone up to 11% now. Your view on this one, as well as something like a Science Sale Kala Mandir, do you think that's a proxy play to play the consumption theme as well?
See, when we talk about, first of all, thanks, Puneet. When we talk about V-Mart, they've done a good numbers this time. If you see, they are growing in tier 3, tier 4 towns also. Again, the main thing, they are growing through omni channels, plus digitally also they are quite focusing. Of course, you can see the inventory issues are there, but I think they are going to resolve that over the time. And if you see that sales growth, LLF, almost will be there around 5 to 10% around. I think overall, because they are going into tier 3, tier 4 city, they are going to expand their store expansion. No, almost 500 more stores they have. So looking at the valuation and all that, still, of course, it is almost down by 30-35% from the top. I think room is ahead from here also. I think it may go up little bit. And overall, I think consumption boost will be there. So I think V-Mart retail will be beneficiary. So I think anyone is having that stock, they can hold it. And regarding Sai Silk, of course, Sai Silk, if you see, no, they also had a very good number. And I think from here also they may do well because no overall consumption pattern and overall the products they had a good demand. If you see even the management comment all looks good. So I think here also I think maybe 15-20% growth may be there on the price point of view. I'm talking about stock price. So anyone having that stock also they can hold it.
Okay, all right. Got that view. Let's talk about an interesting brokerage note that has come through though, and this is Goldman Sachs. It's posted a report which dives into the outlook of some of the most prominent players in the defense space. And you know that this is something that has been a key focus area over the course of the last year and a half, in particular as indigenization in this space gathers momentum. What are the opportunities according to Goldman Sachs? Let's bring Anushi back to tell you. Anushi, what stands out about this report?
Well, it's quite a big list that we are looking at in terms of, Goldman Sachs top picks. First of all, I want to see, what is interesting particularly is the notes target prices in comparison with PTC Industries and Solar Industries that we are looking at. Solar Industries, they're seeing more than a 30% plus of an upside, and PTC Industries, it's a 54% of an upside that they're seeing. Now, why is the note so bullish in terms of these two companies? Now, here they're saying that ROE for PTC Industries is expected to improve by to 30% by FY28. In fact, if we look at the valuations also currently around 300 times the kind of valuation multiple that they're seeing, which will significantly cool off by FY28, and seeing that, the company's titanium complex that it has would be commissioned by the end of this FY26. So this would bring opportunities for the business. In fact, when we had last spoken to the management, he also said about a 10 to 15 times of growth in terms of where the revenue is concerned by the next 5 to 7 years. So solar industry, they say that it has best assets in comparison with its peers. Even its ROCs, that's the return ratios, are better than the comparable peers. Quickly walking through a couple of these electronic warfare opportunities. Bharat Electronics and Astra Microwave continues to remain the picks. They've initiated a buy call on both of these counters as well, saying that the diversification in Bharat Electronics would offer any downside support as well. However, they have a neutral rating on Hindustan Aeronautics. There had been a couple of execution challenges in the past, which the management now acknowledges is behind, but they'll continue to watch out for these executional challenges, which will offset the attractive valuation the company currently trades at. While for Bharat Dynamics, they have a sell rating. They've initiated that kind of a rating, considering that the valuations are currently steep, but the execution is something that they'll continue to watch out for. So that's the overall picture that we are seeing from this Goldman Sachs note for defense stocks.
Got it. And indeed, this entire pack is doing well. If you look at the index as a whole, it's up and about the second highest gainer today. And take a look at those constituents, barring a couple, and Unimec is down for various reasons. It's clarified that its revenues are likely to have a downside risk in the near term on account of those tariff issues that are currently plaguing various sectors. But beyond that, you have Data Patterns, Astra Micro, all of these are doing particularly well, Paras Defense as well. Tapan, the only concern is valuations at this point, and how long you will have to hold some of these stocks in order to get a bang for your buck, right? Because if you missed the rally so far, should you still go ahead and buy? And if so, what would you suggest?
Thanks, Alex. See, if you see defense, it's a mega trend. It's a 5-year, 10-year trend. We cannot check it for 6 months or 1 year because the profit booking will be lumping. The revenue recognition will not be same every quarter. So one has to keep that in mind. And again, the best thing, what is happening in last 2 months, I have seen the big orders are coming to all these companies. And again, they are working on the backward integration because that is where, all these companies were facing an issue on the execution part. If you see, HAL, BL, they were telling that, some of the main components they are not receiving on time. And if they work on the backward integration for next 2-3 years, and they are able to, like for HL, it is GE engine. Okay, so if they are able to work on that, no, I think the execution will be much better. They have an order book of almost, most of the companies have more than 2 to 3 times of the annual turnover. So order book is not a problem. The main thing is the execution and how they are able to increase their capacity as fast as possible. So one has to, whenever they, if we want to invest, we have to see which company is able to increase their capacity, and again, working on the backward integration, that will help to increase their margin also. But looking at the current scenario, I think HNBL are working on that part, even Mazagon. I think these are the stocks one has to keep in mind, a safe stocks, and for next 5-10 years, I think it may give a very good return.
The view, Tapan, but another space that's in focus is actually realty, because one of the key factors was Morgan Stanley expecting a stronger Q2 for the top developers, with Godrej as well as DLF leading the pack. Meanwhile, Delhi's property rates may climb as the government moves to revise the circle rates as well. Anushi is back with us to give us some more perspective on both of these aspects. Anushi, over to you.
Well, it's an update that we should be continuously tracking in terms of what's happening with the NCR market in terms of property rates. Now, what they're saying is that property rates in Delhi may see an upward revision, and these circle rates are, minimum property valuation rates in any given area. So an uptick in this is something that we should anticipate, considering that this would be applied towards the premium housing development societies as well. Now, here they're saying that this move is to bring the overall circle rates closer to prevailing market prices, and Delhi government has so far asked public suggestions and views on the same. So they are looking for around a 20 to 30 days of timeline for considering increase in property rates. Revisions are expected to impact property transaction across all categories that we are seeing. This encompasses affordable mid-income, as well as even the luxury side as well that we are looking at. The last revision was in 2008. So something in this space that we should be watching out for. Just recently we had seen Karnataka upping its property prices, as well as MMR just a few months back had increased their ready rates as well. So this is one area that we should be watching out for. Now, key stocks in focus here includes the likes of DLF, Signature Global, and Antraj, which have a higher presence in the NCR market, while Godrej Properties, Max Estates are also some of the other counters that we should be watching out for. Now, coming to Morgan Stanley's note in terms of what's happening with the real estate, they're mainly highlighting the Q2 expectations on what it can be. They're saying that, the Q2 trends continue to remain on the brighter side. They're not weak, but despite seasonality weighing in the second quarter, they expect top 5 developers to register Q2 pre-sales of around 11,000 crore, which is a 44% of an uptick that we'll be seeing. For second quarter, they see that Godrej and DLF will report stronger pre-sales, while Lodha and Oberoi could disappoint, given that there were no new launches that they had announced so far in the business updates also that we've seen. So this is the overall picture that we are seeing for the second quarter for these real estate stocks.
Well, thanks so much for that, Anushi. But Tapan, your top picks in the real estate space?
See, real estate, if you see the last quarter, there was a talk that the prices are coming down and all that. And that's why we have seen little bit correction in the real estate stocks. But if you see, I think I'm also convinced on that part, that I think Delhi side will have a uptick little bit. And that is where, if you see DLF and all that, a major role. And if you see their pre-sales and all that, that is doing quite well. And most of their scheme, what they are launching, it has been sold within a week or 10 days. Even in Mumbai also, they launch, it has gone fast. So I think some of the segments are there, like in reality, I think you can say the higher segment, I think DLF is my choice. If you talk about affordable housing, I think Prestige Estate will be my choice. See, overall, if you see the cement prices are coming down because of GST. Of course, we can say that price hike has happened and again they are cutting it. But I think GST cut will benefit lowering the cost of construction also. That will improve their margins overall. So maybe from December onwards, next quarter onwards, things may change. And I'm hopeful that as the interest rate goes down, the affordable housing will pick up. So yes, DLF and the other stock, Prestige Estate, will be my top 2 choice.
All right, so that's the view on the real estate space. By the way, Union Finance Minister Nirmala Sitharaman has warned about intensifying geopolitical conflicts and sanctions and tariffs, which are reshaping global supply chains. And she was speaking at the Kautilya Economic Conclave recently, and She effectively spoke about India's resilience in the face of all of this. Listen in.
Geopolitical conflicts are intensifying. Sanctions, tariffs, and decoupling strategies are reshaping global supply chains. For India, these dynamics highlight both vulnerability and resilience. Our capacity to absorb shocks is strong, while our economic leverage is evolving. Our choices will determine whether resilience becomes a foundation for leadership or merely a buffer against uncertainty.
All right, that's a word coming in from the Finance Minister. It's time now for a quick break on the program, but on the other side, we bring you Karan Virvani, who is the Managing Director and Chief Executive Officer of WeWork India, live from our BKC studio as the company's IPO opens for subscription today. It's one of the IPOs to watch this week and next, of course. Stay tuned for that. We'll be back before you know it.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख।
60 लाख? अरे इतने में तो लग्जरी कार आ जाती। शौक मत हो, सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Welcome back. You're watching Profit Buzzers right here on NDTV Profit. But let's quickly pull up how Nuvama Wealth Management as a stock is doing, because the company is in focus today. Because we have seen actually the stock being up 3.2%. But let's look at the YTD performance as well. You could see that there was some pressure on Nuvama Wealth once the Jane Street crisis had happened. We saw that correction on the stock from the highs of about 8 to 9,000 the stock was on. But it's in spotlight today because SEBI has actually granted an approval to the company to act as a sponsor and set up the proposed mutual fund arm, Nuvama Mutual Fund. My colleague Vansh now joining in with all the details on this one. Vansh, over to you.
Yes, Puneet, thank you for that. So as you rightly mentioned, now the company has received approval from SEBI to act as a sponsor for the proposed Nuvama Mutual Fund. Now this will enable the company to set up Nuvama Mutual Fund and will further allow to launch schemes under the mutual fund category, including those similar to the SIF category as well. Now this will further allow the company to enter into a new revenue stream, and the mutual fund will further strengthen the bands in the retail and the institutional investment segment as well. The company can launch various schemes including SIFs offering diverse investment products for the company, and also it will enable them to increase AUM and their client base over time. They have also joined they will also join other financial players in the high growth mutual fund industry through this as well. So this is how the overall picture is looking like for Nuvama Wealth.
Got that, Vansh, but stay with us because a bunch of banking names are actually in focus post their quarter 2 updates as well. Capital, SFB, M&M Financial as well as CSB Bank is in focus. What are you picking up?
Well, yes, so let me firstly start off with the Capital Small Finance Bank. Now, the bank has reported a healthy credit growth and steady asset quality. If I talk about the gross advances are up 17% on a year-on-year basis and 6% on a QOQ basis as well. The total deposits are also up 19.8% on a year-on-year basis and 2.3% on a sequential basis. Lastly, the gross NPL remained flat for the bank at 2.7% on a sequential basis as well. Second is M&M Financial. Now, a muted set of disbursements from the company. They estimate the Q2 disbursements with a growth of about 3% at 13,500 odd crores. However, the H1 FY26 disbursements were up 2% at 26,300 odd crores. And in terms of the Q2 collection efficiency, they are estimating at 96%. The efficiency at 96%. Third is CSB Bank. Now again, a strong set of business update from the bank. There has been a strong growth in the deposit and advances for Q2. In terms of the total deposits that are up 25% at 39,650 odd crores, and the gross advances are up 29% at 34,700 odd crores. So these are some of the business updates which are to be kept in focus.
Well, thanks so much for that, Vansh. But I'm also being joined by Akshay P. Bhagwat. He's a Senior VP, JM Financial. And we also have Tapan along with us still as well. But Akshay, let me come across to you first. Anything on the charts that suggests any move on a bunch of these banking names, M&M Financial, Capital, SFB, CSB Bank, amongst others that have come out with Q2 updates?
Good afternoon.
I've been going through the charts of both these companies, and the banks which we discussed on the show right now, they are more open for a short-term trading bounce back from maybe a month's perspective. First of all, Capital Small Finance Bank, which is currently trading around 286. It has recovered exactly from its weekly support base at 275, 280 zone, and this bounce back can see the bank showing a trading pullback right up to levels of 310. So it's a trading pullback which you can look forward to till 310. And as far as M&M Financial Services goes, a similar kind of a technical setup where again more of a trading pullback in this script, maybe 3-4% up from a trading perspective, but really from a longer term buy and hold kind of a scenario, nothing concrete is coming up on the technical charts as yet. For trading, yes, one can look forward to buy from a short term trading perspective.
Got the view, Akshay. Tapan, your view with the recent RBI monetary policy also that will benefit the bigger banks. Do you have any preference within the large cap ones and the mid cap banks? Is there any preference where you would put your money right now?
See, yes, no, even though RBI policy, there was a halt on there was no rate cut as such, but no, some of the steps they have taken will benefit banking sector as a whole. No, of course, the IPO one and also, no, M&A, they can fund it. So, of course, it will help the large banks. And in large banks, I think ICICI Bank is the one, no, which I prefer, no, because the way they are able to maintain their ROE, at a upper side, no, it's quite good. And they are seeing the double-digit growth, at least, for next few quarters also. See, yeah, if you see the private banks, like other banks, they are not able to even see double-digit growth. Here, I think ICICI Bank is seeing that. And I think from here also, as the interest rate cut will happen in coming quarters, it will benefit them. Even in mid-size, I think another bank I prefer is that Karur Vysya Bank. That is also a good bank. No, there also management is quite aggressive. They are working on their ratios, and at least they are saying that their ROA is going to improve massively over the time. NP is in a control, and I think because the stock has come down little bit, I think it's a good level to enter also. So I think yes, ICICI Bank and Karur Vysya Bank will be two banks which I prefer.
Got the view, Tapan. But very interestingly, the room air conditioner space has largely been in focus because we got the notification last week, and a couple of channel checks suggest there has actually been a 25% growth in the air conditioner market. Now, that's one of the key numbers to watch. The other one is that the northern Indian market actually has seen over 100% like-to-like growth compared to last year, which essentially means that the western and the southern market, which have been experiencing very high rainfall at this particular point of time, has seen actually flattish growth in the AC segment. So it's the growth that's largely driven by the northern Indian belt. And there are a lot of companies in the AC space that do get that benefit, but there's also the EMS companies that come in focus because of that. We spoke to two of them. EPAC Durable is the first one. They're looking at a 10% growth in FY26, and they've ascertained that roughly 5 to 6 weeks of inventory got cleared out in just the first week of starting September 22nd, led by GST cut on ACs as well. And that's the word coming in from CEO Ajay D.D. Singhania. Let's listen to him first. We also caught up with the management of PG Electroplast as well.
We were expecting a best case of a flattish kind of a year. I think now we are definitely looking at a growth of 10% for the industry. And then overall next year, 15-20% growth earlier from, there's definitely an upward trend in everything we are planning currently. And I think that's the kind of energy this has brought to the industry.
Plus, we are very much convinced about the long-term demand trend for all the consumer durable products that we manufacture. We have not changed we have not made any major change in our capex plans based on the sluggish demand for the last summer season. We are building our capacities, we are building our capabilities, we are going ahead with our capex plans. So we are not holding it back, and we are hopeful that the market should grow well in the near term.
Akshay, let me come to you first because we've seen the AC plays actually largely react a little bit over the last week on this particular news flow. Your view on the larger pack as well. Give us your view on something like an EPAC, PG Electroplast. We've also seen some strong moves on Avalon Tech as well. So any in the EMS space that you like currently?
Well, see, most of these the stocks in this space are still in a range bound or a neutral setup. If you look at EPAC Durable, 320 and 400 is the range, which is pretty evident from the last 3 odd months. Still there is no technical concrete evidence about any breakout happening in any of the names which you mentioned. They will kind of move on basis of some short-term news, but clearly there is no strong technical evidence as yet which is suggesting of any possible strong breakout which can propel the stocks further high.
And Tapan, do you concur with the view, or do you view this particular update on ACs largely being positive for both the consumer discretionary plays as well as the EMS companies? And do you have any topic from this one?
See, if you see this sector, no, overall, it will be benefited through the GST cut also. And I think the Diwali season, overall, the volume should go up. Of course, Blue Star and Voltas, we know that last quarter results were not good. And they told that because the summer ended quite early, that was the reason they had lot of inventory. Now it is little inventory clearing out. But what I feel now, we are already coming to October, November, then again Jan, Feb. I think again the season will start, summer season around Feb, March. So from here, I see little downside for these stocks from here, and I think it may move up from here again. Actually, these stocks are gone down a lot. PG, even a Blue Star or Voltas. I think this comes at a very good entry level if someone wants to have a 1 or 2 year view. So I think all three, I think Blue Star, Voltas or PG, I think at every dip or at this level, one can start investing like a SIP manner. I think next 6 months, 1 year will be good for all these companies.
Got the view, Tapan. And when we spoke to the management of PG Electroplast, they largely maintained that view that they had cut their guidance post Q1. They're not revising it yet, but seeing a positive growth momentum to say the least. But time for an NDTV Profit exclusive now. Acquisition financing may get the green light, but with conditions. The financial sector acquisitions were largely remaining barred. But let's get my colleague Vishwanath to give us perspective on all of this aspect. Vishy.
Yeah, so if you were to look at what the actual monetary policy decision was, I had been saying it since that day, but that was just a sideshow. The main focus was, of course, the norm changes that the Reserve Bank of India is bringing in, 22 specific norm changes. Now, yesterday we did talk about how the regulatory changes came in as far as the large exposure framework, as well as the draft guidelines for NBFC's forms of business, how those came about. What we're telling our viewers today is about acquisition financing. That was one of those key measures that was announced by the regulator, that Indian banks will be allowed to finance acquisitions by Indian corporates. This is something that they were struggling to do earlier. Earlier, of course, a foreign branch of an Indian bank could still do that. However, domestic lenders were not able to do that, partly because of the large exposure framework, but partly also because the regulator was not in favor of allowing leverage buyouts in India. So now, of course, it seems that things have eased up. What we are learning from our sources is that this was actually led by banks going to the RBI and lobbying for the rights, because they were seeing that their key corporate clientele was going towards private credit, and private credit competition and the intensity of the competition was too much, and banks were seeking a way to get into this space so that they could also start lending towards good quality, high pedigree clients wherever they needed any kind of financing for acquisitions. Of course, guardrails still exist. What the new norms are likely to see are very strong guardrails in place so that banks don't over leverage themselves. They also will have to follow internal lending norms. Remember that a bank is only allowed to lend up to 20% of their capital base towards a single corporate. So that will still apply. When it comes to investments, that number goes up to 40%, but that's inclusive of the 20% in lending. So you have an upper limit on the investment side as well. So even if they want to structure a deal with some amount of investment into the corporate rather than just a direct loan, they can do that, but those will be within specific rules so that Indian banking system is not ending up too exposed to a key corporate buying out its competitor.
Well, thanks for that, Vishy. But let's stick with the banking space, because Morgan Stanley had actually written an overweight rating note on Axis Bank, raising its target price to 1,450 rupees per share. They've cited strengthening turnaround story for the company going forward. Let's get my colleague Somit to join us with more details. Somit.
Now, if you look at the Morgan Stanley note that has come on Axis Bank, they have maintained their overweight rating and have hiked the target price to 1,450, which suggests a return potential of over 23-25% from the current levels. Now, the brokerage is saying that the bank has taken significant additional steps over the last 1 year for this turnaround, and these steps that the bank has taken should see traction going forward as the macro environment or the macro climate improves. They're also expecting the bank to see a re-rating relative to the other large private banks, but this could happen in a gradual manner as per Morgan Stanley. They're expecting the trends in all the three important key growth drivers, that is net interest margin, growth and credit cost, will improve from the current levels and will turn much more positive compared to what we have seen currently. And they're saying that the extent of recovery for Axis Bank is clearly linked with the pace of macro recovery, which they're expecting to be good enough. When it comes to Axis Bank, they also believe that the benefits of the bank's strategic decisions that they have taken over the last 3 years will start to show result over the next couple of years, and that should be taken positively by the street. And however, given the fact that it will be a gradual recovery, till then they're expecting the bank's valuation gap to other private players would continue to remain. And they also believe that the key drivers for structural re-rating will be narrowing of retail deposit growth, differential with the private banks, and higher loan spread, better loan spreads versus other large banks is something that will be key positive and could lead to a structural re-rating for Axis Bank going forward.
Well, thanks so much for that, Somit. Akshay, let me come to you on a bunch of these names that started to, move because of that. We saw HDFC Bank, HDB Financial also had a reaction that they, and Axis. Can you give us a view on if any of these have some buying potential from your own?
Yeah, definitely. So Axis Bank is one potential candidate based on price volume reading, but this is more of a positional buy and hold with minimum 6 month plus kind of an outlook, because if you look at the price charts in the last 4 months, there has been choppy trades. It's been range bound, consolidating in the range of 1050 and 1200 roughly. But the sense which I derive is it's more of a sideways triangular pattern, which we call in technicals, where it's more of a consolidation phase, which sooner or later should give out in form of a positive breakout. So right now it's more of a neutral setup, which may extend for a couple of more months, but eventually the broader setup is positive, and with an investment horizon you can possibly look forward for potential targets till 1400 plus with a support or a stop loss below 1000. That is the view on Axis Bank. And for HDFC Bank, this bank has been rock solid, but it's been more of a slow mover, but the broader technical setup is positive. There is a strong support zone at around 940 odd zone. And eventually, I think this bank should again stage technically a recovery from the current levels, where 1000 to 1020 can be the upside trading targets on 1 to 2 month perspective.
Got the view, Akshay. But Akshay as well as Tapan, thanks so much for joining in, giving us perspective across a bunch of sectors and spaces to watch. But viewers, we have a very interesting conversation that we also teased during the break as well with WeWork India's management. Mr. Karan Virwani, the Managing Director and CEO, is joining us right here in the studio as well. Mr. Virwani, thanks so much for joining in today, and many congratulations firstly on the IPO. Let me first start off with why the particular IPO at this particular point of time, because you all have been doing a lot of desk additions over the last few years that has been doing very well. You're very close to being profitable as well. You were in FY25.
Yeah.
Any rationale of choosing the IPO at this particular point of time?
Firstly, thank you so much for having me. I think over the last 8 years, if you see our entire segment, not just WeWork, we've grown what is now known as the flexible workspace segment. It's becoming a larger part of commercial real estate, but still at the very early stages of its entire growth trajectory. It's a sunrise sector, within the real estate space, and in the last 5 years, especially post-COVID, we've seen a lot of adoption from some of the largest companies in the world to some of the best startups, mid-sized companies. And as WeWork India, in that time, we've really grown the business to become now profitable. We're generating, we've grown revenues at a CAGR of 20-25% year over year. And we've reduced debt also. As of January, we did a rights issue into the company, which was actually at a higher value than even the IPO that we're doing right now. That has made the business extremely stable, self-sufficient, in an industry and leadership position in an industry that's growing drastically, and so the IPO seemed like the best thing to do right now from a perspective of being able to create value for investors once they come on board, the ability for us to continuously go on this growth plan and continue to keep our leadership position, and then finally, I think that our business will always require capital because we invest in capex, and this gives us the ability to access the cheapest form of capital, which will come and show itself in your return on equity and finally return on capital itself. So for those reasons, this is why we decided to do it. I think also as Embassy, which is the promoter and the parent business, has invested almost 1,500 crores in this company. WeWork Global has invested close to 700 crores into the company. And this was all at a time where the business was extremely risky. Everyone thought the business model and the business was dead. So now, by being able to do this, as Embassy at least, we can take some of that capital back, strengthen the rest of the group, strengthen the other platforms that we have, and just focus on growing a good business.
That's interesting over here. A quick follow-up, Puneet, I want to take over here is we spoke about the profitability in FY25. First quarter of FY26, the company has incurred a loss to an extent. Want to understand your overall outlook. Will you continue the profitable trajectory, number one? And two, a revenue growth of 17 to 20% is what we've seen in the first quarter. A sustenance of 60% margin profile. Is this combination a possibility?
Yeah. So there's an accounting standard, the India's accounting standard, that impacts our business, in a heavier way because of the way leases are accounted for within India. So you will see that in the EBITDA, which is 63%, like you said, the reported EBITDA, it doesn't take into account the lease costs, right? So the way that we view the business is really, obviously, after all of those expenses, it's a major part of our expenses. So the adjusted EBITDA number is what you really need to look at, which is roughly about 22% or as of last year, 420 crores. Now, in the same light, because of the adjustment of the leases, in the reported numbers, you will see this loss, that the business has. It's not actually a cash loss, but it's the reason is because the leases get treated almost like a liability, and upfront there's a lot of depreciation and interest cost that gets hit on the book. So every time we're expanding and bringing on new centers, the first few years you'll see a heavier hit on the books, which will show this sort of loss. But from a IGAP or even from a cash perspective, that's not the outflow that the business sees or the profit that the business sees. The business actually has been profitable for the last 3 years on an IGAP basis, or really how we look at operating the business, cash in, cash out. That's kind of pretty much what we are looking at. While Q1 has shown you small losses, if you see from the previous quarter, it's down almost 60%, quarter from year over year. And we believe that even through the accounting hit, with the way that the business is growing, the cash flows and the profit margins, we will show profit in the coming quarters continuously.
Okay.
And sustain the revenue growth rate that you're seeing.
Okay. To add to that, let's add the occupancy bit as well, because when you talk about the June 2025 number, your occupancy rates have fallen if I have to compare it to FY23. I think from 83-84%, it's come down to around 76%. Now, this is somewhere telling you that the desks are vacant somewhere, right? Will this directly then impact your profit margins, or won't it?
Yeah. So FY23, if you see, we had roughly about 60,000 odd seats. Today we're sitting at close to about 114,000. Last year itself, we added about 27,000. Predominant 16,000 of that happened within Q3 and Q4. So the way that our business model works, there's a ramp-up period. It typically takes us 4, 6, 8 months to fill up centers. So what you're seeing in Q1 is just a moment in time occupancy because of the expansion that we saw last year. You'll see across most of our portfolio that within 12 months we take the centers up to about 80-85%. We've done that over the last 7 million square foot, and this expansion is of 1 million odd square foot that came in the last 2 quarters. In the next quarter, we're already seeing that, occupancies have now come back up. And this will continuously actually keep happening depending on center addition, and new inventory expansion as we keep growing. Just sorry, a pointer note on this is that FY24, we had an average occupancy of about 80%. We delivered 20.4% EBITDA margins. Last year, we had a slightly lower occupancy, 76% on average, but delivered a 22% EBITDA margin. So there's clear margin expansion in the business, even as we're bringing on all of this excess capacity or bringing on fresh capacity today.
You mentioned that, at the start of this year, you had a rights issue as well to the fund. And while there was a higher valuation compared to the IPO, were the investors okay with this particular valuation that you're going with at this particular point of time? Because we've seen a flurry of IPOs as well, and some in your space as well. So what has been the conversation regarding the valuation at this point of time?
Yeah, look, we went through an extensive book building process, and actually if you see the anchor book itself, today we have some of the top, domestic, so iPru to HDFC MF to Moti to, Access, all 360, all of these are really large names and a very high quality book. And also foreigns like Goldman, Amundi and ADIC also, who have now joined the cap table. So that is what we wanted, a very high quality book. And if that meant doing it at a slightly lower price than what we did recently, we're completely okay with it, because to us, there's firstly already a lot left on the table. And we think that in the next few months or the next few quarters, this won't matter. For everyone will get to make money, and everyone will see some upside for sure.
Okay.
No, go ahead.
Okay. So with the upside that investors are watching out for, I mean, that's why it's an OFS for 3,000 crores already. You've not considered a fresh issue at all.
Yeah.
So is it that the company has sufficient funds to meet the further capex demand that could be coming in and cater to the debt, or what is the plan on that aspect?
Yeah, it's exactly that. So after the rights issue, which we did in January, we used all of that capital to pay off a huge chunk of debt, which has freed up cash flows. And as you know, as of last year, we're delivering EBITDAs of 420 crores post all expenses. So with the reduced debt and now the cash flows that the business is generating, we actually have more than sufficient capital to keep growing on this 25,000 desk addition that we have in mind, and service the debt that we have also. We also are able to really access quite cheap capital, cheap debt, moving forward as well. Today, our cost of capital will be, in the 10% range. Hopefully, after the IPO, that comes down, even further. And so we will balance internal accruals with some, small amount of debt, and just keep managing that as we continue to grow.
When you're adding desk, you're almost at 114,000, as you mentioned, and that has been a steady increase since 2017.
Yeah.
And I see that you're in some key cities, Bengaluru, Mumbai, Pune being the top 3.
Yeah.
When you're adding a desk, does it matter of which geography it is in terms of cost, and does it matter in terms of break even of that particular desk? How long does it take, essentially, in terms of geographical expansion?
Yeah, it's a great question. So our presence and our growth is largely try to follow demand in the country, as a whole, commercial leasing demand. 95% of that happens within the top 8 cities itself in India. Bangalore accounts for almost 35 to 40% of all commercial leasing. Mumbai, Gurgaon are some of the larger markets. Hyderabad is becoming a much larger market now as GCCs move there. So our focus is to grow deep within these. Now, in terms of the product, we deliver a pretty standard product regardless of the city and the pricing. There will be some tweaks, like a BKC location will be slightly more premium versus maybe a location in Chennai where the pricing is low. We don't spend as much, but overall the experience is the same. The pricing does have an impact on how quickly the capex gets recovered, right? And today we have buildings that are priced at 12,000 going up all the way to 60,000. So On average today, our return on capex is roughly about 35%, which means within 3 to 4 years at the most, we're recovering all of the initial capital, that's invested in the asset.
Okay. With everything said and done, I think we've just gotten a story wherein an investor has flagged disclosure lapses and there is SEBI inaction is what they've indicated. The hearing continues in the Bombay High Court as we speak right now.
Yeah.
What is it that you would have to say? Because the allegation is on material non-disclosures and regulatory inaction, misleading statements and significant omissions, and it says concealment of a criminal charge sheet against promoters. What would you want to tell investors?
I mean, all I would say is that we've been through the most extensive approval process when it comes to SEBI. We have disclosed not just what we needed to from a regulatory or law perspective, but we've actually gone over and above that to disclose. And this is really like some pressure tactics that we have from, certain business that has an issue, not just not with WeWork, with the Embassy REIT, which is where, this issue has come up. And just because we're going IPO, they think that, by doing this at a vulnerable position is going to have some impact on us. It's not. As a company and as WeWork, we are the squeakiest clean type of organization.
So what's your argument to it in the court right now? Because there is an advocate who is representing WeWorks as well. So what is the argument that you have, number one?
There's no argument. We've made all the disclosures that we need to, and SEBI has gone through its process and given us the approval. And
so if anything negative comes out of this in terms of the hearing, is there a possibility that they could stall the IPO?
No, we don't see anything negative coming out of this. This is just a way to have some bad publicity or like pressurize us, which is not going to happen. And we are in a great place. We're very confident about the business, the growth, and we've done everything that we needed to do.
Absolutely. And this really helps an investor or a viewer when that clarification comes in from the promoter, when stories like this do come up. But thank you, Karan, so much for joining us on the show and giving that clarification to the viewer as well, that everything stands solid, strong. That is what Karan is indicating right now. And I think this is the clarification that all investors would want to hear from the horse's mouth as well. But completely out of time. With that, it's a wrap on this edition. Please stay tuned to NDTV Profit.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other. What was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
अरे और रहमान
सोनू निगम के लिए जोरदार तालियां.
presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro.
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers. Before we talk about a bunch of stocks which are buzzing in trade today in the small and the mid cap space, let's do a quick market check in terms of what's happening with Nifty 50 and Nifty mid cap and small cap 250 as well. We are seeing flattish moves currently. Even in the broader markets, we are seeing this playing out as well. But a couple of stocks which are buzzing in terms of higher volumes. Let's just address some of those counters. We are seeing stocks like V-Mart buzzing along with Kala Mandir. This is on the back of strong business updates that we are seeing. Other active stocks includes the likes of AA Tech, Atlanta. Atlanta is locked in on 20% of an upper circuit today as well. And this is after they have signed a JV with Ircon International. It's a substantial one considering that its market cap is around 300 to 400 crore as well. Orient Tech is another stock which is also buzzing stronger in terms of volumes, and even in the last session also we had seen similar moves coming up for this counter as well. But let's address the stocks that we'll be talking about, and the first one on our radar is something like a Sai Silks. And to talk about what's happening with Sai Silks, the kind of business update it has, once joins us with more details.
Well, yes, thank you for that, Anushi. Yeah, right. So the stock has, the company has come up with the Q2 business update. Now the revenue is up 28% at 444 odd crores versus 347 odd crores. And in terms of the H1 FY26, the revenue is up 34% at 823 odd crores. Also, the company is planning to expand its store presence with 10 new openings. And if I talk about the details of the business of the company primarily operates in apparel retail space, particularly in saris, and they operate under 4 differentiated brand formats which are well known, like Kala Mandir, and Kelam Fashion Mall, etc. Also, if I talk about the Q1 FY26 financials, what really stood out was the net profit. That was at 30 odd crores versus 2 odd crores. And also in terms of the Q1 highlights, we saw that the margins more than doubled The finance cost was down by 18%, and the average order value for the average order value was stood at 4,900 rupees versus 5,100 rupees in Q1 FY25, and the same store sales growth stood at 29%. So this is how the overall picture is panning out for Sai Silk as well.
Okay, well, thank you for that, Vansh. But with that, let me welcome in our guest for today, Avinash Gorakshekar, Director Research of Profit Mart Securities, joins us. Hi, welcome, Avinash. I want to start off this conversation. We've had a couple of strong business updates in this session. Sai Silks is the one which has seen that kind of an uptick today in terms of, what it has done in the second quarter. Just want to understand your view regarding this.
Yeah, I think numbers have been much stronger than what the street expected. I think, the markets would be looking at possibly stronger traction in the second half also, because hopefully in the festive season, volumes also go up. But I think in terms of margins, in terms of, the sales growth for the store growth, I think a 28% growth is definitely commendable. And I think the markets would obviously look at what kind of commentary the company would like to give for the second half or for the next, few quarters. Because this is a newly listed company. I think, this is a business where typically volumes obviously take off during the festival months. So I think we're definitely positive on the stock, but we need at least a couple of more quarters of consistency. In the past, the company has not delivered consistent numbers. And to that extent, I think in this upside which you're seeing in the stock, maybe in the next couple of days, we could see a little bit of profit booking. But yes, definitely worthwhile to hold on for the next 6 to 12 months.
Okay, so that's the view for Sai Silks. But with that, let's bring in the management for board. And this is S-Chan Group that we are talking about. Saurabh Mittal, the group CFO, joins us today. Hello and welcome to the show, Mr. Mittal. Let me start off the conversation by understanding the recent developments that are taking in context. You've decided to hive off your printing business, and this is via slump sale consideration that we are looking at. Just want to understand on this overall consideration, considering that it was about a 21% of a contributor to your business. So what's the kind of picture that we see forward for this particular segment?
Yeah, so good afternoon, and thank you for having me. So this is just an internal restructuring. There is no hiving off to any external third party. This is an internal restructuring where the printing has gone into a new SPV because of the various GST implications that are there on printing and publishing. So we thought it best to move it into an SPV so that we could do a better tax planning in terms of GST. So that's the only purpose. And we will also be shifting our printing operations to a new location next year. So this is in line with that investment, which will be completely separate in that SPV.
Mr. Mittal, just want to understand the overall FY26 outlook. Now, for FY26, you have a revenue target of around 800 crores, and this is with the margin profile being upgraded to 18 to 20%, as per the last con call that we have seen. Does that say, does that remain intact? In the first quarter, there were a couple of headwinds that you had cited regarding the AI digit sets. So just want to understand the overall take in terms of Q2, whether that has been sorted out. What's the kind of outlook that we are building towards FY26?
Yeah, so we reiterate our guidance. We will be around 800 plus, and so there's no change in that. And even on the margin guidance, despite there's a 6% hike in paper costs because of the GST, but that should be well within our what we can manage, because we've already procured most of our about 50% of our paper before that. And in terms of the miss in first quarter, in terms of the AI data sets, that's coming to Q2, so we are on track.
So you've made up for the AI data sets revenue, which was, indeed a miss in terms of the first quarter in the second quarter. So
yeah, it's already come in the second quarter. So.
Okay, well understood. Apart from that, if you are looking at a couple of M&A opportunities, also you were eyeing for a couple of markets there. So just want to understand what are the kind of acquisition targets that you have in place. What's the kind of growth opportunity that you see, not just in the near-term picture, but even for the next 2 to 3 year outlook, if you can help us with that.
Typically, we don't give a guidance beyond 1 year, to be honest, because again, and it's a very stable industry and keeps generating almost 100 crores every year. So we don't really give out a guidance, but having said that, there is a lot of partnerships that we are doing in various verticals to source more content. And along with the AI datasets business, We are getting into partnerships to get more titles on licensing basis, which is definitely helping us. And with the full implementation of the NCF this year, all the books coming out this year, we expect better adoption. In terms of the M&A, we are continuously looking at opportunities, and that is in process. Of course, the size are not very large at the moment, unless because we haven't received any kind of interest in any large size. But having said that, I think things are progressing in terms of the acquisition targets that we are currently looking at.
Mr. Mittal, you spoke about NCERT and even the NEP rollout. If there is any kind of a delay in terms of the rollout that is there, would that impact the top line growth for this year?
No, 800 is the base case. So anyway,
Okay.
that will not get impacted.
Okay, apart from that, even if we look at the working capital requirements, you have seen an improvement in terms of where this number is concerned in FY25, even in the first quarter. But just want to get a ballpark figure for FY26. If we look at the current days, that stand at 119 days. This is against the 130 plus days that we saw in the first quarter of last year. But overall, for FY26, what's the kind of guidance that you have?
We've been improving over the last 5 years sequentially, and we've seen only one direction in terms of where our working capital is, and we continue to build on that. I'm sure we will try to improve on what we did last year as a full year. Of course, quarter to quarter, since we are a seasonal business, you really cannot look at it for the company, because every quarter the working capital cycle changes, because we produce during September to March, we sell from January to April, we realize our money from March to July. So the whole working capital cycle works according to that, and I believe we are improving sequentially. So I think there's no worries on the working capital. We are generating about 100 crores plus every year, and we'll continue to do that.
Okay, well, thank you so much, Mr. Mittal, for joining and sharing that outlook on the company going forward. Well, that's what this was about. So with that, also let's talk. With that, let me go to Avinash. In fact, for his view on this company, as Chandra Stock and Focus. What is your view? You heard the management commentary. Despite the uptick in terms of paper prices, the management in the previous con call had up their margin guidance as well. So just want to get your perspective on this stock.
No, I think Anushi, this stock definitely should do well, because from the current year the new education policy will get implemented with the new syllabus. I believe this is going to be the takeoff year, where possibly the revenue growth, margin growth is going to be much better. And I think you mentioned about working capital. I think S Chand has actually reduced their working capital significantly. If you look at the balance sheet about 2 to 3 years back, and the situation today, I think they have been managing their working capital very well. And this being a seasonal business, the majority of the business happens only in the first 6 months, and then the rest 6 months, I think markets don't look at the book business or the educational business as a near-term trigger. They've also invested in many strategic kind of small startups as well as software kind of companies, which are not, of course, public, but I think which have also given them value in the past. So net, I think somebody who wants a steady return can definitely look at investing in the company at the current levels. It may not be a great multi-bagger stock, but I think it can give safe, steady returns over the next 12 to 15 months.
Okay, well, thank you so much, Avinash, for joining and sharing that perspective on the company. But with that, let me also talk about something like a Unimec Aerospace, and this is also in focus on the back of its second quarter outlook. Now, what the company is essentially saying that for the second quarter, they expect the slowdown in revenues to continue. In fact, for this quarter, they're anticipating a marginal decline in terms of how the revenue growth would be in versus first quarter as well. What is also what has worried the analysts is the FY26 guidance, which the management is saying that they may not be able to achieve so because of the US tariffs which have been imposed, which has resulted in a decline in terms of where the exports have been concerned. In fact, if you look at the exports also, that is the main driver of the company's operations, about 90% of the revenue coming from there. So Unimec currently locked in a 5% of a lower circuit. In fact, if you see their last 1 year performance also, the stock is down around 29%. So that's the overall take on Unimec Aerospace for you. But that's all the time that we had on this edition of Small Cap Buzzers. Do stay tuned to NDTV Profit India Market Close coming up next.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में माइगेट लगा है, what is this interesting concept?
That's a very lucky space to be in. Where investors are looking for you.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान,
सोनू निगम के लिए जोरदार तालियां।
presenting the all-knowing, all-powerful Tech Guru.
Whoa, whoa, whoa. Guru? I'm no guru.
Hello and welcome back to NDTV Profit. You're watching India Market Close. Over the next hour and a half, we'll bring you all the key aspects of the trade today. But let's first look at how the markets are doing, because we've seen the Nifty 50 again today being rather in a range-bound trading session. It's down almost 9 odd points right now, but rather in the Sensex as well, continuing to be slightly bearish with just 0.2% in terms of moves. While the Nifty Bank as well, continuing its slight momentum from Friday's strong move based on the RBI, it's up 0.3% today. Let's look at the Nifty 50 heat map first, get you some key perspective of what the key 50 stocks are doing in trade. We've seen the metal names actually react very positively on the trading session, with the Tata Steel as well as something like an Hindalco up in trade today. Tata Steel is the top Nifty gainer with 3.5% gains, while the banking names like Axis Bank have continued to be in the upward momentum, up almost a percentage point. In terms of losers, we've seen Max Health as the top Nifty losers for today, while Coal India is the other one as well that we're tracking on the low side as well. Let's look at the advance decline ratio very quickly. We've seen roughly throughout the day a positive momentum being maintained on the advances, and that seems to be continuing at least for now. Almost 1,500 stocks that are advancing, with almost 1,870 stocks declining the trend. When you look at the mid cap and the small cap as well, that's been another day where we've seen some kind of positive momentum, but range bound as well, 0.4% as well. Right now on the mid cap 150, on the small cap 250, it's up 0.5%, and we did have a little blip in the middle about a couple of hours ago, but we started to recover that trend momentum again as well. But Hiral, what about the broader markets, and which are some of the key stocks that you're tracking today and right now?
Thank you so much, Puneet, for that. It's interesting to see how the broader markets are reacting in trade as we speak. Let's just pull up, BSE 500 to see the kind of trend that emerges, because a lot of individual stocks that are moving. KIOCL, 20% up move locked in upper circuit. VMart on the back of a business update is doing well. Aegis Logistics is very interesting. No reasons, but 11.5% up move on that one. JK Paper is another one. Data Patterns, Praj and Borussil, a few of the other names which are buzzing in trade. Max Healthcare, 4.5% downtake on this counter. In fact, we will be doing a bull versus bear as well on a Max Health to understand what are the pros and cons. Sun TV is seeing profit booking after the kind of surge that we saw on Wednesday's session. Tanla Investments, Adani Power, as well as Kaplan Point, Sobha, Vinati Organics are few of the top losers in trade today. But clearly, it's a day where you're seeing a lot of stock-specific action, and that is what is translating to the kind of breadth that is being inevitable in the markets. Let's get in. Ruchit Jain, Vice President, Equity Technical Research at Wealth Management at Motilal Oswal Financial Services. Ruchit, welcome to the show and a very good afternoon. My question coming to you is the kind of range-bound trade that is evident in the markets at this point in time. What should the strategy be in terms of Nifty and Bank Nifty?
Yeah, hi, very good afternoon. Well, if I look at the index, then it seems that we are going through some consolidation phase or a time-wise correction from last couple of months. In this last couple of months correction, whenever the index is coming near that 24,500, 24,400 zone, we are witnessing a good buying interest there. But again, on the higher side, we are not able to see that momentum which could lead the index towards new highs or any such kind of trended phases. So index is just going through some time-wise correction within over last few weeks. And on the lower side, this 24,400, 24,500 is a good support. So if one has to trade the index, then one can keep a buy and dip strategy. Any decline towards this range should be used as a buying opportunity. But frankly, if you look at the broader markets, then I think more than the index, the opportunities lies in stocks. There have been certain segments which are consistently showing some good outperformance and good price volume action while the benchmark is consolidating. So I think if from a short-term perspective, rather than trading the index, if you look at stock-specific opportunities, then there are much better trading activities available here.
Right, Ruchit. And what would be those stock-specific strategy, stock-specific ideas that you would suggest?
There's a couple of themes that we think that could work out well. One is the banking space. We have already seen a good amount of corrective phase in the banking and NBFC's names, and in recently in last 6-7 days, we can see that when the Nifty has corrected very sharply, or many of the sectoral indices corrected sharply, banking this time has started showing a relative outperformance compared to that. So some buying interest has been seen in the banking phase, and within the entire banking stocks, Axis Bank is one stock which technically looks very strong. In fact, we can see that the Bank Nifty has seen an up move in last 2 or 3 trading sessions, but Axis Bank has already been rallying since last 7-8 days. So there is clearly indication that the stock has started the up move before the index itself, which hints at a good buying interest over there. So short-term traders can look for buying opportunities in Axis Bank with stop loss below 1120. We are expecting targets around 1250 over next couple of weeks time frame. And Tata Steel within the metal space looks quite positive. In fact, the entire metal basket, if you see, then have been showing a good outperformance, which could continue. With a stop loss below 165, traders can look for buying opportunities Tata Steel for potential targets around 192.
Right. You were mentioning about the Nifty Metal Index, and Vedanta is one stock that I would want to highlight here. That stock is up around 1.6% in trade. Now, the reason behind this move is the fact that all the metal prices, be it aluminium, zinc or silver, are trading at around highs, and analysts believe that if current levels of prices sustain, then the FY27 EBITDA of the company could be higher by around 20% compared to what they had estimated earlier, and that could also lead to a hike in the target price of Vedanta. So that's the fundamental reason why the stock has been buzzing. Obviously, the NCLT approval that could come in for the merger is another positive for the stock. But apart from that, how is Vedanta looking like looking specifically on charts?
So yes, most of the metal names have done well, and Vedanta, recently we have seen that 450, 455 was the hurdle whenever the stock was showing a pullback move, which has been crossed. Also, the 20-day exponential moving average support for the stock is coming in the same range. So till this 455 level is intact, one can expect a gradual up move. But within the entire metal space, if we see, then it will not show that kind of outperformance compared to what other stocks such as maybe Hindustan Copper is there, or some of the steel names which we spoke about, stocks such as Tata Steel is there. I think within the sector, relative outperformance could be in those stocks, but overall structure is not bad for Vedanta too. A gradual up move could be expected towards 500 kind of levels, with 450 acting as a good support zone.
Ruchit, very quickly, you have any view on Hindustan Copper as well? Because we've seen a very sharp run up on that stock over the last couple of weeks. There was also fundamental triggers that the management is aiming for a very strong boost in terms of production capex till FY30. Anything on the charts that suggests any move continuing in this particular stock?
Yes, I think the momentum should continue. Even the base metals piece, we have seen that after that run-up rally in the precious metals like gold and silver, of late copper has also started witnessing a good momentum. And I think if this continues, then definitely being a stock where we usually see a direct correlation, then Hindustan Copper could continue to do well. It's just that the stock has already rallied over last few trading sessions from 250 to 340. So one can keep a buy and dip approach. If we get any minor dips towards 315, 310 kind of range, then the risk reward ratio could become favorable again to ride the next leg of up move.
Okay, so that's with regards to the metal space. And to add to this, a fundamental view, we have Vansh who's joining us to tell us what is happening with the metals space, because that is the sector of the day. What's aiding the sector? Vansh, over to you.
Well, yes, the entire Nifty Metal has been in the focus in the past few days. We have seen a series of developments for the entire pack. So let's start with the performance of the Nifty Metals with the Nifty 50. Now we have clearly seen the Nifty Metals outperforming the benchmark. In terms of 6 months, we have seen a return of about 14% from the Nifty Metals in compared to the 6% returns from Nifty 50 as well. Now moving on, let's also look at the fundamental reasons behind the rally. Firstly, let me start off with the ferrous. Now we have seen the Ministry of Mines that has asked SAIL and Odisha Mining to raise an iron ore output. Now iron ore is a key essential for the key raw material for the steel producers. So clearly an increase in the iron ore output will be beneficial for the steel players as well. Next, we also have the Chinese steel price, which already stands at multi-quarter lows, and also we have the Indian steel spreads which are trading already below the import parity, which is again a favorable for the Indian steel players as well. Lastly, we have the 3-year safeguard duty which is already in place. So clearly all the factors that are in terms of the favor for the ferrous sector as well. Moving on to the non-ferrous sector, now we have already seen the aluminium prices. Silver prices are already up 63% on a year-to-date basis, favoring Hindustan Zinc. As we all know that Hindustan Zinc, any $1 per ounce move in Hindustan Zinc leads to a 1% increase in the EBITDA for the company as well. In terms of the LME prices for copper, zinc and aluminium, we have seen an uptick of about 3 to 5% in the past 1 month, clearly aiding all the non-ferrous segments as well. Now lastly, if you look at the analyst recommendations for the entire sector, what we see that the Tata Steel having the highest buy calls, so 23 buy calls, return potential about 0.05%. However, Vedanta stands out the list with a return potential of about 7% and 10 buy calls as well. Also, the NCLT meeting for the demerger is still awaited for this entire for this stock as well. So this is how the entire picture is looking like for the entire steel bag as well.
Well, thanks so much for that, Vansh. But the other key stock that's also in focus is Bajaj Auto. Now, the sales momentum for September looks really robust. Total sales have jumped roughly 9% for the two-wheeler space, while the overall sales have been another strong momentum of 8 to 9% as well. We caught up with Rakesh Sharma, the executive director at Bajaj Auto, to break down the sales numbers of the last month and what he's currently seeing on the ground as well. Listen to what he had to say. Let me first start off with what you've seen essentially over the last 3 to 4 weeks, because it seems to be that a lot of purchases were planned post September 22nd. But even though with 8 to 9 days of sales, it's been essentially a whole month of sales for everyone, including yourself. Could you give us some perspective of how the last 8 to 9 days have been essentially for Navaratri? And is this the best Navaratri season, the best 9 days that you've seen over the last decade or so?
Good morning, Puneet, and best wishes to you all as well. Well, you stole my line. Absolutely. These 9 days have been, at least for us, the best ever. At least, my memory goes back 5 years, but I doubt if before 5 years we had a Navratri which was better than this. So you're absolutely right. This has been a very big Navratri, and but we must also consider the fact that for post the GST announcement, and as the news percolated into the country, there was holding back of purchases, and that suppressed demand has come back into the final days of September, which were the 9 days of Navratri. So it's a combination of the festive, it's a combination of the GST cut, as well as the part of the suppressed demand flowing into those 9 days. It's very difficult to separate out the impact at this stage with such short data ranges. But I can tell you that on the ground, there is a lot of positivity. Till July, August, were negatives for the industry, and year to date was also marginally negative for the industry. And we can see that thanks to the extra disposable income which our customers now have in their pocket, and more importantly, a slightly better view, a benign view of the future, and expectation of continued lower prices, continued lower inflation is changing the sort of mood into why not advance the purchase, why not purchase. Motorcycles is a discretionary purchase, and what happens is in difficult times, people stretch their ownership and say, why purchase now? But when they have a positive view, they start to move into saying that, why not do it now? So that's a very positive shift. And I must say, it also envelopes the three-wheeler side of it. Yeah. We have had a rocking quarter. For several quarters now, we've been growing. We have been doing more than 1 lakh per quarter of three-wheelers in domestic, and challenging capacity. So that's another aspect of the business which has also seen the benefit of the GST cut, the mood, the optimism, etc.
Most certainly, Mr. Sharma. So, whenever we've spoken to you, you mentioned about the guidance for the year as 6 to 8% of growth, and last year we were at the lower end of that. Is it too early to firstly revise this guidance as of now for the industry growth, as well as do you think that we might have a chance to be at the higher end of the guidance this time around?
Yeah, so when we started the year, indeed, that's exactly what we were thinking, that the industry should be at 6 to 8%, which was what, was the industry was in FY 24-25. And there was nothing to say that why that it will be lower or much higher. But I guess that the inflationary pressures were getting to people, and we found the April to August period actually, like I said, marginally negative. It was between -1 and +1 kind of a thing. This certainly should improve, and it gives us a good fighting chance for hitting that zone of 6 to 8%. But we will really have to wait for the dust to settle down once the festive frenzy is down. Fundamentally, it must have a positive outcome. The only thing which has to be watched out for is, will inflation come back? Because the fundamental improvement is that disposable income has gone up. People who were worried about inflation have now developed a positive view that prices are not going to be rising so much. So that's a good intangible benefit also. But if inflation comes back, or like I said earlier also, things like, the imposition of extra cost, because we have to put an ABS on all types of two-wheelers, those would mitigate the gains which the GST cut has provided. So we have to watch out for these couple of things over the next few months. If they are controlled, then I certainly think that we have now got a better chance of hitting that 6 to 8%, which was seeming like a difficult thing in July and August.
Fair point, Mr. Sharma. Just taking the point that you made actually on ABS, because we are anticipating at least a 3,000 to 4,000 rupee price increase once that notification comes in, unless whenever it gets delayed also, if it does at this point of time. Do you expect that this will be a big boost essentially for a lot of consumers to consider 125cc as a segment as well, barring a lot of other conditions, as you rightly said, that if inflation stays benign, that will be one other thing because of the increase in price of entry-level segment, and that could be beneficial to players like you amongst others?
Yes, I agree that, even the GST cut is actually beneficial to the 125cc plus segment. What has been happening over the last 5 years is, that there is a fundamental trend which is shifting, which is the customers are wanting to uptrade. If you see 5 years back, the 100cc segment was 55% of the industry. Today, it is 48% of the industry. Now, because of the GST cut, some of the better bikes, the 125cc plus bikes, have become more in reach. So we think that this fundamental trend will get reinforced and will manifest itself in a higher rate of growth for the 125cc plus segment. On to your point about ABS, I agree. When the sort of marginal impact of the ABS on a 125cc and on a 100cc, it's far much more on a 100cc, right? So people will think that, okay, why not move to 125cc? But I'm saying that for the industry as a whole, for the 125cc segment as well, the addition of cost will probably mitigate some of the gains of GST. So we have to look out for it, and we have to see whether it can be done in phases. There is, I think, the Ministry of Heavy Industries is considering these kind of points.
Got that, Mr. Sharma. Mr. Sharma, just one aspect of in this particular month, you've shown roughly a 5 to 6% growth in terms of the domestic demand, and that's a key trend because since November of 2024, we have seen very minimal or negative growth for you in the domestic demand specifically, while the export growth has been raging in the mid double digits to high double digits as well, about 18% growth in this month as well. So do you expect that this could lead to a re-rating trigger in the domestic demand growth for you specifically, or do you feel that there are some white spaces that could be addressed with a much more cheaper or a lower variant of 125cc where you already have the Pulsar there? Could we see another launch in that space as well that could trigger both of these key aspects to trigger the demand for positive growth in domestic side?
Yes, so when we are analyzing, we've got data till September, we do see that we have now started to, on a sequential basis, gain some market share in our core area, which is the 125cc plus segment. But quite irrespective of the GST cuts, etc., we have certainly a very vibrant product program which is going to address different sub-segments in this important area. And we will see this unfolding, from November onwards. You will see that we will be putting in some new products and new variants, which will hopefully drive further share acquisition.
Last question, Mr. Sharma, from my side, largely on exports, because we've seen another 18% growth in this particular month, and if you see the momentum since May actually has been very positive, 25, 22, 18 and 20% over the last 4 months, going backwards to May 25. Largely, are you seeing broad-based growth essentially in LATAM as well as Africa? And if you can provide some update on how Nigeria has done in this particular month.
Yes, we are seeing more or less broad-based growth in the industry. We monitor very, very closely the top 30 countries, which account for more than 80% of our sales. And I would say more than 80% of the industry are the 100-odd countries that we operate in. And most of these countries are in growth path. LATAM region has led the growth. What is more beneficial to us, besides this whole thing about the rising tide lifting all boats, is the fact that we have got great competitive positions in places like LATAM. We have had our highest ever sales in LATAM in Q2. And that's a reflection of not just the market growing, the industry growing, but also our competitive position in it. So we expect the same tempo to continue into Q3 also. And hopefully we should be able to improve our sales numbers in Q3. Nigeria has been sort of now steady at about, for us, retails of about 19, 20, 21,000 units per month. It's of course a far cry from the 50,000 units which we were doing. But you can see that we are now challenging getting to 185 plus, moving towards the 200,000 number, even with Nigeria almost half of what it was. So that gives you a sort of indication as to how well we are doing in some of the other markets. Nigeria's return to much high levels, it's I would say a gradual process, because the economy had got quite battered because of the devaluation, etc. But it is at least steady. The exchange rate has steadied, and sometimes the exchange rate the Naira is actually appreciating. So at least some kind of equilibrium has come, and hopefully this will be the beginning of a climb back into better days for Nigeria.
Ruchit, among the two-wheeler auto OEMs, which would be your top pick here? Which is that stock which is technically looking quite sound on the charts and could see an upside from current levels?
So Hero MotoCorp within the two-wheeler space looks quite positive on the charts. We have recently seen a good run-up move from 4,400 to 5,400, almost an up move of 1,000 points. But then last 1 month, the stock price is consolidated within a range. Now, the good thing was that during the price up moves, the volumes were good. And whenever the small bit of minor corrections are there, we are not now witnessing any volume-based selling happening in this stock. Even the stock price is not giving a closing below 20-day exponential moving average support. So this clearly indicates a good buying interest and a relative outperformance compared to other stocks such as Bajaj Auto Co. in Hero MotoCorp. So I think Hero should be preferred. A gradual up move towards 6,000 could be expected in Hero MotoCorp. So it should be roughly around 8 to 9% up move from current levels can be expected.
I think, Samit, I'm going to come in over here. Hero Moto is the sound bet that he's given, but I think we should talk to Puneet about what is not so sound about the four-wheeler space, because everyone is talking about the way it's beat estimates in the month of September. What is not sound about the four-wheeler space now?
I think it's interesting that in this month we were penciling in the likes of Mahindra and Maruti to be the key stocks which will outperform, but that actually hasn't been the case. We've seen players like Tata Motors amongst others which have actually been the most, in terms of outperformance. You can see that on your screen right now, 47% growth, and it's much higher than 3 to 10% what we've seen on the other players. Now, this does include some form of inventory filling for the next month, and that likely seems to be the case. But nevertheless, the growth is very strong for players like Tata Motors in this space. So we spoke also to Maruti's management yesterday. They mentioned that they have seen some kind of shortage essentially in transportation of all vehicles in time. And that's one of the key cases of the growth being largely a little subdued than what the expectation was of about 200,000 in terms of sales. So that's definitely one of them. But, Ruchir, let me come to you also on a very quick question on Maruti Suzuki, because it has seen that run up ever since 15th of August and seeing some kind of slight dip from those levels now. Do you feel that, on the fundamental side, at least they seem to be taking care of the sales aspect? Anything on the chart that suggests some positive momentum for Maruti in the near term?
Yeah, so minor pullbacks could be there, but we believe that whatever correction would come, and because the stock has already rallied from 13,000 to 16,500 almost, so those corrections would be more of a part of an uptrend only. So clearly, a buy and dip strategy should be kept for stocks such as Maruti. Major support should coming around 15,200 to 15,000 range. So in case if we get any self dips towards that range, the risk reward ratio could become favorable to take counter trades over there. So whatever correction even today we are witnessing, this is not a volume based selling which is happening, but just because of that overbought setup, suppose the recent run up, I think it's just a dip within an uptrend. So let it come near the support, then one should look for taking some counter trades and buying opportunities there.
Okay, so that's the auto pack that we're talking about right now, but we'll quickly slip into a short break. Please stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing room in a segment Heard on Street with Samit Sarkar.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार, 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, Visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The gate of the community was becoming a friction point or choke point while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
NDTV.
Welcome back. You're watching India Market Close on NDTV Profit. Let's welcome in our technical guest Kunal Shah, Senior Derivative and Technical Analyst at Mirai Asset Sher Khan. Kunal, if you look at the markets, the Nifty has continued to remain sideways in trade today, while the Nifty Bank Index that is up around 170 odd points in trade. What are your key strategies when it comes to both these indices, that is Nifty and Nifty Bank?
Good afternoon. Good afternoon to everyone. See, I think definitely what we have seen post the RBI policy, we have seen the momentum coming back, specifically in the Bank Nifty index. Bank Nifty, which was the underperformer, has started to now outperform, which is a positive sign for the market. We are seeing Bank Nifty trading above the key short-term moving averages, indicating there has been a change in the trend. And the immediate resistance for Bank Nifty is at 56,000. And once that is taken out decisively on a closing basis, you will see the short covering move coming in the Bank Nifty index towards the mark of 57,000, 57,400 on the higher end. So for Bank Nifty, we are bullish on the indices. The lower end support for the indices stands at 55,000, which is a very strong support zone. So any dips should be a buying opportunity. 56,000 is the immediate target where we expect Bank Nifty to go. And once we get a strong closing above that, probably we'll see the big short covering move coming in towards 57,000 on the higher end. Coming back to Nifty here, Nifty has been consolidating in today's trading session. Nifty is still trading below the short-term moving averages of 20-day, and we expect that to break out on the upside around the mark of 25,000. And once that is taken out in the next week, we expect further short covering to come in Nifty as well. That would clear the way for Nifty to a 25,350, 400 mark. So we are bullish on both the indices. The approach should be on the buy side. Nifty, the critical support on the downside is now placed at 24,700. Till the time this is not taken out, the view remains bullish on Nifty.
The view remains bullish on both Nifty and Nifty Bank. But what would be your stock-specific ideas?
I think the first, there will be two ideas. Both are on the buy side. First is the defense space. I think defense has again started to gain a strong momentum. And out of here, the top pick would be HL. The recent correction, what we had seen in HAL, the stock after the correction consolidated at a 200-day moving average, didn't break it, tried to break it a couple of times, but couldn't. We saw strong buying interest from those levels. Then we saw a sharp rally, and on technicals, what we count as the Elliott wave, it is now has started a third wave, which is the fastest one. So that is where we expect HAL to continue its momentum on the upside. We have even pitched this stocks to our client in today's trading session for a positional buy. So we are bullish on the stock with the stop loss of 4,700, looking for targets of 5,000 to 5,100 in the very short term. So HL is a buy for me at the current levels. Second is metals. Today metal index again is continuing the positive momentum, and we expect the index to go towards the mark of 11,000, currently trading around 10,300. So metals should be in focus. APL Apollo would be a pick over here. Clean consolidation breakout, what we have seen in the chart, volume based buying, and we expect this momentum to continue on the higher end. So 1739, 1740 is where it is trading currently. One can go long with a stop loss of 1700, looking for targets of 1790 to 1820 on the upside.
Moving on, pure play refiners, that is MRPL and Chennai Petro. Both the stocks are buzzing in trade. In fact, MRPL is up around 7% while Chennai Petro is up around 3.5% in trade. Now, one of the reasons why both these counters have been buzzing in trade is the fact that post the Ukrainian strike that has happened on Russian refineries, if you look at the Russian refinery output, that has come down by around 0.4 million barrels. Now, this is around 0.5% of the total refinery production in the world. Because of this drop in the refinery production, the gross refining margins for Indian refiners, that has increased to around $7.5 per barrel. Now, analysts were estimating this number to be anywhere around $6 to $6.5 per barrel. Because of this increase in the refining margin, the earnings expectations have also improved for specifically for pure play refiners like MRPL and Chennai Petro. Now, with every $1 per barrel rise, when we look at the GRMs for MRPL and Chennai Petro, that benefits the EBITDA by around 24 to 36 odd percent. The higher beneficiary here is Chennai Petro, while MRPL stands to benefit by around 24 odd percent. So this potential increase in the gross refining margin, which could translate into higher EBITDA for this pure play refiners going forward, is something that has led to this increase when it comes to both these counters, that is MRPL and Chennai Petro. Kunal, coming to you on both these counters, how are you looking at MRPL and Chennai Petro? Can the positive momentum sustain for both these counters?
I think definitely looking very strong on the technical chart. Specifically, if you look at Chennai Petro, in the last 10 days when the markets were volatile, we were seeing the correction phase going on. Chennai Petro has been one stock which was consolidating at the higher level. So clearly there was something into the stock and as we spoke out, we expect this momentum to continue on the higher end for Chennai Petro, and this consolidation will be broken out on the upside, and there is a gap area which it needs to be filled, which is around the mark of 860. So currently trading at 780. One can initiate long. The risk to reward ratio is favorable, keeping a stop loss of 740 on the downside, looking for targets of 840 for Chennai Petro.
Okay, so that's with regards to a few of the names. Chennai Petro trading near the day's highest levels. Let's pull up a few of the paper names. You know, the buzz is continued on these ones: JK Paper, Andhra Paper, West Coast Paper, and Orient Paper. All of these counters seeing some smart moves today. JK Paper up almost 9% in trade. Kunal, any momentum play that you see? Because during the week, couple of days ago as well, we did see that rally that came in terms of paper stocks. Right now, the buzz is price hikes. That's a fundamental perspective. But what are charts indicating?
Definitely, charts are again inclined towards the fundamental side as well, where we saw a breakout in the stock in today's trading session. So for JK Paper specifically, if I talk about 415, 416 has been the strong rejection zone. 3 times the stock has rejected from that zone, and today we have seen a breakout above that level, sustaining about that and above average volumes as well. So clearly we are seeing this momentum is likely to continue on the higher end for the paper sector, and JK Paper specifically, you can expect the stock to go towards 480, 490 in the very short term.
Got the view, Kunal, but time for some more buzzing stocks. V-Mart Retail, Sai Silk and Nuvama are actually in focus. Varsha is joining and to give us some key details on all these top movers. Varsha, over to you.
Well, thank you so much for that. The first two stocks actually are buzzing on the back of Q2 business update that the company has given, starting with V-Mart Retail, wherein if you see the revenue was up 22% year on year, while the same store sales growth was up almost 11%, and they're going to open 25 new stores, wherein the total new stores will be at 533. Next on the list is Sai Silk Kala Mandir, wherein a good show when it comes to Q2, because Q2 being a lean quarter for them. So revenue was up 28%, and they're planning to expand their store presence with 10 new openings. Lastly, you have Nuvama Wealth, wherein they've got approval from SEBI, wherein company will set up Nuvama Mutual Fund, and they're allowed to launch schemes under the MF, including those in the SIF category. So these are the three stocks which are buzzing on the back of news.
Okay, these are interesting names. Thank you so much for that, Varsha. You know, what comes to my list over here is, or to my mind, Puneet, is it the festive season, or is it the GST cuts which are aiding someone who's selling saris or someone who's in the retail space? I mean, that's the conversation we should be having as well, because a 20% up move coming in on a Sai Silks summit, pretty strong, right?
But I believe for apparels that were worth about 2,500, there was no GST cut. So it is purely festive, I believe.
So festive season it is. Kunal, again, any momentum play that you're seeing, because 19-20% upside on a Sai Silks. I know it's going to be difficult for an investor to get that opportunity to look in, get into it as well. But what would you recommend?
I think for Sai Silk, what we have seen that earlier on the technical charts, 200 had been the strong rejection zone, where at least 4 to 5 times the stock has seen a rejection. But what we have seen from the lower levels now, that whatever dips you are getting into the stock, that has been bought into aggressively. So clear cut, once that 200 mark is taken out, we will see the strong up move coming in. So overall, the view is positive on the stock. Buy on dips, already the stock is up by 18%. So dips to be utilized as a buying opportunity. Short-term target should be around that 195-200 zone. And once that is taken out, then one can go for positional buy. Even the stock can go towards 260-280 mark.
Got the view, Kunal. But Kunal, also on something like a Nuvama, if we can have your view, because when the whole GST saga happened, we saw that correction and a fall from 8 to 9,000 levels from Nuvama to the current ones. Any momentum coming back in this counter? Do the charts indicate any kind of positive rally in the near term?
I think definitely the correction what we had seen in the recent times, there were low top low bottom formation, so clearly there was a downtrend which has been reversed in the last 2 trading sessions, but we still need further confirmation into the stock to clear the trend. The resistance for the stock is exactly at 6,800 mark, and that is where we faced rejection even in today's trading session. So probably you will get a dip on the downside towards the support zone of 6,300 400, and if that is sustained or we see any reversals from those levels, that will clear that the trend has been changing from bearish to bullish, and then one can look for a high top high bottom confirmation on the technical charts.
Right. Max Healthcare is the next stock that we'll be discussing, because the stock is a top loser on the Nifty 50. It's down over 5% in trade. Let's get in, Varsha, with the bull and the bear scenario for Max Healthcare.
Well, thank you so much for that. Yes, the stock is under pressure, but let's highlight some of the good things and bad things for Max Life. Let's start with the bull case, wherein for FY26 they're going to expand their bed capacity to 1,500 new beds, which will drive new growth, future growth for the company. But delays from regulatory approvals is one of the risks that the company faces. Onto the bull side, if I were to talk about the oncology segment, which is a high margin segment, contributes 25 to 26% to the overall revenue, and company is expecting to rise this contribution. But complex mix, like increasing revenue from international patients, though it's good for ARPOB, average revenue per occupied bed, but margins may compress because of the higher cost that the company may have. Onto the international revenue, if I were to talk about, rather increase in the occupied beds and ARPOB, that is average revenue per occupied bed is a good thing. Rather, it creates demand for the company. But the acquisition integration issues in Noida is one of the risks that the company faces. While onto the international revenue, which was up 32% for Q1 on better marketing that the company did. So good thing on the international revenue, but the geopolitical reasons may hurt their international portfolio going ahead. While lastly, if you see, company is doing a lot of capex. Well, they aspire that the net debt to EBITDA remain below 1x, but still 3,700 beds over the next 2 to 3 years. This may put pressure on the balance sheet for the company. Lastly, if you see that digital business is growing well, but rising NCR competition may hurt margins for the company. So overall, yes, company is doing lot of greenfield, rather lot of brownfield projects, which will help to grow company, but there are some issues like geopolitical reasons, and of course margins may take a hit on the back of rising international patients that the company has.
Okay, thanks Varsha for that. In fact, let's also get in Neeraj Diwan, market expert. And before we go to him, let's just quickly address what's happening with the markets. Let's pull up Nifty 50, look at Bank Nifty as well, because that's where the action is. A mild recovery on Nifty 50. Now we're at the day's highest levels, though just a 40 points up move from day's low. It's an interesting move that we're watching out for. What's leading these gains is going to be interesting. Bank Nifty as well. 0.5% up move on that front, 255 points. So I think it's a 450, 500 points recovery on a Bank Nifty as well. And let's look at the PSU Bank Index, because the dichotomy that has been existing between the private banking space and the PSU banking space is interesting. PSU Bank Index seeing gains of 1%, but still it's come off the day's highs. If you can just have the contributors of Nifty 50 to see which stock is leading to this kind of an up move. Bharti Airtel, Axis Bank, Kotak Mahindra Bank, Tata Steel are the ones which are contributing. What is putting pressure is the Reliance Industries, Max Healthcare, ICICI Bank, as well as a Maruti. So that's with regards to where markets go. But Neeraj, welcome to the show. Let me come to you. A recovery that's come in terms of where markets are concerned right now. But one stock that I want to talk about is a Max Healthcare, the top loser on Nifty 50. My colleague just got to us the bull and the bear case scenario. How are you looking at it? Would you be a bull or a bear for a Max?
Yeah, good afternoon. Actually, for these healthcare stocks, especially hospital stocks, we've seen a good move happening in the last 3-4 years. I would rather avoid it for the time being, because I think on valuation front, I feel that it's a little stretched right now. So maybe if it corrects more, I would be a bias, but not at the current range.
So that's with regards to where the hospital stocks go. Apart from that, one other counter, or I would say a space that is buzzing in trade right now, is even the metal pack. Neeraj, any views that you have with regards to metals? Because last couple of trading sessions have been really strong. The base metal prices, in fact, are moving as well. Would you be a buyer at current levels? Maybe it's a short-term cycle.
I'm positive on metals, and especially the non-ferrous part. And they've recently done very well, whether you see the likes of Hindustan Zinc, Vedanta, Hindustan Copper, they've all run up a lot. So there may be some small correction, consolidation, which may happen around these levels. That's always possible. But I think that the trend is positive for these stocks. So any consolidation or small correction should be an entry level for these stocks. So I remain positive on this space, and more so with the non-ferrous part.
Got the view, Neeraj, but at this particular point of time, we put focus on some key stocks that Somit is picking up in our Heard of the Streets segment, and he's with us anyway today as well. But Somit, what are some of the key ones that we need to watch out for?
Well, if you look at the market action, Nifty is largely sideways, not much of flows that we are seeing in trade. Nifty Bank is something that has been interesting, and in fact that is one index that has been holding the Nifty as well on the higher side. But when it comes to stock specific, dealers have indicated few names. Firstly, to start off with, Glenmark Pharma is what dealers are saying. Now there are strong buy flows on FI desk in this counter, so keep an eye out for Glenmark Pharma. For Kalyan Jewellers, in the last 1 month, we had seen intense selling pressure on this counter, but now dealers are indicating that selling pressure is largely over for Kalyan Jewellers, and we could see a bounce back on this counter. When it comes to IIFL Finance, dealers are indicating that there are buy flows on large HNI and PMS desk in trade today. For Bandhan Bank and SRF, dealers have indicating that there are buy flows on large HNI desks for both these counters. For Bandhan Bank, they're expecting the Q2 update to be on the stronger side, and for SRF, they're expecting the second quarter earnings to show a significant growth compared to what we had seen last year. But for Bandhan Bank, do remember that the stock might enter the FNO ban in trade today. And lastly, when it comes to Torrent Power, there are buy flows on FI desk. Dealers are indicating that delivery volumes could be on the higher side for Torrent Power in trade today.
Interesting names. In fact, with the Kalyan Jewelers, you have a PN Gadgil also, which has just reported their sales numbers. The stock also seeing some smart gains, 2.5% up move. They've registered a 65% growth during the festive season is what they've indicated. And the gold segment, a 64% up move on volume growth of around 10%. So clearly this is telling you that this is a price driven uptick that we are seeing, and it's not a volume driven uptick. So that is what we need to take into consideration as well. In fact, let's take a quick question in terms of what should one do with all of these jewelers also in trade. Kunal, a quick one. Kalyan Jewelers, PN Gadgil, Titan, ahead of the festive season, would you be a buyer?
I think definitely the stock has witnessed correction from the lower levels, and we see Titan could be a good pick from the current levels. Already on the technical charts, we are seeing a double bottom around the mark of 3,300. The immediate hurdle for the stock is at around the 3,500 mark, but once that is taken out, you expect that short covering move to come in and the stock can go toward 3,600. So I think Titan could be a good buy from the current levels with a stop of 3,350, looking for targets of 3,600 on the upside.
3,600 is the target price for a Titan. But moving on, Avantel, let's pull up that counter on the screens and see what the stock is doing in trade, because strong moves that did come in. Stock is at the day's highest levels with gains of 12% coming in there. They have inaugurated a 76,000 square feet facility in Hyderabad and looking to invest around 56 odd crores. This will be for radar systems. Siddharth Aburi, director at Avantel, joins us on NDTV Profit exclusively. Siddharth, welcome to the show and always a pleasure to speak to you on NDTV Profit. If you could help us understand firstly the new facility that you have inaugurated in Hyderabad, 56 crores is the investment for radar systems. What would this mean for the company in terms of revenues and the kind of timelines that you're looking at from operationalization perspective?
Good afternoon, ma'am, and Jai Hind, and it's an honor to be on your show. Just a quick, it's a state-of-the-art facility that we have inaugurated in Hyderabad in a center which is called Electronics City. And it actually houses a multidisciplinary approach where we are doubling down on our strengths that we have in providing and our commitment to indigenization and being self-reliant on various different technologies for the Indian Defense Forces. Not just on the radar sector side, we are also focused on software-defined radios and satellite communication systems. And also we have a state-of-the-art satellite AIT facility at this location, which we have inaugurated yesterday. So it's a multidisciplinary, multi-technology based on the needs and requirements of our end customers.
Siddharth, after this order win, where does your order book lie? What is your current order book and what is the revenue visibility that you're seeing?
So again, in defense, it's very hard to give you proper numbers in terms of what it would look like. But we are working on key technologies that are of immediate requirements to the Indian Defense Forces, working on multiple different RFPs. The current order book is, I think, which is also known to the public, around 250 crores.
Siddharth, I was asking what is your current order book? Not how much you're looking to generate from this land parcel or the new facility that you have inaugurated. What is your overall order book is what I wanted to know.
So overall order book as of Q1 is around 200 plus crores.
And what is the execution time period for this?
It depends, probably 1 to 2 years.
And how are you looking at the order inflow for the rest of this financial year? For how many orders are you in the L1 category currently?
Being a listed company, I will not be able to comment exactly on when and how many orders I'm going to get, but I'm quite bullish on quite a few opportunities that we are working towards.
Right. I obviously understand you won't be able to tell me in how many orders you're L1, but at least you can tell me for how what is the total worth of the orders for what you have placed bids?
Good enough. Big numbers.
Plus 500 crore plus?
I cannot disclose that at this point in time.
Okay.
Siddharth, it's Puneet this side. Thanks so much for joining in. When I look at, in terms of growth in revenue in between FY25 and 24, it has been slightly subdued. Going into FY26, what are the expectations? Because you mentioned that you have about 200 crores in terms of order book that is executed over the next 1 to 2 years. How much do you expect essentially in terms of showing growth for FY26, and do you expect that largely you will be able to maintain the 35 to 38% margin profile that you have been over the last couple of years?
So again, from a growth trajectory standpoint, over the last few years, we have seen very good, tremendous growth for Avantel. And what we have disclosed as well in our AGM meeting is that this is a period where we have again focused on working towards new innovations, new technologies like software-defined radios. And like ma'am rightly said, we are working on multiple different radar projects. And we're also quite bullish on our new satellite SATCOM equipments in other various form factors and various bands as well. All put together, we are working with various different customers. So we are quite bullish, and in parallel, we are also focused in investing on non-defense as well. So I think as the market knows, we have invested in our medical equipment. It's a fully owned subsidiary of ours. So we are interested in medtech. We're also setting up good manufacturing facilities for antennas and EMF facilities coming up with big SMT lines. We're also trying to get into solar a little bit. So all in all, we're trying to see we can diversify and have a stock.
Siddharth, strategy is diversification, I agree, but which is it that is going to really work for an Avantel? Because you're actually looking at multiple aspects right now, that's one. And two, with the recent rights issue that you did for around 80 odd crores, where is it going to be spent in terms of building the business?
Good. So the rights issue that we have done was primarily for a new facility which is going to come up next year in Vijayawada. That is going to be for solar and antenna manufacturing and for EMF. We're also coming up with ground station as a service, first in the country, to provide ground station service solutions for the global constellations of satellites. For data download and data reception. So that is where our diversification money from the rights issue is going. But over the last 2 years, we have been investing our R&D efforts and internal funds on key technologies which are a must and a requirement for the Indian defense, as primarily around communications and radars.
Right, Siddharth, thank you for joining us and giving us the growth path for Avantel going forward. Moving on, the second stock that we should be in focus today is Sammaan Capital. Now, Abu Dhabi-based IHC will be infusing close to 8,850 crore rupees in the company. However, this fund infusion is happening at a rate which is much lower compared to what the current market price is, and that's the reason why we are seeing such kind of a downtick when it comes to Sammaan Capital. But we also spoke to Gagan Banga, the MD and CEO of the company. Let's listen into that bite.
The strategy is to, over the next 12 to 18 months, get the company into a format where the lowest hanging fruit for us is to stop breaking the asset up into legacy and growth, right? Whatever assets have to be unbound will get unbound. What we are left with as of end of fiscal 27 is all the right kind of asset which we want to grow. That's point number one. Point number two is that over the next 12 to 18 months, I would imagine within about 6 months of the approval coming, we should be operating at a interest cost which is at least 150 basis points on our debt lower than where it is today. These are two significant milestones to achieve. As an outcome of these two, we will get to the third big picture goal, which is to get to a AUM of 1 lakh crore by end of fiscal 27.
So that's the management of Sammaan clearly indicating what's the outlook going ahead, but the stock, after the kind of run-up that we saw, has cooled off today. Let's quickly slip into a short break. On the other side, we'll get to the top buy today, sell tomorrow picks. Please stay tuned.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
सर, बिजली का बिल आया है। सोलर पैनल लगवाने के बाद भी अमाउंट बोलना है यार। 60 लाख।
60 लाख? अरे इतने में तो
लग्जरी कार आ जाती, शौक मत हो। सात्विक के सोलर पैनल लगाओ और करो हर शौक पूरा। चाहे तो नई फैक्ट्री लगा लेना। हाँ? घर हो या फैक्ट्री, बोलता है कार्तिक, सोलर मतलब सात्विक। खराब मौसम में भी काम करता है।
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other. What was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or
Welcome back to India Market Close right here on NDTV Profit, but we still have Kunal as well as Neeraj still with us. Kunal, let me come to you. Any specific view that you have on Avantel, because the stock is seeing a sharp up move in trade today? Anything on the charts that suggests a continuation of the move?
See, I think today the stock has given us a breakout above that 195, 190 zone, which was a strong resistance for the stock. So again, there has been volume-based buying in today's trading session. However, we need to have a follow-up move in the stock as well. If that continues, you can confirm that the stock is ready for the levels of 230, 235. I'll not be a buyer at the current levels. If you're already holding from the lower levels, continue to hold with a trailing stop loss. For fresh entry, I'll probably wait for the next week and how does the stock move in the first two trading sessions, and probably then one can see the continuation of them.
Okay, so that's with regards to where Avantel goes. In fact, Neeraj, let me come to you with the metal pack as a whole. Smart moves coming in from a JSW Steel to a Tata Steel. Last couple of trading sessions have been really strong. Counterplate to the way silver has been moving, to the way copper has been moving. Is the cycle ripe enough now for someone to enter still, or do you think this is just the last leg of the rally and you would avoid?
No, I would not say this is the last leg of the rally, but stocks have moved a lot in the short period of time in the last couple of weeks. So one can wait for some dips. You saw in Jindal Stainless, the stock went to 800, 810. We saw a dip towards 740. So there'll be the sell-offs which will come. The stocks will not keep on going in a single line, up. I think there will be corrections, and one should look at corrections to accumulate or to buy and not change them when they've already run up in the last couple of weeks. But I don't think this is the last leg. And if you get these corrections, there'll be an opportunity. And I think there's still money to be made in metals, even in the non-ferrous space. I think there is still a lot of stock.
Got the view, Neeraj. But time to put spotlight on some small cap buzzers of the day. Anushi has a few on a list today. Anushi, what are some of the key ones that you're picking up?
Hi, so I'll start off with Borosil Scientific first. Now you're looking at strong volumes in this counter. In fact, volumes are up 25 times in comparison to its 30-day average. Now what the company essentially does, it's into glassware and laboratory products is what we are looking at with its business segments spanning across scientific segments, lab glassware, lab equipment and procession systems as well. Do note that in the first quarter though, the company did see an impact in terms of its sales due to degrowth in export sales and impact of the Indian accounting standards as well. In fact, there was also a delay in terms of where the order execution had played out, which resulted in that impact in terms of the top line. Second one on our radar is John Cockerell. Now, this one has been a strong mover this week. Volumes trading over 2 times today compared to its 30-day average. Now, what the company does, it designs cold rolling mill complexes, processing lines, chemical equipment, and industrial furnaces as well. Now, why the stock is in spotlight today? It has signed a contract with Godavari Power and Ispat, and this is for their cold rolling mills that we are looking at. The execution with the global components also that we are looking at. So this is stock in focus. Apart from that, Unimec Aerospace is a stock that is also in focus on the back of the second quarter business outlook, wherein the management sees that the second quarter revenue would be marginally lower than the first quarter, and this is due to the US tariffs impact, which would lead to a decline in terms of where the exports are concerned. Do note that almost 80 to 90% of the company's revenue is through exports is what we are looking at. In fact, with this, the management also sees that they might miss their FY26 guidance because of these headwinds present. So it's seeing about a 5% of a intraday low. Today it's locked in a lower circuit as well. So these are the 3 stocks which are buzzing in terms of the business updates that we are seeing.
Got that, Anushki. Thanks so much for joining in and giving us perspective on all those stocks. Kunal, any view that you have actually on John Cockerell as well as Borosil Scientific? Because, John Cockerell actually has seen a sustained momentum over the last week or so. Anything on the chart suggesting for both of these counters?
I think for both of the counters, what I have seen on the technical charts, there has been volume-based buying from the lower levels. But again, the stock has been into deep correction. So still you need a confirmation for the entire move to play out. Probably too early to call as a buy at the current levels. For Borosil Scientific, I'll wait for a breakout about 150, 151, and probably post that one can go aggressively long onto the stock.
Got it. In fact, Neeraj, let me come to you on the defense pack. A good amount of buzz that's coming in. You have a Goldman Sachs which has come up with a report as well on defense, on the back of which names like Solar Industries, PTC Industries, all of them seeing a good uptick from a DCX Systems from a 2% upside to a Astra Micro, which is up almost 11 to 12%. These cycles that we are seeing with regards to the defense pack, would you be a buyer? What would you advise investors to do?
Yeah, I am positive on defense space as a whole. So again, there will be opportunities. You will get a period where people are not talking about defense so much. You get some correction because there will be noise around valuation. Because you look at any stock, the valuations are not cheap. So stocks are expensive, but then they are long gestation projects, and there's so much of money which is going to be spent on defense that the growth will ultimately come, and the growth will be huge going ahead. So if one is looking at a 3 to 5 years perspective, I think defense is a good thing even to invest today. And if you are looking at a shorter term period, then you should wait for opportunities, some corrections to enter into defense. But then go for the names, large name, which you've seen the execution capabilities. You've seen how the numbers have been. You've seen the balance sheet. So go for the bigger name in defense and have a longer term perspective.
Neeraj, let me just ask you also in terms of your any of the top picks, because you rightly said that in the short term the defense theme would be something where you could see some moves, but in the longer term, we've seen BL as a top favorite amongst funds as well as individual investors. What do you think of these private defense companies that have suddenly come to light in this particular report? Someone mentioned something like Azad Engineering is also seeing a very strong move today. Do you think that you want to stick with the larger ones where you're seeing government ownership, or you see some niche technology companies in the larger mid and small cap space in the defense side, which are starting to come and see that exposure now as some of the key preferred plays here?
Of course, one is the government-owned company, whether it's HAL or Masdoc or BEL. Of course, data patterns, I'm positive on this space. Besides this, even the private sector one, there have been companies which have existed for quite some time. To name a couple of them, of course, you'll have to see the valuations, take your advice, and then buy. But there's companies like Zen Technologies, companies like Astra Microwave. They are from the private sector, and they have been there for quite some time, and they've been delivering. They've been executing, and we've seen how the companies have grown over a period. So in the private sector space, especially looking at companies in the small mid-cap space, one has to be very careful to choose what company you want to invest in. See, there may be a company which has a good growth plan and huge capex they're doing it right now, but they may not be as ahead. Some of the companies are already there and have been dealing with defense and have been executing and coming out of product. So one has to be careful in choosing the stocks in the private sector. But of course, the government-owned companies and in the larger ones, even like Lastra and Tubro, Lastra and Tubro also is now getting a lot more into defense, and they're also talking about a different order book for defense. So the large one in private sector banks are also there, which can be looked at.
Okay, so that's with regards to where defense as a pack goes. In fact, let's pull up a L&T. In fact, they did get an order win today, which is, I think, a large order, and the stock is at the day's highest levels as well, 2% up move coming in on this one. Let's look at the volume buzzers. Now, Silks we've already addressed on the back of the business update, but the volumes are up almost 63 to 64 times. It's 30-day average. V-Mart Retail, similar story there. Sanhur Manganese is another one. 40 to 41 times is the kind of uptick that you're seeing in terms of volumes. Orissa Minerals also 17 to 18 times. And EIH, which is seeing volume uptick to the tune of almost 15 times its 30-day average. And strong moves coming in, all of these 4 to 5 names. In fact, Kunal, anything that you would want to recommend from this pack?
Sorry, can you please repeat these stocks?
Yeah, I'm talking about Silks, V-Mart Retail, Sanhur Manganese, Orissa Minerals, as well as EIH.
If I look at the chart perspective, I think Sandur Manganese looks the best from the current levels, where we have seen a fresh breakout into the stock. So probably there could be still more upside left. The stock had faced resistance around the mark of 185. That was again the rejection zone for the stock. But today there has been strong volume-based buying action. Already the stock is up 15%. So probably any correction towards that support of 187, 190 would be a good buying zone where one can go long and look for targets of 210 to 215 on the upside.
Sandur Manganese. In fact, Neeraj, let me come to you on the consumption pack from a V-Mart Retail to a V2 Retail. Good pickup that you're seeing in terms of stock price. Consumption as a story is something that people are wanting to bet big on. But do you think valuations are supportive at this current point in time? And would you be confident enough to tell an investor that, yes, look at consumption as a pack. This could be something that will give you returns over the next 6 to 12 months?
Yeah, I think so, because the kind of GST benefits which have come and we've entered the festival season, and interest rates are low, liquidity is good, and there have been RBI measures where they are increasing flow of liquidity also into the system. So all this will definitely augur well for the consumption space. So, but again, you have to choose your stocks well, because there'll be stocks which are already trading at high valuation. So I think consumption story is good, and you have good opportunities there to make money.
Okay, so that's with regards to where, the consumption pack as a whole goes. But moving on, it's just a couple of minutes to 3:15, and it's time for the Profit Intelligence segment. M&M, that's going to be in focus because it might beat the tractor industry sales growth estimates in FY26. Puneet has done the number crunching and he'll tell us what the analysis points out to. Puneet, over to you.
Well, thank you for that. It's definitely been a stellar month in terms of September sales for the company, and because of that, it's begged the question: will M&M actually beat the industry growth guidance of 7 to 8%? Is what they said at the start of the year, and that is what signifies the future momentum of H2 on what that could be for the counter. Now, when you look at the year-to-date volumes, they're up 20% for the counter in the first 6 months of sales versus the 7% that the management had guided as well. Of course, the 12% was including the first 5 months. Then you see a 66,000 number reported by the company, so you're seeing that growth as well. But the company might actually beat this given the positive momentum that's happened already in the first 6 months. When you look at, that's led by multiple key factors. The GST rate cut is definitely one of them. From 12, it's gone to 5% now on tractors, as well as the positive momentum and farmer sentiment, which was boosting further sales in these 2 months of September as well as October. We've already seen the September sales of 66,000 beat the highest sales that was in the last October of 65,000. So definitely it's a positive. When you look at the second key aspect, FY24, the company sold roughly about 3.78 lakh units. They showed a 12% growth on an overall basis for the year of FY25, signaling a 4.24 lakh sales that the company did in the whole of FY25. But this growth of 12% wasn't straight bound. It was divided between H1 and H2, and that largely when you see the next plate, you will see the growth. In the first half, they'd only done about 5% growth, with a 21% growth in H2 between October 2024 and March of 2025. That led to the overall sales momentum to come in at 12%. And hence, this year is more interesting to say the least, because in H1 of FY26, the company has actually already done 20% of sales growth. Even if they're able to maintain the kind of growth they did last year, it'll be much higher than the company's guidance of industry growth of about 7% odd. And that's the key question. What will be the other key things to watch out for essentially at this particular point of time? Festive is split between September and October. This year we had the Navaratri in September month, and that's why the H1 FY26 sales have been boosted. So you have to keep that in mind. The other key aspect is that in 2025, Navaratri gave a huge boost to those sales, and hence going into October, that'll be the other key aspect to watch, because you will get the strong momentum. So it's important to see September as well as October. That's what the management has also guided. And the base effect also comes into play now, because last year the growth was only 5%. On that base, a 20% growth has been done. So that's the key question. Finally, let's also just get this argument into a financial picture as well, because on a standalone sales basis, the tractor segment contributes 25% of the revenue. But when you look at the EBIT, it's almost 40%. So any kind of incremental growth that comes in the M&M tractor division is a huge boost to the standalone auto segment of Mahindra & Mahindra as well. So that's the key, in profit intelligence segment on Mahindra & Mahindra today. There are multiple key factors, but they are on the way for a strong H2 performance, at least in the tractor segment.
Okay, so that's with regards to where M&M goes. Neeraj, any view on what Puneet just got to us with regards to whether M&M will be able to meet industry growth in FY26? Is that the data that you would look at as well?
Yeah, I think definitely the kind of growth you see in M&M, the way they've been executing their new launches, I think they're doing quite well there. Whether it's the EV segment, the SUV segment, tractor, so the growth has been very good. I think that should continue. They should be able to beat the guidance and even the industry growth. So I think generally you've seen numbers improving for M&M over the last few quarters, and I think that should be the stay going ahead also.
M&M. Now let's look at the IPO space as well. Tata Capital will be actually opening on Monday. But before that, Truworld Bioenergy and Jinkushal Industries, both of these listed on the bourses. Truworld Bioenergy is seeing a pretty decent sustainability on the first day, 7%. It, I think, listed with gains of around 9 to 10%. Jinkushal has turned into the positive, but pretty flat right now. Neeraj, would you be a buyer of any of these two from a fundamental point of view?
No, I don't have any view on these stocks.
Okay, and what about a Tata Capital? The IPO opens on Monday. We're talking about 15,500 odd crores. The price band is 310 to 326, out of which almost around 6,850 odd crores is going to be a fresh issue. It's Tata Sons and IFC who are going to be the selling shareholders. What would you advise investors to do with a Tata Capital?
I think Tata Capital is coming out at a very good price. I think people are not expecting them to come at this kind of a price. And, even in the off market, the stock was trading at a much higher price. And there was expectation that they'll come around 450. So they have beaten that expectation and coming at a much lower price. And for a financial company, capital is like a raw material. So they're going to raise this money and they're going to utilize for their growth. So I think this is a good IPO, and people should be investing in this. The only thing that you have to be, you have to have a 2 to 5 year view when you're investing in these kind of stocks.
Neera, just to follow up on what you mentioned about M&M, the stock has run up also at this particular point of time, and you've seen that in other plays like Maruti Suzuki amongst others. Do you feel it's a better bet to look at the other companies like Escorts in the tractor space, which hasn't seen that kind of bullish momentum, or something like a Bajaj Auto as well? Because while the growth subsided, the valuation has subdued because of the lack of move in these counters. So would you also look at the second rung companies essentially at this point of time?
Let's divide between two-wheelers and four-wheelers. In the two-wheeler space, definitely, whether it's Bajaj or a Hero Motor, they have been lagging behind. So their valuations are very attractive. I think Hero has a better scope depending on, because looking at the valuation, still available at 17, 18 times, if I'm not mistaken, the last TTM earnings. So Hero would be my preferred bet as far as two-wheelers, and even Bajaj Auto should be looked at. Valuation-wise, they have been trading at discount to their historical valuation. And coming to four-wheelers, and two-wheelers, if you look at TVS Motor. So TVS Motor has done the same thing with M&M has done in four-wheelers. So they both are portfolio stocks. If they are in your portfolio, you need to hold on to them because they've not done anything wrong for you to sell them at this point of time. So as a portfolio, they should stay in the portfolio. But if you're looking at putting in fresh money in the four-wheeler space, you're right that you can look at other options. There are options like Scots. There are options like something like Action Construction Equipment, which is into construction equipment and tractors and related equipment. So these kind of stocks can also be looked at if you're looking at the construction equipment off-road or the four-wheeler space.
Okay, so that's with regards to where the entire auto pack goes. As Puneet was asking, whether the next leg of stocks that should be considered or not. But moving on, we've already discussed the defense space. Now let's talk about real estate as a sector. What's happening, Puneet, in the real estate space right now is where there is buying interest, but a lot of markets which are seeing a downtick when it comes to the sales number, the pre-sales number. The first quarter, was weak, and that's usually the trend. A couple of managements that we're talking about also are indicating that some markets are seeing strength. For example, Bangalore, there is resilience, but there is a risk when it comes to IT as a sector, because more than 60% of the exposure that real estate players have in the Bangalore market is from IT players. With the layoffs coming in, with the H-1B visas coming in, with Hire as an Act coming in, probably there could be concerns there as well. So everyone is not really confident of real estate as a sector right now.
Definitely, and I think the pricing also comes into play, right? Because I think Anushka had put out the story that Delhi as a market is starting to see that kind of pricing momentum yet again. So let's get in Anushka actually to get us some perspective on a Morgan Stanley note as well, and also on some perspective on what she's picked up on the pricing in Delhi market as well. Anushka, over to you.
So the update, Puneet, what we are looking at is that there might be an upward revision in terms of property prices for the NCR market, and this is an interesting one considering that just in this recent months we've seen the property rates being increased in Karnataka, as well as that Freddie Reckner rates had been increased in Maharashtra as well. So with this, if this is implemented, then since 2008 we will see this kind of an up move coming in from the NCR market. Now these are the circle rates that we're talking about, which are minimum property valuation consolidation rates in any given area, and this is not restricted towards any one particular area that we are seeing. It's for the overall size that we are looking at, across categories that we are looking at. This includes the likes of premium as well as super luxury as well. Now here the stocks in focus would be something like a DLF, which is one major operator in terms of where the NCR market is concerned. Signature Global, Anant Raj, a couple of other names that you should be watching out for, along with something like a Max Estates, which is also a mid-cap stock that we're talking about. But apart from that, an interesting note came out from Morgan Stanley, and this is all the expectations for the second quarter. So despite seasonality, they saw that the bookings have remained relatively better off. In fact, they expect the top 5 developers to register pre-sales growth of around 11,000 crore, which is a 44% of an uptick that we are looking at. This would be led by something like a Godrej Properties as well as DLF to report stronger numbers in terms of where the bookings are concerned versus the expectations. However, Oberoi Realty and Lodha could disappoint, given that there were no new fresh launches which had been announced in the quarter so far. So tad bit of dip in terms of pre-sales is something that we could be watching out for. But this is essentially what's happening in the real estate space.
So much, Anushi. Neeraj, final question from our side. In the real estate space, do you continue to look at the bigger players? You've seen companies like DLF now enter the Mumbai market as well, and Anushi did highlight the pricing in Delhi NCR. What's your view on the space and anything that you like right now?
See, because I'm from NCR, so I follow the prices, what's happening in NCR quite closely. So I think there's definitely some traction. There's some improvement in demand inquiries which have started happening in the NCR market. So DLF is very strong here. So DLF, I think the way they've been beating their guidance on pre-sales, like last year also, I think they said also they'll be able to beat their guidance easily with the kind of launches they've already had so far. And other stock that I'm positive on is Max States, because they're a newer player. They've been there for last few years, but then the kind of launches they've had, the kind of growth that they're doing, and the backing of Max New York Life that is there with them. So I think that company is doing well and should continue doing well. So I'm positive on the real estate space, and with the kind of interest rate regime we're in right now, I think towards now and from now till end of the year, I think demand should really pick up for them.
Okay, demand should pick up. So Max Estates, 6% up move is what you're seeing. Thank you, Neeraj, so much for joining us on the show and sharing your views. In fact, Kunal, time for BTST, STBT. What would you go for?
Yeah, I'll go here from the PSU Bank space. Can Bank is a BTST trade here, already trading in a strong uptrend, and we expect this momentum to continue even in the next week. So that's a buy for me, keeping a stop loss of 122, looking for targets of 128 to 130 on the high.
Okay, so that's the call coming in, BTST call from Kunal. Kunal, Lloyd's Engineering and Aegis Logistics, both these counters are seeing some great momentum. 11 to 15% is the kind of up move respectively on these names. Would you be a buyer of any, or would you advise profit booking?
Okay, I think Lloyd's Engineering looks good on the chart. Just a 5% up move in the stock from the current level. So the entire correction phase is over, and we are seeing the stock again hitting back to the demand zone. So we can expect a good rally towards the gap area of 67, 68 in the very short term.
That's with regards to where Lloyd's Engineering goes. Apart from that, if you have to look at any of the Nifty 50 stocks in trade today, and if you talk about the top gainers in today's session, we just have the likes of a Tata Steel, Power Grid, Axis Bank. In fact, a positive call that did come in on a Axis Bank, from a brokerage house. Your view in terms of Axis Bank and with regards to Coal India, both of them seeing divergent trends today.
Yeah, I think Axis Bank was one stock when the Bank Nifty was correcting. Axis Bank was showing relative outperformance, and which is where now when Bank Nifty has started to perform, this will continue to outperform as well. So I think Axis Bank has still upside left towards the mark of 1230, 1240, where the stock can go into. So I'm bullish on the stock. But if you talk about Nifty 50, I think L&T is one stock which you should keep on your radar for next week. Already the breakout had come in. Now the stock was consolidating at high levels, and now it's ready to see the big move coming in. So L&T is something which I'll be interesting on the buying front. 3600 is a very strong support. I'm expecting the stock to go towards 3950, 4000 mark.
The view, Kunal, we'll let you go on that note. Thanks so much for joining in, giving us your view across a bunch of sectors, and a very happy weekend to you. But with that, let's wrap the markets now, because we've seen actually a very strong session at the end, where we saw buying coming into the Nifty 50. We are ending roughly about 60 points up, very close to the 24,900 marks. So that will be a key positive going into Monday's session. While the Nifty Bank as well has continued a positive momentum. We started the show with about 0.2% or 0.3% odd gains. We are ending it with almost 0.4% gains, at least on the Nifty Bank, and that's one key segment that's continued its positive momentum over the last week, continuing from the RBI post meet as well, MPC meet as well. Look at the Nifty 50 heat map very quickly. We were seeing some pressure on stocks like Max Healthcare, and that's continued to be the case, as well as Coal India, and Kunal just spoke about that. But something like a Tata Steel, Power Grid, Axis Bank have continued the positive momentum. We just mentioned about the positive brokerage note on Axis Bank, so that's key. L&T has starting to show that kind of positive momentum again post them selling off the Hyderabad Metro to the state government. So that the pressure on the balance sheet won't be there anymore. So that's another positive. BL has continued to show strong strength, and that is another up 1.46%. Amongst others, we've seen something like an Asian Paints also closing just almost a percentage above, and Interglobe Aviation as well. While the other names in terms of the auto pack have largely remained flattish today. Even so, you saw those reactions coming in on the first. Yesterday was a holiday, so largely flattish reaction on stocks like M&M, on Tata Motors as well. Let's look at the sectoral heat map now, because you will see the sectors like PSU Bank amongst others be very key. It's up almost 1.1%, but the Nifty India Defence Fund has been the top gainer today. It's almost up 1.99, almost 2% now as we speak. Nifty Metal has continued its positive momentum, so that's another key positive trigger. While on the losing side, very minuscule, so not too much to talk about. Consumer durables, CPSC amongst others, private banks have also done well today in trading sessions. So overall, a lot more green compared to the red. Advance decline ratio very quickly. We were seeing a consistent buying on the advances, and that's been the case. We actually inched up slightly over the last hour and a half, so that's a key positive. Almost 2:1 in favor of advances. The mid cap and the small cap is the other one, where we saw positive momentum today, and that buying came in the last hour and a half or so. So very strong move, 0.8% on the mid cap, and a similar move is seen on the small cap as well. Finally, the BSE 500 to cap off a very strong week for the market, especially in the second half of the trading session. KIOCL actually ended up at 20% in the trading session. VMart is the other one where we saw a 16% move coming in post its quarterly update as well. Aegis Logistics has been on a tear since multiple brokerage reports have come in on that particular space, so that's a key positive. Borosil Renewable, MRPL is some of the other ones. JK Paper up 7.4%. We also saw Sai Silk also close above 15 to 16% in the trading session, so that's another key positive. And in terms of the losses, not much. Sun TV has seen some pullback from Wednesday's levels. Max Health we've discussed during the show as well. Adani Power, Soha, as well as Metropolis are some very minuscule moves, but something to highlight as well. But some of the other cues that going into Monday that you should actually be watching out for, Excel Realty, Shraddha Infra Project, as well as Muthoot Capital will be in focus. Fundraise for the couple of them and a general meet, and the big IPO starting Monday will be Tata Capital. We have also LG to watch out for as well from Tuesday. But for Tata Capital, this is the price band. A huge IPO of 15,500 crores as well is something to watch. The last big IPO that we had was something of Hyundai last year of 27,000 crores. So this will be one. And since it also has a fresh issue as well as something like an OFS, a lot of retail investors will be invested into this particular IPO as well. Pace Digitech is the other one which will see listing amongst others, and that's one of the other key ones to watch. But overall, it's a week that's ended very well in the last hour and a half. But that's all the time that we have on this edition of India Market Close. From here, myself, Somit, everyone who put the show together, thanks so much for watching, and have a very, very happy weekend.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने.
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So let's just first see how the markets have fared today. So the Lal Street ended a choppy day on a good note. Nifty managed to climb above 24,900 levels and Sensex also jumped over 200 points. Now this has marked the second day of gains for the benchmarks, while broader indices notched gains for the fourth straight session. Now, most sectors have ended the day in the green, with defense, metal and PSU banks leading gains. Auto and media were on the back foot. Benchmarks have gained over 1% for the week, with the ends near 24,900 levels. Shriram Finance and Tata Motors have gained the most in Nifty. Nifty PSU banks have gained the most and up over 4% for the week. Now let's look at brokerage note on India's growth pivot. Now Morgan Stanley believes that India is entering a new phase of growth, with market and earnings peak still ahead. So the brokerage has shifted its portfolio, favoring the domestic cyclicals by going overweight on the financials, consumers, discretionary and also the industrials, while staying underweight on energy, materials, utilities and also healthcare. So key structural positives driving this shift include improved macro stability, shrinking oil intensity in the GDP, expanding services exports and also lower inflation volatility, which support higher valuations and also lower the real interest rates. Now, according to Morgan Stanley, government policy supporting growth through recent interest rate and also the reserve cuts, which is higher capital expenditure and GST reductions, with further RBI rate cuts and policy reforms expected to add the momentum. Now let's look at Trualt Bioenergy shares, which has made a solid stock market debut, listing at a premium of nearly 10.9% over the IPO price of 496 rupees on both the BSE and NSE. Now the 840 crore IPO was hugely oversubscribed, and this is signaling a strong investor demand, especially from institutional buyers. Now shares have opened at 550 rupees on BSE and 545 rupees on the NSE. Now the company has market value of 4,716 crore rupees. The company has clarified that the funds raised will actually fuel its expansion into grain-based ethanol, debt repayment, and also new capacity for sustainable biofuels. Realty stocks are in focus today. Morgan Stanley expects that a strong Q2 for top developers despite seasonal weakness. Now, pre-sales could actually touch 11,000 crore rupees with Godrej and DLF likely to lead the pack. However, Lodha and Oberoi may actually underperform this quarter. In fact, Delhi's property market may see a shift. Now, the government is looking to revise the circle rates, the minimum property valuation in any area. So the move aims to align these rates with current market prices. Public feedback has been invited, and the revision could actually impact the transactions across all the property categories. Defense stocks on the radar, with Goldman Sachs projecting a strong outlook for the key players. Solar industry stands out with the best asset turns and also strong return on equity. Astra Microwave and Data Patterns are expected to benefit from the margin gains and lower capex. Now, Azad Engineering's robust order book signals high growth. Now, BL remains well positioned while HAL and Bharat Dynamics face the execution risk despite attractive valuations. Let's now look at the auto sales for September. That came in largely strong. So 7 out of 10 OEMs either beat or met the expectations. Hero, Bajaj, Tata Motors, Hyundai and also Escorts have outperformed. M&M and Ashok Leyland were in line with the estimates. TVS Eicher and Maruti, however, missed the mark. Next stock that was buzzing in trade today was Adani Green Energy. Now it has announced the commissioning of 2 new projects at its massive Khavda Renewable Energy Park in Gujarat. The company has successfully brought online a 50 megawatt solar power project and a 31.2 megawatt wind power project. Now these additions part of one of the world's largest renewable energy clusters under development, substantially, increasing Adani Green's operational capacity. With these latest commissionings, the total operational renewable energy generation capacity at the Khavda site now stands at an impressive 16,679.8 megawatts. Now in the jewelry space, viewers, PC Jewelers has announced a strong financial performance for the second quarter, which is driven by robust festive demand. Now in a key operational update, the company has reported that its standalone revenue has surged by an impressive 63% year-on-year for the quarter ending September 30th. Equally significant, the company continued its focused debt reduction strategy, cutting its outstanding bank debt by approximately 23% during this quarter. Now, this is in addition to a substantial reduction made in the previous fiscal as well. Aerospace component manufacturer Unimec Aerospace is feeling the pressure from the international trade tensions as US tariffs have impacted its second quarter performance. Now, the company has informed the market that it continues to experience a slowdown in revenues for the quarter ending September 30th. That is the Q2. So, revenues are expected to be marginally lower compared to the preceding first quarter, a decline directly attributed to the imposition of the US tariffs, which have affected the export revenue realization. Now, the tariffs have caused customers to delay the order pickups while they monitor the trade environment. Value retail chain V-Mart Retail has announced a strong provisional business update for the second quarter, demonstrating robust growth driven by both existing and the new stores. So the company has achieved a total revenue of 807 crore rupees for the quarter, which is marking a substantial 22% year-on-year growth compared to the same period last year. So the growth was supported by strong in-store performance, with same-store sales growth exceeding 11% across both its V-Mart and Unlimited retail formats. Now, leading ethnic wear retailer Sai Silks has reported a surge in its financial performance on the back of strong consumer demand. So, the company's revenue for the first half of financial year 2026 or H1 FY26 clocked in at an impressive 823 crore rupees. Now, this marks a robust year-on-year growth of 34%. Zooming into the last quarter, which is quarter 2, has seen a revenue rise to 444 crore rupees, growing by 28%. So, looking ahead, management is extremely optimistic and maintaining a long-term outlook of 15% year-on-year revenue growth for the next 3 to 5 years. So the confidence stems from the strategic expansion plans, which actually include opening 10 new stores. On to some more corporate action. Major financial player Nuvama Wealth Management has received a crucial green light from the market regulator SEBI to set up its own mutual fund business. Now, in a move that signals a significant new revenue stream, SEBI has approved Nuvama to act as the sponsor for the proposed Nuvama mutual fund. Now, this is the final step before the firm can officially launch its schemes, pending the fulfillment of final regulatory requirements. The plot thickens in the alleged TCS layoffs in Pune as the IT employee union NITES has made a direct appeal for urgent intervention from the Chief Minister. Now, NITES alleges that nearly 2,500 employees in the company's Pune offices have been forced to resign or abruptly terminated. Now, these affected professionals are primarily mid to senior staff with long tenures of 10 to 20 years. Morgan Stanley maintains its overweight rating on Axis Bank and raises the target price to 1,450 rupees. The brokerage revisits the bank's turnaround story, noting key strategic steps taken over the past year. Now, it expects a gradual re-rating as the micro environment improves, with gains likely, across NIMs, growth, and also the credit costs. Time for an exclusive. Sources tell NDTV Profit that acquisition financing may get the green light, but with conditions. So banks may be allowed to fund acquisitions, but financial sector deals will remain off the table. Lenders must stick to the regulatory limits, even as private credit intensifies competition. So banks have been pushing for a review to level the playing field. GHCL has asked the government for anti-dumping duties to curb the cheap soda ash imports from China and other countries that are squeezing local margins. Now, India's soda ash demand is growing at 6% annually, but depends on higher cost synthetic production as it lacks the natural reserves, unlike China, US, and also Turkey. Now, despite price drops, GHCL has managed cost efficiencies and also operates at 98% capacity, while pushing for a new 6,500 crore rupee plant to actually double the production amid rising solar glass demand. Now, the company has stated that the anti-dumping duties are seen as a short-term fix. Long-term competitiveness will actually come from cost optimization and also growing exports to markets like Bangladesh and Sri Lanka. Elon Musk's AI startup XAI sued OpenAI last week, accusing it of poaching employees and also stealing trade secrets. So OpenAI has denied these claims, calling the lawsuit baseless and a distraction from XAI's own shortcomings. So OpenAI said that XAI's real aim is to bully former employees who chose to leave and work elsewhere in the AI industry. The case is now before a federal judge in San Francisco, with OpenAI seeking dismissal of the suit. Tata Motors have reported a record passenger vehicle sales of 60,907 units in September 2025, which is marking a 47% year-on-year surge, and it's also the highest ever monthly sales. So the growth was driven by the rollout of GST 2.0 and festive demand during the Navratri, with domestic sales rising 45% to almost 60,000 units, and also strong performances from the models like Nexon, Harrier, Safari, and Punch. Meanwhile, EV sales nearly doubled to 9,191 units in September, and a 96% increase year-on-year, while CNG vehicle sales surged over 105% in the quarter. So Tata Motors shares have gained over 2% in early trade to 735 rupees on the NSE. Finance Minister Nirmala Sitharaman says that global uncertainty is no longer a passing phase, so it's structural. Speaking at the Quarterly Economic Conclave, she highlights how the global order is shifting fast, with traditional rules being rewritten. Now, she stresses India's rise as a stabilizing force driven by domestic demand, capital spending, and also low inflation. So, FM also calls for reform in the multilateral institutions and also says that self-reliance is key to India's 2047 vision. The government has taken a big step towards regulating India's fast-growing online gaming sector. So the Ministry of Electronics and IT has released a draft rule under the proposed Online Gaming Act 2025. So the rules call for setting up a new regulator, that is the Online Gaming Authority of India, which will oversee the registrations and also licensing for game providers. So companies will need to register the games for a 5-year term, after which renewal will be required. Oversight has also been split, with the esports coming under the Sports Ministry and social or casual games under the Information and Broadcasting Ministry. Now, these draft rules aim to bring more accountability and structure to the online gaming ecosystem. President Donald Trump is considering firing thousands of federal workers to pressure Democrats to end the government shutdown that has now entered its second day. So the White House plans to cut jobs in agencies deemed wasteful or unaligned with its values, with Budget Director Russell Vought leading the review. So Republicans argue that Trump has the authority to make cuts during the shutdown, while critics want spending on layoffs may actually be illegal and also harmful. So the shutdown has furloughed around 8 lakh federal employees, costing $400 million daily, with no immediate resolution expected as political blame continues. On to some more global news. The death toll in a powerful earthquake that hit the central Philippines late Tuesday rose to 72 Thursday, with nearly 300 others injured. Now, seismologists say that the earthquake in and around the city of Bogo was triggered around 10 p.m. by a shallow undersea fault line that hasn't moved for at least 400 years. Officials say that the earthquake damaged or destroyed 87 buildings and also nearly 600 houses and affected around 2 lakh people. Now, in a significant shake-up in the world of chess, India's young Grandmaster Gukesh has dropped out of the 5 top 10 rankings. Now, once celebrated as the youngest player to enter the elite list, Gukesh now faces stiff competition as the global rankings shift. Meanwhile, in a promising turn for Indian women's chess, Divya Deshmukh continues her steady rise, climbing to an impressive world number 11 in the women's rankings. The ICC Women's ODI World Cup 2025 is off to a thrilling start, and it's Bangladesh who has made an early statement. Now, in their tournament opener, they put up a solid all-round performance to actually defeat Pakistan and also begin their World Cup campaign on a winning note. So the bowlers did well to restrict Pakistan to a modest total, and the batters held their composure in the chase, showing maturity under pressure. Now, time for an NDTV Profit exclusive. We sat down with the fastest man alive, Usain Bolt. Now, from his experiences in India to the setbacks that shaped his journey, Bolt shares insights into the mindset behind his legendary success. Listen in.
The lightning bolt has hit India, and he's in Mumbai right now. Sitting across me, you know who I'm talking about, the man who holds the record for the 100, 200 and 100 into 4 relay, or rather, yeah, that's what it is. Usain Bolt, thank you so much for speaking to me today, and it's an absolute pleasure. You're in India for the second time. The last time was 14 years back. A lot has changed. What stands out this time around?
More people. But I'm here for a longer period of time, and I've actually got to try the cuisine this time. You know, I mean, last time it was just in and out. Met a lot of people, seen the young athletes, so there was so much.
Yeah, I'm not surprised you said lots of people because it's the most populous country in the world. But having said that, there are actually, and I was doing a little bit of reading before this interview, a lot of commonalities, particularly in the cuisine. It's interesting that you mentioned that, the lamb curry and the roti. Have you had a chance to try it out?
When I was here the first time and I tried it, I was like, oh, this is magnificent, you know what I mean? Because the curries are different in Jamaica. It's a different type. So for me, when I tried it, it was wonderful. So I've had it like almost every night since. So that's good.
So the people that you've met, and you've interacted with a lot of athletes, a couple of young sprinters in India as well. You see promise there. What do you see that you like?
Yeah, I was talking to the young athlete and he was saying, can't remember his name. He's just started to run the 100 and 200 meters and I met him. He signed with Puma and we were having a conversation and he shows a lot of promise. And he was asking me about starts and because he's also tall. And so we had a great conversation, you know what I mean? And I told him if he needs any advice, contact me and I'll try to help out as much as possible.
That's really magnanimous of you. But speaking about height, you're 6'5". It's not evident because you're sitting down. And a lot of people who don't know about this, when you're talking about sprinting, you need to have a slightly lower
center of gravity.
And so you're 6'5". You've challenged it right there. You had scoliosis that you were, it was diagnosed, and that's a curvature of the spine.
Still do.
How did you get past that?
It was a lot of challenges. Those are the two main challenges. For me, scoliosis was just something there to maintain. It was a lot of core work to keep my core steady, so because I would pull my hamstring all the time. And the start was just, I had to work on it immensely, but it became average. So that was okay, because the end of the race is all my best part of my race, so all I had to do was make sure I got a good enough start.
You know, everybody who watches and anybody who's had internet over the last decade and a half probably has seen that race. In the last part of that 100-meter where you've pretty much, you've not hit the record, the line yet, but you've already celebrated, and people are thinking he could have gone faster. Did it ever occur to you?
Yeah, but it was never about running world records, because at the time I had the world record. So for me, it was just going to the Olympics to win. You know what I mean? It was my first season really pounding out the work. So I was just happy to win, you know.
So when you think about the journey that you've had and you look back, of course, you've overcome these challenges, but I'm just wondering about the mental state, because you've rebounded several times from injury. You mentioned that your hamstring is given up, right? What is the mental state that requires?
I think at the start it was tough, but after I met my coach, Glenn Mills, he kind of gave me more confidence, because he would explain to me, listen, injuries are part of the sports, and the first thing he did is like, listen, we need to find the root of your problem, because I didn't figure that out until I started working with him, you know what I mean? And he said, all right, the scoliosis is their problem. What do we need to do to avoid this? And that's kind of what gave me the confidence, because I knew that I had somebody that knew exactly what we needed to do at all times to make sure I was okay.
Is he your biggest motivation or somebody else?
Yeah, for me, my coach played such a big role. He's like my second dad, you know what I mean? He really supported, not just in track and field, but in life. He would give me advice with everything. So it's something that I really, really have to give thanks for.
Okay. Any advice that you would give to people that are starting out? Because a lot of people in this country as well want to be sports people, but then it's all or nothing pretty much. You hit the peak. What advice would you have?
Make sure it's something that you love. You know what I mean? That's the first thing. I think you have to love anything you're doing. And then take your time, learn your craft, and give it time. You know what I mean? Nothing's going to happen overnight. Take your time, believe in yourself, and just push through.
On that note, Usain Bolt, thank you so much for taking the time. Pleasure speaking with you. It's very close to Diwali. And I'm not sure if you know that it's a big festival here in India.
Okay.
If you could look into the camera and say Happy Diwali to everyone watching.
Happy Diwali.
Speaking with you. It's very close to Diwali. And I'm not sure if you know that it's a big festival here in India.
Okay.
If you could look into the camera and say Happy Diwali to everyone watching.
Happy Diwali.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other. What was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है और
Benchmarks gain over 1% for the week with over a 300-point gain from the weekly lows. All sectoral indices close higher for the week with Nifty PSU Bank as the top gainer. RBI's acquisition financing rules for banks will likely come with riders. Sources say the central bank may bar banks from funding financial sector acquisitions. Banks had sought review of norms to address competition. WeWork's IPO sees a muted opening after being subscribed 0.06 times. CEO and MD Karan Virwani clarifies that the company is squeaky clean and investors' plea alleging disclosure lapses and SEBI inaction won't impact the IPO. Layoffs by TCS are not layoffs but retrenchment, says Harpreet Singh Saluja, president of Nascent Info Tech Employees Senate, after the IT firm allegedly forced 2,500 employees to resign, adding that the employees have not received any support from the state. NDTV Profit's ground check at car dealerships revealed that benefits of buying a new car exceeds that of buying a used vehicle. Sales of new cars increase, aided by GST cuts in festive season, while dealerships of old vehicles see muted sales. Nuvama Wealth Management gets SEBI approval to set up a mutual fund arm and launch schemes including those in specialized investment fund category, allowing the firm to serve a wider base of investors. Good evening. You're watching Profit 360 on NDTV Profit, and I'm Sanjana. Over the next half an hour, I'm going to take you through the latest in markets as well as national and international news. So let's dive right into it. It's our top focus this evening. SEBI has approved Nuvama Wealth Management's entry into the mutual fund space. Now, this nod allows Nuvama to act as a sponsor and set up its own fund house. However, the company must still complete the final registration process before launching schemes for investors. To understand what this approval means for Nuvama and how it could benefit the company, let's go across to my colleague Vansh, who has all of the details.
So as you rightly mentioned, now the company has received approval from SEBI to act as a sponsor for the proposed Nuvama mutual fund. Now this will enable the company to set up Nuvama mutual fund and will further allow to launch schemes under the mutual fund category, including those similar to the SIF category as well. Now this will further allow the company to enter into a new revenue stream, and the mutual fund will further strengthen the bands in the retail and the institutional investment segment as well. The company can launch various schemes including SIFs offering diverse investment products for the company, and also it will enable them to increase AUM and their client base over time. So they have also joined they will also join other financial players in the high growth mutual fund industry through this as well. So this is how the overall picture is looking like for Nuvama Wealth.
Thanks for that, Vansh. And we also have Anshu Kapoor, President and Head Nuvama Asset Management, joining us this evening. Hi Anshu, welcome to NDTV Profit. I'm going to dive right into it. What does receiving this in-principle MF license mean for your firm's journey from an AIF-centric asset manager to a full-spectrum AMC? And give us all the details. When are you going live?
Thank you, Sanjana, for having me on your show. Yes, this is the in-principle approval, and we need to complete a certain set of steps for SEBI to give us the final approval. Hopefully, all of this should be done in the next 6 months, and our internal target is to be able to launch as early as possible. Well, you're right that until now, our asset management has been focused on what you call AIF and PMS products. By its very nature, Sanjana, it is a little restrictive in terms of the number of investors or the kind of investors we could reach. And therefore, mutual fund for us, and especially with the SIF regulation coming from SEBI, it was a natural step for us to move towards the mutual fund license to complete this product suite. And I believe this enhances our ability to bring to investors the kind of innovation and the ideas we already on the AIF platform onto a much simpler and wider accepted mutual fund platform. And we are very excited with this SIF regulatory framework that SEBI has introduced. So maybe our first products will be SIF in nature and then followed with the normal mutual fund kind of products.
Okay, but I'm also curious because, and I'm sure even our viewers are, because in an already crowded MF industry, what unique value proposition will you actually bring to the investors?
Right, Sanjana, that's a natural question and a good question. Yes, there are almost maybe 60 mutual fund providers out there, but the industry is also very large and kind of doubles every 5 years or so in the market. Well, our focus is to bring a lot of new ideas to investors, which investors may not have until now experienced or seen. See, as an asset manager, we will follow the investor needs. And I think there is a need on a lot of product innovation. The regulatory aspect is helping us with this, like I mentioned, the specialized investment funds, where long-short funds or absolute return funds or maybe sector rotation funds. So those funds are not available so far to investors. It's very hard. Until now, they're the premise of the 1 crore minimum investment in the AIF platform. With all of this innovation from the regulatory side happening, we believe there's a lot of potential to offer many of these products to investors at large. And you are aware that Nuvama Wealth Management, through its Nuvama Private and Nuvama Wealth Management, has a large access and reach. And also through a lot of external asset management distribution platform. So it makes it simpler, it makes it convenient, it makes it regulatory kosher, and gives a lot of confidence to investors to access these products which were not available to investors so far.
So then let's delve deeper into that, because given the market chatter around SIFs, that's your specialized investment funds, will Nuvama then prioritize launching products in this category, and how are you viewing the landscape that's evolving in India at the moment?
Yeah. So Sanjana, what's happened is that the talent availability on for products which are suited for SIFs is limited. And track record of managers for this product category is also limited in the country. Not many asset managers have the track record, have the size and scale of AUM, have the experience or the talent. Fortunately for Nuvama Asset Management, we've been doing this for the last 4 years since we started our asset management journey. And therefore, we have the track record, we have the team, we have the experience with what works and what doesn't work. And the way we build all these products is to be able to naturally adapt these products and pour these products into a SIF regulatory framework. Our belief is also that this is the first step from the regulator. I think a lot more innovation is possible. See, globally, this nature of products is about 5 to 6% of the long only AUM. So until now, investors had only long only kind of products available to them. We, I think, should be able to bring to them through the SIF platform a lot of innovation where they can manage risk. They can take a little bit more risk if they want to. They can get into absolute return kind of products and many more innovations that a regulator may permit. So I think we believe that it's a natural extension of our capability and therefore this step.
Okay, and before I let you go, your 5 to 10 year plan and more importantly, the break-even timeline and expected capex for scaling the mutual fund business.
Well, it's a little early. Sanjana, we are building the plan as we speak, but I don't see this happening in a, you may expect that we will ride our existing network and not go very, very widespread with the kind of product set that we will have to begin with. So I think what we will do is launch a limited set of products, see what the investor experience is, see what the demand is and see what the response is. And then we decide to scale up. So I think it's going to be a graded step up, but we are very excited with the possibility, I must say.
Kapoor, Nuvama Asset Management, thank you so much for joining us and wishing you all the very best as you embark on this new but also at the same time very trusted kind of space. So wish you all the best. Thanks so much for your time.
Thank you, Sanjana.
And let's move on now to how the markets fared today. We saw benchmarks close higher for the second consecutive day, with the Nifty ending near 24,900 and the Sensex bouncing back 500 points from the day's low in a last hour surge. Both the Nifty and the Sensex gained over 1% for the week. Most sectoral indices ended in the green today and all indices ended higher for the week, with PSU Bank and Metal up over 4%. Now on the stock specific front, we saw Tata Steel and Power Grid gaining the most in the Nifty, and the metal rally was mostly led by National Aluminium, gaining over 10% for the week. And it's time now for an NDTV Profit exclusive. Acquisition financing could get the RBI's green light, but with riders. Sources tell NDTV Profit that deals in the financial sector will continue to remain off limits, and my colleague Vishwanath Nair has all of the details.
Yeah, so if you were to look at what the actual monetary policy decision was, I had been saying it since that day, but that was just a sideshow. The main focus was, of course, the norm changes that the Reserve Bank of India is bringing in, 22 specific norm changes. Now, yesterday we did talk about how the regulatory changes came in as far as the large exposure framework, as well as the draft guidelines for NBFC's forms of business, how those came about. What we're telling our viewers today is about acquisition financing. That was one of those key measures that was announced by the regulator, that banks, Indian banks, will be allowed to finance acquisitions by Indian corporates. This is something that they were struggling to do earlier. Earlier, of course, a foreign branch of an Indian bank could still do that. However, domestic lenders were not able to do that, partly because of the large exposure framework, but partly also because the regulator was not in favor of allowing leverage buyouts in India. So now, of course, it seems that things have eased up. What we are learning from our sources is that this was actually led by banks going to the RBI and lobbying for the rights, because they were seeing that their key corporate clientele was going towards private credit, and private credit competition and the intensity of the competition was too much, and banks were seeking a way to get into this space so that they could also start lending towards good quality, high pedigree clients wherever they needed any kind of financing for acquisitions. Of course, guardrails still exist. What the new norms are likely to see are very strong guardrails in place so that banks don't over leverage themselves. They also will have to follow internal lending norms. Remember that a bank is only allowed to lend up to 20% of their capital base towards a single corporate. So that will still apply. When it comes to investments, that number goes up to 40%, but that's inclusive of the 20% in lending. So you have an upper limit on the investment side as well. So even if they want to structure a deal with some amount of investment into the corporate rather than just a direct loan, they can do that, but those will be within specific rules so that Indian banking system is not ending up too exposed to a key corporate buying out its competitor.
Thanks so much for that, Vishwanath. And let's move on. WeWork's most awaited 3,000 crore rupee IPO opened today for subscription. The IPO is a complete offer for sale of 4.63 crore shares with no fresh equity being issued. But the initial response to the IPO has been rather muted, recording a total subscription rate of just 0.03 times as of 4 o'clock this evening. Now, remember, WeWork has found itself in the middle of a legal tussle after an investor dragged the company to the Bombay High Court, alleging that it concealed key risks in its IPO filings and further claimed that SEBI ignored his warnings. Now, when we put this question to Karan Virwani, MD and CEO of WeWork India, about whether the court case could cast a shadow on the IPO, he's dismissed the allegations as a publicity stunt, stressing that the company remains squeaky clean. Let's hear what he told my colleague Hiral Dadia.
We've just gotten a story wherein an investor has flagged disclosure lapses and there is SEBI inaction is what they've indicated. The hearing continues in the Bombay High Court as we speak right now.
Yeah.
What is it that you would have to say? Because the allegation is on material non-disclosures and regulatory inaction, misleading statements and significant omissions. And it says concealment of a criminal charge sheet against promoters. What would you want to tell investors?
I mean, all I would say is that we've been through the most extensive approval process when it comes to SEBI. We have disclosed not just what we needed to from a regulatory or law perspective, but we've actually gone over and above that to disclose. And you know, this is really like some pressure tactics that we have from, you know, certain business that has an issue, not just actually not with WeWork, with the Embassy REIT, which is where, you know, this issue has come up. And just because we're going IPO, they think that, you know, by doing this at a vulnerable position is going to have some impact on us. It's not. As a company and as WeWork, we are the squeakiest clean type of organization.
So what's your argument to it in the court right now? Because I know, I mean, there is an advocate who is representing WeWorks as well. So what is the argument that you have, number one?
There's no argument. We've made all the disclosures that we need to. And, you know, SEBI has gone through its process and given us the approval. And
so if anything negative comes out of this in terms of the hearing, is there a possibility that they could stall the IPO?
No, we don't see anything negative coming out of this. This is just a way to have some bad publicity or like pressurize us, which is not going to happen. And we are in a great place. We're very confident about the business, the growth, and we've done everything that we needed to do.
WeWork CEO maintaining that the company has a squeaky clean image. Remains to be seen how that case actually plays out in the Bombay High Court. Let's move on now. The Nascent Information Technology Employees Senate has taken a bold stand. They've written to Maharashtra's Chief Minister Devendra Fadnavis, alleging that layoffs at TCS. Now, the union claims that nearly 2,500 employees, including many with decades of service, are being coerced into resigning under pressure. All of this, though, TCS has denied these accusations. TCS has stated that no such layoffs have taken place and has emphasized its commitment to employee welfare. My colleague Puneet now joining us with all of the details. Puneet, over to you.
There has been a couple of key updates coming in from Knights, and they've written, as you rightly said, to the CM. Now, this comes after there has been some reports speculating further layoffs at TCS. Now, it's important to note that they already laid off roughly about 12,000 people, or 2% of their workforce in July. This letter is dated as of July of 22nd, and post that as well. Now we're starting to see a lot more coming out of TCS's Pune campus as well. Now, roughly 2,500 employees have been essentially forced to resign, is what this letter says. Apart from that, the affected employees are also in the mid to senior level, where the experience is also quite high, between 10 to 20 years of service. And essentially the point is that this termination actually violates the Industrial Dispute Act of 1947, which is there's no notice or compensation provided. So this is largely what the letter is stating as well, but a lot more conversation with Knights as to what has been the key issue, and this will follow up into TCS's earnings as well, which is scheduled on October 9. So a lot more to talk about then with the company as well.
Thanks for that, Puneet. And we also caught up with Harpreet Singh Saluja, the president of Nascent Information Technology Employees Senate, also known as Knights, on his take on this as well, and also on TCS being one of the companies that applies for the most H-1Bs for its employees. Let's listen in.
In US also, the letter that I have read from the United States Senate, they have clearly questioned TCS that why you are removing our employees in the particular location, and then you are going and applying for H-1B visa. You are the second highest in the US for the approval of visa applications, H-1B visa applications. So how come you are removing the employees at the same time you are declaring layoffs that we are worldwide, we are removing employees from the organization, and at the same time you are the highest, second highest, company that has been applying for the visa. So that question comes to Indian prospect also. The situation is very clear that they are removing and targeting the mid-level management employees who have given certain amount of time to the company, who have spent a lot of time with the company, and suddenly and abruptly you take a decision in the month of July that no, we are not capable of handling such kind of workforce, and we are going to remove the workforce in the name of restructuring. That is not restructuring. This is unethical and illegal layoffs and retrenchment.
Now, India's auto sector turned out to be resilient in September, with 7 out of 10 major OEMs beating or meeting sales forecasts. This was mostly fueled by festive demand and GST 2.0 benefits. Winners included Hero MotoCorp, Bajaj Auto, Tata Motors, Hyundai and Escorts Kubota. While auto majors like Mahindra & Mahindra and Ashok Leyland hit targets exactly, the top laggards were TVS Motor, Eicher Motors and Maruti Suzuki. But overall, SUVs and two-wheelers led the gains, signaling a strong festive kickoff despite monsoon lags. Through an NDTV Profit ground check that revealed that the car dealerships are seeing higher demand for new vehicles compared to old or pre-owned one. Let's now take a look at this report sent by my colleague Charu Singh on the auto demand this festive season.
The Indian buyer seems to be in store for a lot of benefits, especially if they are interested in buying an automobile or a car or a vehicle. What is happening right now is that India is seeing GST rate rationalization benefits. That means that some cuts and some price cuts have been extended to the Indian consumers. Apart from that, there is a festive season of Navratri, Durga Puja, Dashera, and also we are looking ahead for a Diwali week, and several discounts and favorable schemes for the buyers are in place. As per several conversations that we held with car dealerships in Prabhadevi, Dadar as well as in Chembur, we got to know of two different pictures. Firstly, of used car dealers, they told us that the footfall has not really increased because now benefits of buying a new car have superseded those of buying an older one. That means that with the budget that people had to buy an older one, they can now usually be able to afford a new one as well. But the new car dealers told us that more and more people are inquiring about the price benefits they are getting because of the festive season. More and more people are coming into the store. At least 25 to 30% increase in footfall has been seen, and more percentage of an increase is expected in the Diwali week coming ahead.
Thanks for that, Charu. And let's move on. The government has now taken a big step towards regulating India's fast-growing online gaming sector. The Ministry of Electronics and IT has released draft rules under the proposed Online Gaming Act 2025. Now, the rules call for setting up a new regulator, the Online Gaming Authority of India. What will this authority do? It will oversee registrations and licensing for game providers. Companies will now need to register their games for a 5-year term, after which a renewal will be required. Oversight has also been split, with esports coming under the Sports Ministry and social or casual games under the Information and Broadcasting Ministry. Now, these draft rules aim to bring more accountability and structure to the online gaming ecosystem. And let's quickly take you through the press conference happening right now with the Ministry of External Affairs.
Both sides are committed. We look forward to strengthening our economic ties, as you pointed out, and we look forward to further building on our ties with Russia. Abhishek, on your question, you would have seen that the UN Security Council Committee, they have given an exemption for the Foreign Minister to travel to New Delhi. Raghavendra, on energy sourcing, our position is very clear as to what is our broad approach, and I have been talking about it on several occasions. So I would refer you to my comments made in that regard. On the oil tanker, I think you will have to. I have also seen reports on this. You will have to take your question to people, the authorities who are involved in it. So they will be in a better position to answer your question. Kadambani, आपका सवाल अफगानिस्तान के अंतरिम सरकार के जो विदेश मंत्री है उनको लेके है। जैसा कि मैंने कहा, उनको इजाज़त दी गई है सुरक्षा परिषद की कमेटी द्वारा नई दिल्ली की यात्रा करने के लिए, और इस मामले में जब भी मेरे पास और कुछ कहने को होगा आपको बताने के लिए होगा।
And that was Randhir Jaiswal there making a very crucial comment, talking about valuing India and Russia's ties. Now, this is particularly important coming after President Vladimir Putin's comments lashing out at Donald Trump, insisting that India's purchase of Russian oil was purely economic. Let's listen in.
So for the United States, the benefit is not obvious, and for the countries against which the threat was voiced, like for India, if India stops buying our energy, damage will be inflicted upon them, like to $9 to $10 billion if they decline to buy energy from us. If not, high duties will be imposed on them, and once again, damage will be there. Well, the same amount of damage, and why then decline to buy Russian energy to actually sustain political risks? And the Indian people will look at what decisions are made by the political leadership and never accept any humiliation before anyone. And also I know Prime Minister Modi, he will never take any steps of the kind. So economy-wise, there is no point in it.
Vladimir Putin there standing up against Donald Trump when it comes to India's purchase of Russian oil. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other. What was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in. Investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है और रहमान
सोनू निगम के लिए जोरदार तालियां
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
Hello and welcome to KYC. This is Hiral and with me is Varsha Chandani. Clearly, you know, the show is meant for someone who really wants to look at a company from an investment perspective, and a long-term investment is what you should be thinking about. One company which is in focus on the back of everything that's happening, on the back of the weather in the country. The flu season is on, and that's where hospitals come into focus. Jupiter Hospitals is what we're talking about on this show. Let's quickly first understand what are the key questions that we are actually going to ask the management on the back of responses that we should be getting. First up, the company has been seeing a high depreciation. Now, the kind of impact it could have on its profitability growth on the back of the high depreciation is the first thing. Secondly, when you talk about their greenfield projects, there are 3 of them that they're looking at. What are the kind of timelines that the company is looking at in terms of launch? Their target EBITDA margins is the next big question over the next 3 years, because that will actually tell you what's the operational efficiency when it comes to this company. and the growth in the average revenue per occupied bed. What is that expectation going to look like? Are they expecting growth, or will it remain stable at current levels, Varsha?
Well, on my list, I would want to know what is the sustainable debt levels that a company will have considering expansions, because recently they've added more debt. Number two is the total number of beds that they want to add, plus what is the capex that they are expecting over the next 2 years. And lastly, I would also want to know the revenue growth which the company is expecting over the next 2 years. So these are 3 questions on my radar.
Interesting ones, I think, that we will ask the management. But first up, let's understand all about Jupiter Life. Now, it's a multi-speciality healthcare provider, and it mainly operates in the Mumbai metropolitan region and the western region. Currently, around 3 hospitals is what they have, with a total bed capacity of around 2,500 beds.
Well, you know, when we talk about hospitals, the main metric that we want to know is ARPOB, that is average revenue per occupied bed. For this company, it stands at around 67,300 rupees. Now, if you see over the years from FY22 to Q1 FY26, ARPOB has increased in a decent way, and that is actually important. So, we would want to know what is the sustainable growth in ARPOB that the company is eyeing over the next few years. And also, you know, so overall, so the 60, so as of FY25, if you see, ARPOB stands at around 60,600. And a healthy growth, about 6-7% is what one should expect when it comes to ARPOB.
With this, the next important factor becomes your occupancy, because until and unless the occupancy is strong, you will never see that ARPOB improve as well. But now what's happened is your occupancy has declined by around 380 basis points. The reason for this is the new bed additions that the company has done, and that's the reason why you've seen that decline happening. But from a 54, it's actually gone up to 65.3% in FY25, which is absolutely encouraging. So that is a good number to sit with, because you're seeing improvement that's happening on the occupancy levels as well, Varsha.
Now, you know, the main aspect when it comes to hospitals right now is the expansion. Every hospital is actually expanding when it comes to greenfield and brownfield. For Jupiter, if I were to talk about, 3 new hospitals are expected. One is Dombivli, where they're expecting 500 beds, 500 crore of capex is what they're going to spend, and it is expected to be operational by Q1 FY27. Then we have, you know, Pune Hospital also, wherein the operation is expected by, you know, calendar year 28, wherein they're going to invest 500 crore. And lastly, if I were to talk about their Meera Bhayandar Hospital, again, the approvals are underway, operations are expected by, you know, calendar year 29. So overall, 3 greenfield projects that they are expecting over the next few years.
Interesting. Let's now decode Jupiter Life. All the factors that we will be considering over here, we're looking at the income statement. That is something that is going to be checked. The balance sheet, cash flows and return ratios. These are the top 4 parameters. Apart from these, you have the shareholding, street credentials, valuations, and the street coverage with outlook are the 8 parameters that we're looking at. But first up, when you talk about the income statement, let's understand, you know, if you have to talk about the first quarter of FY26, clearly the impact was led by higher interest cost and depreciation, and hence we're asking that question to the management. The revenues, a 3-year compounded growth of around 19% is what they've seen. EBITDA also around 24%. Profits 56% in terms of the compounded growth, and hence a thumbs up, because over the last 3 years, the profit growth has been aided by higher other income. The higher growth that has come in from FY23 to 24 has been led by, again, a higher income and lower tax towards interest cost. The companies had higher interest cost in FY22 and FY23, and this reduced in FY24 and 25, and the debt in FY24 actually came down to 0, and hence we've given it a thumbs up.
Now, you know, talking about balance sheet, now overall we have given a thumbs up. If you see the borrowings as of FY25, stand at around 321 crore. But the company has almost 600 crores of cash as of Q1 FY26. So overall, on a net debt level, if you see, it's zero. Now, one of the reasons why we have given the thumbs up, and though the gross debt, if you see, is around 321 crores, this is the new debt that the company has taken because of the expansion that they are doing. So overall, a healthy balance sheet would, I would say, considering the cash sitting almost 600 crore as of Q1 FY26.
And that takes us to the cash flows, which is also healthy, and hence a thumbs up, because your overall cash flow from operations has remained healthy. Your net cash flow has been negative in FY24, but that's mainly on the back of investing items. And when you talk about FY25, the net cash flow at around 345 crores is due to the cash flow for borrowings being positive, and the ratings given is on the back of the healthy cash flow, mainly from operations. So that's the reason why a thumbs up on this aspect.
Talking about return ratio, so overall, if you see the chart, except FY25, the ratios, return ratios, ROCs have been healthy at 21, 22%. The reason you are seeing dip in FY25 are because of two reasons. One is, of course, some pressure in profitability, and the company investing a lot. So there's been huge capex that the company has done. That's why the ratios are depressed. And the other reason is because of huge cash sitting on your balance sheet will also depress your return ratios. So overall, these are the two reasons why you're seeing 17% of ROC, and one of the reasons why we have given a neutral rating when it comes to ratios.
Okay, so that's return ratios, which is a neutral rating. Let's shift focus to the shareholding pattern. It's very interesting because overall, your promoters have absolutely remained stable in the last 3 to 4 years. Your FIs did see an increase. In fact, from a 4.17, they've gone up to 10. A minor sell has happened, and that number is at 9.77% in FY25, but it's almost the double of what they were in the March quarter of FY24. DIs as well have steadily increased a small portion from 14 to 15.82 is what you're looking at in terms of the DIs, and the public has also remained pretty okay. It's gone down though. Your free float has actually gone down from 40.76 to a 33.51, but a lot of promise from FIs and DIs, and hence a thumbs up.
While, on the contrary, Hiral, the street cred, if you see, we have given a thumbs down because the company has not given much returns to their shareholders. In last 1 month, the stock is the stock is up only 4%, while in last 6 months it's down 2.6%. Rather, in last 1 year, if you see, the stock has given only 7% to its investors. While if I were to talk about longer term also, in last 5 years, or rather since when the company has been listed, the stock is up only 42%. This is from 2023. So overall, a thumbs down, when it comes to the returns that the company has given to its investors.
Okay, so that's with regards to where the street credentials go. Let's look at valuations now. You can say that the stock is not very expensive and is not very cheap as well, because if you have to compare it to your peers, it's sitting somewhere in between. Narayan Hrudayalaya is the only one which is the cheapest out of the 4 that we've mentioned, and this is taking into consideration FY26. If you have to look at FY27 as well, a similar scenario is what you're seeing. Around 39 times is where Jupiter Life is, where Narayan continues to be the cheapest one, and you have Kim's and Globus, which are Global Health, which are still more expensive as compared to a Jupiter Life. In fact, even the other ones, from an Apollo Hospital to a Fortis to a Max Healthcare, it seems this is pretty much in between. And if you have to compare a Jupiter Life to a 3-year average as well, it's somewhere in between to the mid, to that range. So again, a neutral rating with the way it's sitting at.
Well, talking about analyst recommendation and outlook, so 6 analysts have rated buy, well, the potential lies at almost 14%. On the outlook, company is expecting organic growth to continue when it comes to, Pune and Indore with new beds and, of course, ramp up in those areas. And most growth will come from Pune, Indore until the Dombivli hospital comes online, and the ramp up of Dombivli, if you see, and the other hospital will be the key metrics to watch out. Lastly, if you see, increased depreciation and finance costs will actually have some pressure on PAT margin. So because of this, we have given a neutral rating, when it comes to analyst recommendation and outlook for the company.
Okay, so that's the overall. Let's look at what the picture looks like from here on Know Your Company. First up, 3 greens: income statement, balance sheet, cash flow, a neutral in return ratios. And if you have to talk about shareholding, again, it's 1 green. Street credentials is a thumbs down, and your valuations and street coverage and outlook are a neutral, which takes you to a 5.5 on 8, which is also a good rating so far. But let's get in. Ankit Thakkar, MD and CEO of Jupiter Lifeline Hospitals. Ankit, welcome to the show, and always a pleasure to speak to you at NDTV Profit. We have these 5 or 6 key questions that we want you to talk about. First up, the interest and depreciation cost has been absolutely high, and that is what is impacting margins and profitability. How are you seeing the impact in FY26? And are you seeing that impact recede over the next couple of years? What is that trajectory going to look like?
Good morning. So, on the interest and depreciation side, I think you should expect the numbers to continue to look high over the next couple of years. We are currently in a serious capex mode. We are putting up 3 new greenfield hospitals as we speak. The first one is in Dombivli, which is 500 beds, which will come up first quarter of next financial year. Then another 500 bedder in Pune and a 300 odd bedder in Mira Road in the MMR region. So over the next 2 or 3 years, there will be serious capex, and all of that will lead to increased depreciation in the times to come. On the interest side, we have currently, we are still net cash, but we have some debt on the book in anticipation of the 7th Greenfield project as well, which currently we haven't signed, but we are negotiating a few things. So if that comes up, then the 7th hospital may be partially debt funded, and that will also give rise to some interest component. While we have been debt free for the last couple of years, but going forward, we may have some debt on the balance sheet.
So Ankit, then what does this do to your profitability and to your margins over the next few years? Are you seeing any dip, or you think they will remain stable at current levels?
So I look at it, when you analyze the operations, I look at it more at the EBITDA level, which is more reflective of the strength of the operations. So on the unit EBITDA levels of the current operating hospitals, that is Thane, Pune and Indore, we don't expect any impact or dips. Indore, on the contrary, should grow and improve upon margins a little bit. But as the new hospitals come up, each hospital, would take a year or 2 to mature. So I would forecast maybe the first year to be slightly negative at the EBITDA level for each new hospital that comes up. The second could be neutral, and the third onwards, it starts contributing a little. So we are in this growth cycle, and therefore, the below EBITDA line items are expected to be higher than what they were.
Hi, Mr. Thakkar. Varsha, this side. Pleasure to have you at NDTV Profit. Mr. Thakkar, the occupancy, if you see, dipped in Q1, of course, because of the addition of new beds. How long do you expect the ramp up, or when do you expect the occupancy to reach at the peak optimum level, and what would be that level be?
So the peak levels generally for all the hospitals should be somewhere in the mid 70% of occupancy. Thane is already there. Pune is close. It is in high 60s. I think the next year also it should pretty much get saturated. Indore, you see a significant percentage dip in occupancy because of an expanded base. Like you pointed out, we have added close to 100 beds in Indore. So while on the absolute terms, the occupancy continues to rise, but on the percentage terms, you do see some dilution there. Again, we believe that in the next year or so, once these occupancy numbers cross 60-65%, we have one more round of expansion possible in Indore. So we may add a few more beds in Indore. and then that will be the last of organic expansion as far as Indore is concerned.
Okay, so that's the overall expansion plan and what occupancy could look like. To add to this, let's talk about the average revenue per occupied bed. A good number that we've seen so far, I think if I'm not mistaken, in double digits as well. Is this something which is going to be sustainable, taking the kind of competition that is coming in at play in the MMR region? Because a lot of other hospitals, in fact, majority of them are on an expansion spree as well.
Well, I think, and I have always maintained this, if you want to extrapolate the RPOP number, I think it is the safest to extrapolate it to grow in line with inflation. Anything beyond that, I would not guide or recommend you to build into your model. As far as, the growth in beds is concerned, I think it is still a lot to do with demand, a lot to do with unmet need. So I would not attribute the growth or the lack of growth in RPOP to competition, but I would attribute it more in terms to reality, which is that we are at an optimal pricing level. And like for all other things in life, inflation is a reality. The inflation is a reality for healthcare costs. So to that extent, RPOPs will grow.
And also, Mr. Thakur, considering the expansion that you are doing, what would be the sustainable debt level, for at least next 2 years?
So the expansion which is currently underway, that is our journey from 3 to 6 hospitals, we are doubling our size. That will be completed free of any debt. So technically we should be able to complete this round of expansion with the cash reserves that we hold on our books and the internal accruals that we will generate over the next couple of years. The debt is going to be used if we do the 7th project. So the 7th project then will be debt funded, and that will probably sit on the book for some time.
Okay. From here on, in terms of the capex that goes as well, we're talking about the expansion right now. How significant is the upcoming capex going to look like? Because the ones which are in the pipeline, everyone is aware of that. But if you have to look at any further additions, the 7th hospital you said probably could be funded through debt. What is that capex going to look like post that?
So depending on the land and location that we eventually finalize, our one thing that I can assure you and your viewers is that we are not changing our broad philosophy. That is, we are looking at a greenfield project, we are looking at Western India, and we are looking at the size of 3 to 500 bed scale. Within these parameters, depending on the land, location, etc., that we do finalize, we will be able to give you a better sense of what the capex will look like. But X of land, I think pretty much everything else remains the same. That is, we should see the project come up at anything between 1 crore and half per bed.
So Ankit, to take that expansion into consideration, what are the high growth specialities that Jupiter Lifeline could focus on? And currently, any percentage of your revenues that come in from high growth specialities? And do you see any opportunities lying there?
So honestly, we don't really track specialties as high growth, high margin, all of that. See ourselves more as, community comprehensive health providers. We do everything from childbirth going up to, cancer, organ transplants, all of that. I think it is not very wise in healthcare to really hair split these numbers and look at, a P&L at branch level or specialty level. We don't consume that data even internally, because I don't believe that there is any actionable insight that can come from that data. So, for example, if I learned that gastroenterology, for example, I'm just throwing something, is a low margin business, what am I going to do? I'm not going to shut it down. We don't look at those numbers because we don't think those are actionable numbers.
Thakkar, just wanted to have, so we are clear when it comes to EBITDA margins, but what kind of revenue growth are you expecting considering the expansions that you are going into, the revenue growth expected for the next 2 years?
So next year, with Dombivli coming in, that should add to the revenue on the consolidated level. Pune is maybe 2 or little more than 2 years away, so that will not figure into your 2-year projection. Thana should grow in line with inflation on the pricing front because the occupancy is pretty much matured. Pune also has a little bit of occupancy growth, so it can grow higher than inflation. And Indore has 3 levers besides pricing, occupancy. It also has a third lever of criticality of procedures or case mix optimization. So Indore should show the fastest growth of the 3.
Ankit, in the end, investors want to know what the return ratios are going to look like because you did a peak of 22% on a ROCE in FY 23. When do you come back to that number? How long will it take you? And anything beyond that you're targeting?
I think you are the expert in that, and I think
no, but I'm sure. I think an investor would want to hear from the horse's mouth because that is, something that will probably stick by.
Absolutely. So from the horse's mouth, I think what I very strongly believe is that I should do what I am good at, and I should do my job rather than somebody else's, which is to do 2 things. A, continue to run the existing hospitals well, efficiently, and in the best interest of the patient so that we continue our operations well. And 2, make sound capex decisions for the future growth. So on that front, guidance from me can be limited to what we are planning to do next. We are planning to build 3 more hospitals and double up our capacity. You can, make an educated guess what double capacity can translate into in terms of financial performance. We can make sure that our capital allocation is not out of whack. We spend right amount of money. We don't overpay for things, and we are efficient in terms of capital employed. Eventually, that has to translate into returns if run efficiently. But I don't like making predictions on numbers. I rather like
predictions on performance, I think. Thank you, Ankit, so much for joining us on the show. And that's Ankit Thakkar clearly telling you as to what could be in store from here on. But very quickly, any key takeaways, Varsha, on this?
Yes, surely. So over the next 2 years, what he said was because of the depreciation, high depreciation, there going to be some pressure when it comes to PAT. Number 2, the peak occupancy level is expected at 70%. Soon they're going to they're going to reach at that 70%. And lastly, the ARPOB growth is expected or will be in line with the inflation. So
and they're going to take care of the returns to the investors as well. But thank you so much, for joining us on the show. To this, and that's all that we have on this edition of Know Your Company, only on NDTV Profit for your profit.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone will say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other. What was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI?
When it comes to money and investment decisions, seeking advice is quite common, whether it is from your neighbor or the veteran stock picker. I think that has to do with the need for validation. You want to know what you're doing is right and you want someone else to tell you that it is. But often people tend to run after bad advice instead of listening to the words that they need to. And that's not a new concept. Poet Saint Kabir has written a number of couplets or dohas about a variety of things, and one of them has to do with this. He says, people aren't interested in the truth. Rather, they fall prey to all the tall claims out there. It's akin to the milk seller who has to walk down the streets to sell something that is good for you, while the alcohol seller can sit comfortably with everyone flocking to him. It doesn't sound as beautiful as it does in Kabir's words. This is MoneyWise, and I'm Alex Matthew, and on this episode, my guest brings you Kabir's wisdom and also Rahim's wisdom and how that can relate to your financial decision making. Vinayak Sapre, who's a financial coach and author, is joining me now.
Hi.
Vinayak, thanks so much for taking the time.
Thank you so much, Alex.
Like
for
I
having
said,
me here.
I paraphrased and I paraphrased heavily. Let me hear the actual words.
Okay, so Kabir says that Sache koi na pati jai, jhoote jagpati aaye. Means people are not interested in the truth. Jhoote jagpati aaye. So they are more interested in somebody who is talking more exciting things. Gali gali goras fire, madira baithi bikaye. It's akin to that the milkman, as you said, he's walking down the street to sell milk, whereas the alcohol seller, people are flocking on to the alcohol shop to buy the alcohol.
It's so beautiful, right? And you've read Kabir's work extensively, Rahim's work extensively. You've even written a book about it.
Yes.
It's called Dohanomics. Yeah. And you've tried to get that wisdom and pass it on to people and tell them that even their financial decision making can benefit from this wisdom.
True.
What drew you to that? Is this something that you looked at much earlier in your life and you said that this is relevant?
Yes. So one is I'm born and brought up in Varanasi, so Kabir is in the blood. Okay. Secondly, since I have spent enough number of years in financial services, and what I realized during that period, especially whilst working with AMC, is that the communication was an issue. The concept of mutual funds or the concept of personal finance is a fantastic thing, but the way we have been communicating with people to the laymen, the investors who need these concepts, the communication was an issue because it was very jargonized. I thought I need to simplify it. I need to Indianize it. And I need to change it into the language people understand the best. And that's where the idea of reaching out to Sant Kabir and Rahim got into my head. And I said, a large portion of the country, as in a big chunk, the population of the country, they have read Kabir and Rahim in their school days. And the beauty of these duhas, because both these saints, they were great observants. What was happening in this society, and they kind of gave the message that how to conduct yourself in daily life. And I thought that the messages are can be linked to the investment, because as the psychologists also say, the behavioral economics also suggests that people make money or lose money largely because of their behavior with the money. Yes. So how do you behave with your money? That will decide whether you will become a successful investor or happy investor or not.
So the reason why I chose to start with that, and we were speaking before today, and the reason why we're doing this today is because I was so taken by what you were describing that I thought that my viewers would also benefit from it. But we're speaking at a time when, if you look at the Nifty 50, just as an indication of how the market has done over the last several years, then if you look at a little over 400 days now, and you do a point to point and you calculate the change, it's pretty much flat. So a lot of people that got advice to go whole hog into equities and went into the broader markets and invested in sectoral and thematic funds, they're seeing now some of that bad advice come into play. How much of this is setting your expectations and then sticking to it?
Yeah, very important question. Thanks for asking this. What has happened is, in fact, in the last 10-15 years, we can divide into two parts. That is pre-pandemic era and post-pandemic era. What has happened is, post-pandemic, all of a sudden the market started going up, and during that period, people who came into the market, they made humongous return.
Yes.
Much more than what they would have otherwise expected. And that's where people start thinking that they have become expert and they can generate these kind of returns. But the fact is, such returns are not sustainable. Secondly, if you are coming with the thought that stock market will never go down, people need to understand that it goes through a lot of volatility. Market is supposed to be volatile in nature. And why only 400 days? In the past, we have seen market has given negative returns for 3 years also.
Yes.
And that's where if you set the expectations right from the day one, that the expectation has to be rational in nature. So when the market goes down, you don't feel bad or you don't get jittery. And that's why Rahim says that, and you don't need to take too much of action. What happens is, when market starts going down, people start moving out. It should be other way around. That when the market is going down, that's a good time to buy, not to exit.
Yeah.
Right. So that's where Rahim says that. So my point as a market expert or an observer of the market, I can say that if you can't buy that at that point in time when the market is falling, but you need to stay calm.
Okay, so, but what does Rahim say?
So Rahim says, Rahiman चुप हवे बैठिए देखी दिनन को फिर जब नीके दिन आई है बनत न लगी है देर.
Okay.
So you don't need to take action on everything because like stock market, life is also it goes through lots of ups and downs. You need to observe what is happening. You don't need to take too much of action.
So let's take it line by line for those people that aren't well versed with the language.
So Rahiman chup have बैठिए. It means stay calm, stay put. Don't do anything. देखी दिनन को फिर. So keep watching, keep observing what is happening. Don't feel anxious, don't get jittery. जब नीके दिन आई है, नीके means अच्छे, good. So when the good days will come, बनत न लगी है there. It won't take time to change. You know, your fortune will change like overnight also it may change in very fast pace, then you can expect.
And it's so true because if you think about the market cycles that we've seen, and generally you talk about 3.5, 4 year cycles even.
Yeah.
But those cycles seemingly are getting scrunched. The time that they're taking to turn this way and that way are reducing in duration. Are you experiencing that as well?
Yes. So, and that's where if you have the patience, if you show the patience without taking too much of action, what happens is that the volatility gets even out over a period of time. So longer the period, that the volatility which you see in short period, which looks very sharp, very startling, over a period of time, it looks like a blip.
Yeah.
So
actually, to the point on SIP returns over the course of this last 1 year or 400 plus days, if people had continued with their SIPs, and we spoke about this in January, February this year, when the broader markets had fallen by 20% by February end, and then the recovery of 20% took place after that, and people who got out when the market had fallen by that 20% did not get to experience the very sharp rebound that came through after that as well. So though the point-to-point return for the benchmark will be more or less flat, there are chances that people who have deployed at the lower levels have actually made money.
Absolutely. And that's where, especially when you are a long-term investor, if you are a SIP investor, it makes sense to keep buying at different levels. And so if I have to give some example, so for example, September 99 to 2002, that was the period when there was total lull in the market.
Yeah.
Market fell down,
dot-com
burst happened. And suppose if you have been you were doing SIP in say Sensex only, and after 3 years the SIP return was negative. I'm talking about a return in Sensex. I mean investing in Sensex. It was around -4 point something. But if you continued for another 2 years, that number turns into magical some 17-18%.
Right.
From -4% to 18%. The beauty is, though the returns have gone up by almost four times or 5 times, the Sensex level, which was around 3,300 in December 2002, was approximately 6,600 in 2004 December. So it went up by 2 times, but your return went up by more than 4 times.
Because you use the time to accumulate units.
Yeah. So people call it rupee cost averaging.
Yes.
I call it unsung hero because it is least talked about the feature of an SIP.
So, but a lot of this has to do with what the crowd is doing. And there are so many great examples of this, even if we look at the stock market today, right? You see a stock that has gone up, say, 40, 50, 60%. And invariably, a lot of retail investors are the last to jump onto that bus. And as a result of which, when it starts coming down, they lose money, whereas everybody else has gotten off at that point.
Yeah.
I mean, we speak about herd mentality quite a bit. What do the saints say about it?
So Kabir said that mood mudaye hari mile har koi leo mudaye. Bar bar ke mood se bhed na baigunt jaye.
Okay.
That by shaving your head, if you are going to attain moksha, then everybody should shave their head.
Right.
But the sheep which get shaved every year, does she go to the Vaikunt or she attains moksha? Answer to that question is no.
Yes.
Similarly, and this is the most common mistake people make across the world, is the following the herd. And this is a typical trait of a retail investor. So retail investors come into the market when there is, it is overhyped, when everybody talks about that, okay, this will go to whatever level they are talking about, and then they think that, okay, I have missed the bus. Now I need to catch up.
Yes.
And the expectations again that probably in 6 months' time I'll double my money, or 3 times double my money, 3 months double my money, and a lot is because of the so-called influencers who keep talking about how to make quick money in short period of time.
Yeah. So that is true. And in fact, it goes back to the first point that we were talking about, which is setting your expectations. There's nothing wrong with a 12 to 14% compounded annual growth rate over the course of 10 to 20 years.
Absolutely.
Because ultimately, we're talking about 14, 15% every 6 years or so. 5, 6 years, you are doubling your money.
Yes. And secondly, to keep it very simple, I suggest people to look at, one is inflation plus 5% expectation. What is your objective of investing? To beat the inflation.
Correct.
Primarily to beat the inflation. So inflation plus 5% over a period of time. It will not happen on day basis, but over a longer period of time, inflation plus 5%, or say nominal GDP plus 5%. That is good enough expectation from the market.
Okay. Now, there is also this concept of ignoring liquidity, and this happens when, again, kind of like what people experience when they go whole hog into equity, and they have very little to deploy when the market falls. In fact, this was a bit of a meme that was playing out on social media. Buy the dip, but with what money? Ultimately, right? So because people had already deployed, they thought that the bottom had been found at 10%, but the market fell another 10%.
Yes.
Is there something here as well?
Yeah. So most important thing is people need to maintain liquidity for a variety of reasons. One of them, the most important in today's world, is there has been a lot of layoffs happening. So that's the reason one needs to maintain the liquidity. And in the financial planning terms, it is called as contingency planning.
Yes.
So Rahim says, Rahiman nij sampatti bina ko na vipati sahay, bin pani jo jalaj ko nahi ravi sake bachaye. It means that cash is the king, we say in English, right? So if you have
Indians
money,
have been saying that for a long time.
yeah.
It seems.
So he says that you need to have hard cash in your hand, because any casualty or any emergency, it comes without warning, right? It doesn't come by yes. So it comes without warning. And bin pani jo jalaj ko. So lotus, right? So if there is no water underneath the lotus, it will, because of the heat, or because of the heat of the sun or the rays, it won't be able to survive. So similarly, for an investor, it is very, very important that he or she should maintain the liquidity in the portfolio, at least 3 to 6 months of household expense.
So and look, we've spoken about this as well, but 3 to 6 months in your contingency fund, that is very hard for a lot of people to do, and often the advice that comes from financial advisors like yourself are to build it over a period of time, but to prioritize that first when you're starting out, because that's the best thing to do. It gets you in the saving habit. But beyond that, my question to you is, we're also talking about at the portfolio level, because people tend to gravitate towards creating a physical asset very early in their career. They're willing to take on that mortgage because ultimately a lot of people have told them, hey, you need to buy a house, you need to go and you need to create a physical asset, even when they're not necessarily ready for it. What advice would you have here?
So again, very important question, very relevant in today's context. People have this habit of buying physical asset a lot, or insurance policies, the endowment policies, the traditional policies, where people get stuck in case of any emergency. Because if you have taken the loan, or if you have bought such policies, no matter how the financial condition is, you'll have to pay the EMI, or you'll have to pay those premiums, hefty premiums. And that's where it is important. And I always say that you should be hoping for the best, but you should be ready for the worst when you are investing, right? And the liquidity is the paramount. It should be the most important aspect of your portfolio construction, that God forbid if anything goes wrong, and if you are exposed to real assets, then it would become very, very difficult for you to run the show.
So what is a thumb rule? See, and it's difficult to do that because everybody's risk-taking ability is different, but there needs to be some ground rule about the amount of liquidity that you should have available to you. For example, in COVID-19, when the markets crashed, those people that had ready available money to invest benefited because they bought Nifty 50 at 7,000 odd points. And then in the span of 2-3 years, it tripled from that. So, but if you don't have that money to begin with, it can't come from thin air.
Yes. So that's precisely the reason that whether it is casualty or whether it is the opportunity, you need to have cash in hand.
So what's the rule though?
So a rule, I don't follow any thumb rule as such, but typically say 15 to 20% of your total net income, as in the CTC.
Annual CTC?
No. So total 15 to 20% of your take home, not more than 15-20% should go into real assets. Because why I'm saying this, because typically any youngster today, people who are in their age group of say 30-35 or between 30 to 40, more than 40% of the expenses are towards lifestyle expense.
Yes.
Right, and when I'm saying lifestyle expense, that includes sending kids to school, right? So and that becomes necessity, that you can't avoid those expenses. In that case, there has to be some provision for liquidity as well, and for these kind of opportunities when they hit. When they come your way, you should be able to able to deploy that money.
Where would you put it? You would put it in debt mutual funds. You would put it in arbitrage. Is there a preferred way that you would suggest?
I would prefer to invest in arbitrage or a liquid fund, for that matter. Instead of investing into debt fund, because debt also comes with some bit of volatility.
I meant that one. So the broad category of debt funds, you're choosing the lower end or the shorter end of the spectrum. You're saying liquid funds or short-term debt funds or something like that.
And again, I have a reason for that.
Which is?
So I say that when you are investing for a short period in a fixed income product, you should have one term in mind, and in that particular order is safety, liquidity and return.
Okay.
So if the shorter end of the curve you have when you are investing, your safety is taken care of, and it also provides liquidity, and then followed by the return. Because there will be a difference of return by 50-60 basis point, but that doesn't make too much of difference.
Speaking of returns, there are a few couplets that relate to enjoying the moment or enjoying the process that you told me about, and they're really beautiful. Can you tell me about that?
Yes. So people keep chasing the return. Probably because of sheer excitement, or rather at times to flaunt that, say, hey, I have made this much of money. And the fact is, if you are not able to enjoy that money, then there is no reason to invest, right? And that's when Kabir says that कौड़ी कौड़ी माया जोड़ी जोड़ भरेला थैला कहत कबीर सुनो भाई साधो संग चले ना ढेला. It means you are penny wise pound foolish, or say penny you are adding to your portfolio, your corpus. कौड़ी कौड़ी माया जोड़ी जोड़ भरेला थैला. So you are now back full of gold, say, okay. कहत कबीर सुनो भाई साधो. So he's saying कि gentlemen, I'm telling you that whilst leaving this world, you'll go empty-handed. So why not to enjoy that money, right? Rather than chasing the
golden
returns.
words. And ultimately, I'm stunned by the fact that this wisdom holds through the ages, right? It's so true, and it is said in different languages. It must be said, right?
Yes.
Because you come to this world with nothing and you leave with nothing. It's what you do during that time frame that is the most important. So this is one thing, and then beyond that as well, to more or less just draw all of this to a close. Having a goal obviously is important, and saving towards a goal. Saving, you pointed it out, the fact that you should enjoy the journey and you're not saving just for wealth creation. This is an outcome. You are saving so that you can utilize that wealth for something, which is why one of the first questions I think advisors like yourself ask people when they say, I need help with my money, you ask them, what do you need it for?
Yes.
So what are the learnings that you can take from the saints that relate to this?
So important thing is your why needs to be clear on the day one. And if you are not clear, you sit with your advisor and get it clarified that why you are investing in first place. Secondly, whilst investing, it's a journey. So it will go through a lot of ups and downs. You need to have patience, you need to have discipline whilst investing, and follow that. Whilst following that path, you need to follow the discipline as well. It is very, very important. So any investment which you are doing, eventually you are going to enjoy that money, right? And for that, whilst setting the goal, sit with your advisor. And at times people have this habit of investing or asking that what is the minimum investment I have to make, right? And that's where you end up missing the goalpost. So Rahim says that Rahiman chhot naran so hot bado nahi kaam. So if you're looking at a larger picture, larger goal, then you'll have to invest larger amount also. For that, when you sit with your advisor, you can differentiate between need and want. So when you decide that, okay, this is my need, it means I'll have to spend this much of money, and if this is a want, I can,
do away with
this, and I can invest that money in the funds or in the asset class which have been suggested. So Rahiman chhot naran so hot bado nahi kaam. Madho damamo na bane 100 chuho ke cham. So rather than asking that question is, okay, what is the minimum investment required? You should focus on the goal, and if the goal suggests, it's like when you are chasing a 300 score in a one-day match, you'll have to take some bit of risk. You'll have to make one boundary at least in an over. So you'll have to take that kind of risk also. So the Doha suggests that Rahiman chhot naran so hot bado nahi kaam. It means the people who think small, they won't be able to do big in life.
Important message there. And there's also another teaching and several teachings related to action and related to moving away from procrastination and not waiting till. And look, this is true for good advice, for health, for wealth, for everything else, right? The better thing is to start work, and in the context of your physical health, the advice is to at least show up.
True.
So is there a teaching on procrastination?
Yes, and a very important one, because whilst on the journey of creating wealth, the most important thing which gets ignored is the power of compounding. So Kabir says, "Kal kare so aaj kare so ab."
The most famous one.
The most famous, and in the school, probably we have made a lot of fun of this doha. But "Kal kare so aaj kare so ab." पल में परलय होएगी बहुरी करेगा कब. That you need to start today, or rather right now. This is the time when people ask, many times people ask, what is the best time to invest?
Yes.
The best time to invest is now.
On that note, thank you so much for joining me today and for sharing those words of wisdom. And
Thanks for having me.
My pleasure. And you heard that. If you aren't investing and you're listening to this, start now. Let us know what you think and do stay tuned. This is NDTV Profit.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने.
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone will say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in. Where investors are looking for you.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
Big fund infusion in Samman Capital. Abu Dhabi-based IHC will infuse close to 8,850 crore rupees in the company. How does that help and what changes going forward? To understand more on that, we are today joined by Gagan Banga, the MD and CEO of Samman Capital. Firstly, sir, thank you for joining us and congratulations on the fundraise.
Thank you for having me.
It's quite a significant fund amount that you're raising from IHC. But why this fund infusion? Did the company need funds at this point of time? And does Sampan Capital actually need a strategic investor at this point of time?
So if you trace back our journey, especially over the last 7 years, we did hit a reset button about 7 years ago in the aftermath of the IL&FS crisis followed by COVID. And our understanding is that when a large balance sheet in the financial services sector hits a reset, it takes about 6 to 8 years for it to normalize and start growing again. And there are several examples of this between banks and non-banks. So we were at that stage where 21 to 23 were years where we were trying to stabilize the operations. 24, 25 were years where shareholders gave us a significant amount of money. We were able to make provisions and move on and try and start moving in the direction of business as usual. As we progress on that, we are clearly mindful of the fact that in an NBFC business, the foundation is provided by the equity capital. We already have sufficient equity capital. What we did need was a high quality partner or a promoter to solidify that base. And on that base gets built the building of the balance sheet, which is largely financed by debt. So for every rupee of equity, we raise 4 to 5 rupees of debt. Right? The ability of being able to borrow that 4 to 5 rupees efficiently at the lowest possible cost with the longest tenor across maximum number of lenders is clearly an outcome not just of the absolute amount of equity, but also by the quality of the people standing behind that equity. IHC, given its size, its governance framework, is that organization which brings in the solidity. More so, their decision to come in as a promoter even increases the strength further. So from a stability as well as from a growth perspective, not only do we have the requisite growth capital now, we have the right kind of a promoter. The other big thing is that what one is very mindful of is that will people need loans 5 to 10 years from now? Most certainly. Would loans be getting appraised and lent out in the manner that they are today? Most certainly not. Right? There is a very rapid tech evolution happening. And in order to stay ahead of the curve, there couldn't be no partner better than IHC, which has a massive ecosystem of tech-enabled organizations, AI-focused organizations. That ecosystem is second to none. We do a plug and play into that ecosystem and get several years ahead of whatever else is happening in our peer set. So it's a great combo of capital and tech combined with the management expertise and experience, right? I think now sky is not the limit.
Right, sir. But when you look at your book value, in the first quarter and it was at around 250 rupees, then why have you done this fund infusion at a much lower rate? Because your book value goes down significantly from 250 to 200 rupees. So why this fund infusion at lower rate?
See, book value is a balance sheet item. It is reflected in the net worth of the company, in its tier 1 ratios and all of that. Where such transactions will get priced is more an outcome of the valuation of the company basis net asset value or discounted cash flow, or as per this SEBI prescribed 10-day, 90-day VWAP formula. Right? The board took on the valuation advice provided by the valuers to see that the offer coming in at 139 rupees per share was a offer at a fair value, and therefore decided to give its consent to the issue. Book value and fair value for a stock capital infusion are two different things, right? Secondly, what is perhaps not appreciated enough is that unlike a manufacturing business where a promoter is manufacturing A and nothing stops them from using whatever profits are there in that business to start manufacturing B, C, D, E. In a regulated business, that is not possible, right? In a regulated business, it's actually the other way, that the promoter is taking ownership of a very high amount of debt, right? In this case, if business projections are to work out fine, we will go back to a borrowing program of 1.5 lakh crore. The incoming investor has confidence that the management team has the ability to manage such a borrowing program. But at the end of the day, it is their name, it is their reputation, it is their equity which is also at stake, right? So I don't want to get into, what's a good price, what's a bad price. There is a process. That process needs to be followed in letter and spirit, and the interests of the minority shareholders have to be protected. That has been done to the T.
Right. Okay. Now, given that an FI is investing, also becoming a promoter, how does the business perception of Sammaan Capital change, and does the business strategy also change going forward?
Yeah, so the strategy is to, over the next 12 to 18 months, get the company into a format where the lowest hanging fruit for us is to stop breaking the asset up into legacy and growth, right? Whatever assets have to be unbound will get unbound. What we are left with as of end of fiscal 27 is all the right kind of asset which we want to grow. That's point number one. Point number two is that over the next 12 to 18 months, I would imagine within about 6 months of the approval coming, we should be operating at a interest cost which is at least 150 basis points on our debt lower than where it is today. These are two significant milestones to achieve. As an outcome of these two, we will get to the third big picture goal, which is to get to a AUM of 1 lakh crore by end of fiscal 27. Now, what is life after fiscal 27? While we are doing all of this apparently visible stuff, what we will be doing also at the back end is in the segments which we've identified as our target segments, which is the low to mid income group. Currently, we are focused on the mortgage business, giving out whatever loaning products are available to us, provided a property is being mortgaged to us. That will expand to the segment stays the same, low to mid income, but whatever are their general loaning requirements, we need to critically examine each of them to see which one makes commercial sense for us. Whichever is a commercially viable loaning product to offer, we will expand ourselves to that. Second, if we have such a large customer base running into several lakh borrowers, right, and each of them being a fairly robust income profile borrower, there are a whole lot of other financial services which are required by them, which are beyond loans, which we don't want to do, but we can certainly leverage on our client base to partner with other service providers to see how we can do it in a more focused, in a more profitable manner for Sammaan Capital. So that's broadly the lay of the land. Focus remains low to mid income. All loaning options are with us. All financial services options are with us, but those are in partnership model.
Right. So anything that you have outlined that you will look to enter, any new segments that you plan to enter, anything that has been outlined?
It's too early right now because we are in a land where the regulator is being extremely proactive and is therefore evolving regulations very rapidly. So we don't know which product will have what kind of regulations behind it in, let's say, calendar 27, right? It's still 2 years away, so to say. Without regulations to be able to go on the drawing board for any product is being foolish, right? So we will wait for regulations to evolve. We know these are the type 4, 5, 6 products that are there. How do regulations evolve? For example, there was a news article that I was reading that the RBI is considering that if a mobile phone is bought on borrowed funds, if you default, it can get locked, right? That's a game changer, right? Suddenly a product which is running at X% delinquency will run at delinquencies which will probably, in my estimate, will be not significantly different to a home loan delinquency. Right? Today, without your phone, you will feel as helpless as practically you will feel without a roof on your head, right? So why should the behavior be any different? Is that going to play out in the market? I don't know today. Will that regulation ever come? I don't know today.
So you were talking about that legacy book. I believe it's around 23,000 crore at this moment. So will some of these funds be used to write off the legacy book? To what extent can we expect writing off of legacy book to come in going forward?
So let's not go to whether we need to write off the legacy book or anything of this sort. There is a action into which we are firmly on the driver's seat, which is to recover, cash collect 10,000 crores in this financial year. We are firmly in sight of that number. We will do that number. As a result of that, the legacy book will shrink further. Right? The second objective very clearly is by end of fiscal 27, I don't want any part of my balance sheet to be legacy or growth. Right? It is all growth. Right. So let's take each step of the journey and not try and run ahead of ourselves. The other clear message that I want to give via you is I'm fairly confident that for the new loans that we are underwriting, right, our annualized credit costs would be steady at about 100 basis points. Right? We will, from the loans that we have technically written off, recover 5,000 crores. Okay. So between 10,000 crores of cash collections, incremental credit costs of 100 basis points, 5,000 crores of recoveries, equity capital, the right partner, I think we have all what we need to do a very good growth from here, right? Everything else will keep doing, that's technical stuff for which management is paid.
So this 10,000 crore of recovery you're expecting?
Cash collections.
Cash collections. 5,000 of recovery and this 8,850 crore. For how many years this entire amount can be sufficient for the growth plans of Sammaan Capital, given that you have a target to reach an asset under management of 1 lakh crore by FY27? Will the company
So the
need
two
further
goals,
infusion?
one sort of medium term, the other sort of long term that we are working towards as a team is fiscal 27, we want to get to an AUM of 1 lakh crore. Fiscal 30, we want to get to a profit of $1 billion. Okay. Right? So these are two goals. We know what we have to do. We know when we have to do it. We have to look at regulations. We have to look at macro and keep on working out the fine details of whether our decision is right or it needs to evolve. But the picture is pretty clear in front of us now.
Right. Now, if you look at the first quarter, your asset quality did improve. But is there any pain point that you're seeing that could worsen this going forward?
Again, asset quality will play out in a range. So from wherever gross and net NPAs are, a range of 50 basis points can never be out of question, right? It can't be out of question for any lender, not for us.
Well, thank you, sir. Thank you for joining us and giving us the growth forward for Sammaan Capital. Well, that was the management, Gagan Banga, MD and CEO of Sammaan Capital.
Viewers, we have a very interesting conversation that we also teased during the break as well with WeWork India's management. Mr. Karan Virwani, the Managing Director and CEO, is joining us right here in the studio as well. Mr. Virwani, thanks so much for joining in today, and many congratulations firstly on the IPO. Let me first start off with why the particular IPO at this particular point of time, because you all have been doing a lot of desk additions over the last few years that has been doing very well. You're very close to being profitable as well. You were in FY25.
Yeah.
Any rationale of choosing the IPO at this particular point of time?
Firstly, thank you so much for having me. I think over the last 8 years, if you see our entire segment, not just WeWork, we've grown what is now known as the flexible workspace segment. It's becoming a larger part of commercial real estate, but still at the very early stages of its entire growth trajectory. It's a sunrise sector, within the real estate space, and in the last 5 years, especially post-COVID, we've seen a lot of adoption from some of the largest companies in the world to some of the best startups, mid-sized companies. And as WeWork India, in that time, we've really grown the business to become now profitable. We're generating, we've grown revenues at a CAGR of 20-25% year over year. And we've reduced debt also. As of January, we did a rights issue into the company, which was actually at a higher value than even the IPO that we're doing right now. That has made the business extremely stable, self-sufficient, in an industry and leadership position in an industry that's growing drastically, and so the IPO seemed like the best thing to do right now from a perspective of being able to create value for investors once they come on board, the ability for us to continuously go on this growth plan and continue to keep our leadership position, and then finally, I think that our business will always require capital because we invest in capex, and this gives us the ability to access the cheapest form of capital, which will come and show itself in your return on equity and finally return on capital itself. So for those reasons, this is why we decided to do it. I think also as Embassy, which is the promoter and the parent business, has invested almost 1,500 crores in this company. WeWork Global has invested close to 700 crores into the company. And this was all at a time where the business was extremely risky. Everyone thought the business model and the business was dead. So now, by being able to do this, as Embassy at least, we can take some of that capital back, strengthen the rest of the group, strengthen the other platforms that we have, and just focus on growing a good business.
That's interesting over here. A quick follow-up, Puneet, I want to take over here is we spoke about the profitability in FY25. First quarter of FY26, the company has incurred a loss to an extent. Want to understand your overall outlook. Will you continue the profitable trajectory, number one? And two, a revenue growth of 17 to 20% is what we've seen in the first quarter. A sustenance of 60% margin profile. Is this combination a possibility?
Yeah. So there's an accounting standard, the India's accounting standard, that impacts our business, in a heavier way because of the way leases are accounted for within India. So you will see that in the EBITDA, which is 63%, like you said, the reported EBITDA, it doesn't take into account the lease costs, right? So the way that we view the business is really, obviously, after all of those expenses, it's a major part of our expenses. So the adjusted EBITDA number is what you really need to look at, which is roughly about 22% or as of last year, 420 crores. Now, in the same light, because of the adjustment of the leases, in the reported numbers, you will see this loss, that the business has. It's not actually a cash loss, but it's the reason is because the leases get treated almost like a liability, and upfront there's a lot of depreciation and interest cost that gets hit on the book. So every time we're expanding and bringing on new centers, the first few years you'll see a heavier hit on the books, which will show this sort of loss. But from a IGAP or even from a cash perspective, that's not the outflow that the business sees or the profit that the business sees. The business actually has been profitable for the last 3 years on an IGAP basis, or really how we look at operating the business, cash in, cash out. That's kind of pretty much what we are looking at. While Q1 has shown you small losses, if you see from the previous quarter, it's down almost 60%, quarter from year over year. And we believe that even through the accounting hit, with the way that the business is growing, the cash flows and the profit margins, we will show profit in the coming quarters continuously, and sustain the revenue growth rate that you're seeing.
Okay, to add to that, let's add the occupancy bit as well, because when you talk about the June 2025 number, your occupancy rates have fallen if I have to compare it to FY23. I think from 83-84%, it's come down to around 76%. Now, this is somewhere telling you that the desks are vacant somewhere, right? Will this directly then impact your profit margins, or won't it?
Yeah. So FY23, if you see, we had roughly about 60,000 odd seats. Today we're sitting at close to about 114,000. Last year itself, we added about 27,000. Predominant 16,000 of that happened within Q3 and Q4.
Okay.
So the way that our business model works, there's a ramp-up period. It typically takes us 4, 6, 8 months to fill up centers. So what you're seeing in Q1 is just a moment in time occupancy because of the expansion that we saw last year. You'll see across most of our portfolio that within 12 months we take the centers up to about 80-85%. We've done that over the last 7 million square foot, and this expansion is of 1 million odd square foot that came in the last 2 quarters. In the next quarter, we're already seeing that occupancies have now come back up, and this will continuously actually keep happening depending on center addition, and new inventory expansion as we keep growing. Just sorry, a pointer note on this is that FY24, we had an average occupancy of about 80%. We delivered 20.4% EBITDA margins. Last year, we had a slightly lower occupancy, 76% on average, but delivered a 22% EBITDA margin. So there's clear margin expansion in the business, even as we're bringing on all of this excess capacity or bringing on fresh capacity today.
You mentioned that at the start of this year you had a rights issue as well to the fund, and while there was a higher valuation compared to the IPO, were the investors okay with this particular valuation that you're going with at this particular point of time? Because we've seen a flurry of IPOs as well, and some in your space as well. So what has been the conversation regarding the valuation at this point of time?
Yeah, look, we went through an extensive book building process, and actually if you see the anchor book itself, today we have some of the top domestic, so iPru to HDFC MF to Moti to Access, all 360, all of these are really large names and a very high quality book, and also foreigns like Goldman, Amundi and ADIC also, who have now joined the cap table. So that is what we wanted, a very high quality book, and if that meant doing it at a slightly lower price than what we did recently, we're completely okay with it, because to us there's firstly already a lot left on the table, and we think that in the next few months or the next few quarters this won't matter. For everyone will get to make money, and everyone will see some upside for sure.
Okay.
No, go ahead.
Okay. So with the upside that investors are watching out for, I mean, that's why it's an OFS for 3,000 crores already. You've not considered a fresh issue at all.
Yeah.
So is it that the company has sufficient funds to meet the further capex demand that could be coming in and cater to the debt, or what is the plan on that aspect?
Yeah. It's exactly that. So after the rights issue, which we did in January, we used all of that capital to pay off a huge chunk of debt, which has freed up cash flows. And as you know, as of last year, we're delivering EBITDAs of 420 crores post all expenses. So with the reduced debt and now the cash flows that the business is generating, we actually have more than sufficient capital to keep growing on this 20-25,000 desk addition that we have in mind, and service the debt that we have also. We also are able to really access quite cheap capital, cheap debt, moving forward as well. Today, our cost of capital will be, in the 10% range. Hopefully, after the IPO, that comes down, even further. And so we will balance internal accruals with some, small amount of debt, and just keep managing that as we continue to grow.
With everything said and done, I think we've just gotten a story wherein an investor has flagged disclosure lapses, and there is SEBI inaction is what they've indicated. The hearing continues in the Bombay High Court as we speak right now.
Yeah.
What is it that you would have to say? Because the allegation is on material non-disclosures and regulatory inaction, misleading statements and significant omissions, and it says concealment of a criminal charge sheet against promoters. What would you want to tell investors?
I mean, all I would say is that we've been through the most extensive approval process when it comes to SEBI. We have disclosed not just what we needed to from a regulatory or law perspective, but we've actually gone over and above that to disclose. And you know, this is really like some pressure tactics that we have from, you know, certain business that has an issue, not just actually not with WeWork, with the Embassy REIT, which is where, you know, this issue has come up. And just because we're going IPO, they think that, you know, by doing this at a vulnerable position is going to have some impact on us. It's not. As a company and as WeWork, we are the squeakiest clean type of organization.
So what's your argument to it in the court right now? Because I know, I mean, there is an advocate who is representing WeWorks as well. So what is the argument that you have, number one?
There's no argument. We've made all the disclosures that we need to, and you know, SEBI has gone through its process and given us the approval. And
so if anything negative comes out of this in terms of the hearing, is there a possibility that they could stall the IPO?
No, we don't see anything negative coming out of this. This is just a way to have some bad publicity or like pressurize us, which is not going to happen. And we are in a great place. We're very confident about the business, the growth, and we've done everything that we needed to do.
Absolutely. And you know, this really helps an investor or a viewer when that clarification comes in from the promoter, you know, when stories like this do come up. But thank you, Karan, so much for joining us on the show.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in, where investors are looking for you.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
समझो जरा भी प्यास जिसके हम ना हो
जान रहे दिल ये तो जान दी है तू
The gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside.
Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है.
The scale up from one society to the other, what was that like? And then ensure that the security guards actually know how to use it.
Shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate. हम खुद बैठ गए for several weeks with the guards from morning 5 a.m. till 10 p.m. in the evening.
Was it a difficult idea or a proposition to sell to investors?
Institutional investors found us. We didn't find them. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke. यार मेरे सोसाइटी में MyGate लगा है. What is this interesting concept?
That's a very lucky space to be in. Where investors are looking for you. The idea of MyGate has come from your co-founder, and then you joined in. You are now CEO of the company. It's growing at a great scale. I think 25,000 housing societies is what you cater to. Your market cap is close to about 2,000 crore rupees. But did you think it would get this big when you started out?
Well, I think every every entrepreneur would dream to build a large, successful, sustaining company. But when you start, I don't think, at least us, we didn't think that it will become so big, right? What got us excited when we started living our, I guess, the comfort of the jobs after 15 years or so, was the fact that we saw some trends that got us excited. The trend that you spoke a little bit about is gated community, which is becoming a preferred place of living. Safety and security is one of the key reasons people prefer to stay. An interesting aspect that we observed around us was how the gate of the community was becoming a friction point or choke point, while the whole external world wanted to come and deliver goods and services inside. I think that was a unique insight that we thought that got us excited and led us to start MyGate.
Your own journey has also been very, I think thoda hatke, I would say, for lack of a better word. You've done the IIT, IIM drill. And a lot of founders that I speak to have had that experience. They then go on to great jobs, and you've had, 16 years of professional experience before you became an entrepreneur, worked in the United States. Right now, the first thing I want to ask you is, did you go on an H-1B visa?
Yeah, pertinent question. Yes, I did go on H-1B H-1B visa. And I do want to make a comment since you asked that. Probably it's a great trigger for people to move back to India and start something here.
Okay, you're talking about the Trump administration's clampdown on H-1B.
Yes.
Yeah. So it might be a great trigger, but what was the trigger for you? Because you were about to get a green card. I mean, at one point that was the Indian dream, and maybe it still is for a lot of people.
Yeah, I think for one, in my mind, I never decided that I'll settle in US, right? So going into the US was a master's program. So I went for that. And the next logical thing was to take a job start kar lete hain, so that I did that. But I thought that I'll do the job for a couple of years and then move back. So in my mind, I was very clear that mujhe India mein hi settle hona hai. But along the way, because the job provided different opportunities for me both in US and in other areas of the world as well. So I kept going at it until in 2009 I said, अब बहुत late हो गया है. If I don't decide to make that switch or go back to India now, it will be very late.
Let me pick up from that point. आप कह रहे हो कि one fine day you said कि बहुत हो गया. इसके बारे में थोड़ा बताइए, because that is unusual. People don't want to come back once they taste that kind of a life, a different kind of a life. Is that something you didn't like over there? You didn't feel at home, or you had this, Swadesh kind of moment कि मैं इंडिया आके कुछ करूँगा?
नहीं ऐसा, I don't want to get cliche, ऐसा बिल्कुल नहीं था, right? ऐसा बिल्कुल नहीं था कि मुझे इंडिया के लिए कुछ करना है. I just felt कि eventually मुझे इंडिया में settle होना है. I didn't want to sit and find a job opportunity sitting in US. तो एक soft landing किया through IIM Ahmedabad का 1 year program that allowed me that 1 year period to figure out what to do next, and then started with the next sort of phase of my career, which is Goldman. And from there, I guess the seed of MyGate started, because Vijay Arisetti, who joined Goldman right after me, we became good friends, and then we'll speak about how the idea came.
Yeah. So let's talk about the idea of MyGate. And with a lot of companies that started at the same time as MyGate, 2016, 2017, 2018, I think you can say that's the golden period of startups in India. When you look back, some of those ideas now seem like no-brainers. Today, if you ask someone, should there be an app on your phone that helps you decide who comes into your house? Everyone say, of course, that's such an obvious idea. That wasn't the case then.
It was not the case then. The original idea was a trigger of our own experiences. So Vijay is an ex-army guy. He had lived life in secured cant areas. So when he retired and came to civil life, his first preference was to stay in a gated community, and his gated community balcony was facing the gate of his society. Oh, वहाँ पर I think he observed things कि I'm suddenly seeing the external footfall बढ़ रहा है, Amazon and e-commerce का just start हो रहा था. Intercom was being used, intercom is not working. Then he went to see the guard, and वहाँ register में कुछ लिखा हुआ है, nobody can read what's being written. So the whole idea of sense of security and community, जो एक reason for staying in a gated community, felt कि यार कुछ compromise हो रहा है. And that's when the original idea came, and hence the name MyGate, which is solving for the friction at the gate. And that idea he explained to me, and then we said, yeah, this looks very relatable. This is something that has macro trends. Gated community बढ़ रही है, gated community बड़ी हो रही है. And interestingly, gated community is also now what we thought earlier is the theater of commerce. If you see all the boom of quick commerce and every dark store being built around gated community concentration, क्योंकि in that 1 acre, 2 acre area in a high rise, you get probably 10 times of the households that you will get if you spread that across in a normal, individual houses. So those are the trends that really got us excited and quit our job and take this plunge.
So, okay. So, what I'm understanding right now about you, Abhishek Kumar, is that you have no fear of quitting something which is safe and jumping into the unknown.
Yeah, I think that's probably a good conclusion. And if you don't do that, if you don't leave your comfort zone, if you don't leave something that you are settled in, I think, you don't get a chance to do something and really discover yourself as well.
It helps if you have a very strong financial backing, or you don't have to worry about bills month to month.
Absolutely. And good point.
Was that the case?
Yeah, absolutely. So the trigger ki kuch apna karna hai for me was in that 2013-14 time period. So I did start saving for at least 3 years before the MyGate journey happened. So saving, ensuring that if MyGate doesn't work in case, right? Obviously, within MyGate, we may not draw the salary at all for several years, or just quite a fraction of what your normal salary is. So I was prepared for that aspects as well.
So there was some planning that went into
Absolutely,
it.
absolutely.
Okay, so the three of you get together, MyGate as a concept is born, and that's really when the struggle starts, isn't it? First to get funding and then to scale up.
Yes. So first, before you can get external funding, you can have a great idea, but I think you as founders, you have to also show that you believe it, and one way of showing it is put your own capital if you have whatever capital. So all three of us, Shreyans, Vijay and me, committed our own capital. Then once we did that, our friends and family members committed capital, and it was only that allowed us to have some product and proof of concept is when institutional funding came. So I guess one key takeaway is it's just not about idea. You do have to put some capital behind it.
What was the initial capital amount for MyGate?
The initial capital amount before institutional funding came was about 2 CR.
Okay.
That was personal and friends and family.
Okay. So, in today's context, I think 2 CR doesn't seem that much to start a company.
Yes.
But at that time, you started with that faith. Was it a difficult idea or a proposition to sell to investors?
Once actually not, because in our case, what happened was the first institutional investors found us. We didn't find them. And there's an interesting story because they found us because the 3 partners were staying in gated communities. We used the initial capital raise to put MyGate in gated communities, hardly knowing where these guys are staying. And it was among them that they spoke, yaar, mere society mein MyGate laga hai, what is this interesting concept? 2 months later, another partner ke society mein lag gaya. Another month later, us partner ke sister ke yahan lag gaya. And then they said, look, we need to call these guys because looks like something interesting happening in this gated community space.
That's a very lucky space to be in where founders are looking for you. Your investors are looking for you. Saying ki
we were lucky. We were lucky. Huh?
Okay. The scale up from one society to the other, because it depends on the product. Either you pitch to the investor or you pitch to the end user.
Yes.
In your case, you've started with the end user.
Yes, yes.
What was that like to get people on board, whoever is the society secretary or whoever, takes that call, and then ensure that the security guards actually know how to use it?
We were building a product that was going to be used by a security guard at the gate. It was important for us to understand what is the persona of a security guard is, right? We hardly spend time knowing our own security guard in the society. So what Vijay and I did was we shadowed the security guards for several weeks to understand where they come from, what is the skill level, what do they do at the gate, and that also led to very interesting insights. Right? First we realized that वो intercom बहुत use करते हैं. So
एक मिनट, shadowed मतलब क्या? आप खुद बैठ गए 14 घंटे 12 घंटे?
हम खुद बैठ गए for several weeks with the guards from morning 5 AM till 10 PM in the evening.
Did you pretend to be a security guard, or you explain that this is what I'm doing and I just want to observe you? How did you work that out?
उनके security cabin में gate पे जाके we spent time, we observed behind their shoulders क्या कर रहे हैं, then some of the actions we did ourselves, and that was very insightful. It told us कि smartphone penetration उतना नहीं है, if we make a complicated UI UX for them to operate in वो नहीं कर पाएंगे, तो वो सब designing of the interface of the product that eventually security guards would have to use, this exercise was extremely useful. एक और insight आया, we actually realized that the problem statement is much bigger. We realized that morning में just knowing as simple thing as मेरे house help में maid, cook or driver, what time they came, this alone was a big problem statement among residents. And when we solved for that, and you asked about how did you get your first clients or first societies, when we solved for some of these small things and showed to the secretary and treasurer, they really liked it. The fact that you could be in the gym or park or in Delhi or in US or any part of the world, knowing when your house help has come, knowing when your deliveries have come on your mobile and not have to worry about anything else was an aha moment. So that was that aha moment that really sort of encouraged us to keep going.
No questions at that point about surveillance, privacy, Because on the app you can actually see if there's a certain person that is being tracked, anyone coming in and they're not a resident, then where are they going, which homes they're going to. There's a lot of information out there.
It's a question that we are very aware, very cognizant, and very paranoid about as well, in the right way. With my and Vijay's background in investment banking firm, it's financial institution, which is Goldman, and Vijay's prior experience in defense, one key thing was that the word client confidentiality, the word data privacy was ingrained in us as part of our previous trainings and job experiences, which actually many people don't realize how important this is. So even the first communities that we sold MyGate to, we ensured that our systems, processes, contract, the security testings that we do, those are foolproof to the extent that we can confidently say that you can trust with your data, you can trust us. And that so far we have maintained. Obviously, it's a key aspect of MyGate that people trust.
You've also expanded beyond just security. And,
Yes.
With the volume of parcels that have started coming, e-commerce, etc., it also can get a little tedious for the users because you have to keep approving, etc. You have to be near your phone. But you've expanded to make it an ecosystem for a lot more, isn't it?
Yeah, absolutely. As you dig deeper and you understand the problem statements of gated communities along the way, you realize that there are several problems to solve for. One, the communities and gated societies are becoming bigger and bigger. So in Bangalore, what we used to call one of the largest gated community was about 2,300 homes. Is a common place there now, right? There are now communities being built with 5,000, 6,000 homes in large 50 acre, 200 acres campuses. Which means that you need truly an enterprise grade solution to not just manage gate and security. You need finance and accounting to make sure the invoices are being raised. You need a clubhouse management solution for badminton, code booking, this, that. You need a complete sort of help desk and ticketing system so that somebody can raise a ticket for leaking faucet. You need a communication module for election, for notices, for polls, for elections, for event management.
The question that comes to mind is gated communities are growing, yes, but there is a limitation to how much this will grow in a country like India. Even now, urbanization, yes, is growing, but do you think that there is enough scope for continued growth?
Absolutely. I don't think we are anywhere close to seeing any stagnation first. If you see, in our estimate, there are about 180,000 to 200,000 gated communities across the country. We are just in 25,000 today. So there is enough sort of room to grow there itself. If you see urbanization leading to city being expansion of the city, that is being led by real estate developers launching more and more gated communities. So as city is growing vertically and horizontally because of residential communities. And that is growing at a 12 to 13% CAGR. So I don't think, we call it the Great Indian Gated Community. That's our phrase internally. I don't think it's going to stop anytime soon.
Yeah. What are the other areas where you can expand? I know you had funding from Urban Company and there's a tie-up with the Urban Company also. So for all of the home services, etc. Yeah. Where else can you go ahead and expand now? Because I'm just wondering how much can you cater to that one community and how much can you grow on top of this?
Yeah. So like I said, today we are about 25,000 gated communities with 5 million homes. We absolutely see ourselves in 20 million homes, and that's limitation is us, not the market. So just staying true to the core and growing your core base. Second, the product portfolio. We have built a comprehensive solution, ensuring that all communities are using a full suite of products. That itself is a big problem statement. Third, we have ventured into advertising as a way of revenue generation. Fourth, we have also launched the same way we started with the gate of the community to all things community. We are now knocking at the door of the home. We have launched MyGate Locks, which is our first product, physical product that we have launched. So in a sense, these three opportunities today itself are something that will keep growing us at a 35 to 40% year-on-year growth in a sustainable way in the next at least 4 to 5 years.
And what about profitability? I know break-even has been achieved, but is there a clear path to profitability here?
Last year, FY25, we were break-even. It was positive 0.2%, so barely break-even. That was EBITDA number. This year, we are already EBITDA positive, and full year I'm targeting at least 8 to 9% EBITDA positive.
So Abhishek, you are now perfectly set for the next phase that every startup goes through. The profits come and then you hit the capital markets, isn't it?
We hope so too. We hope so too.
So IPO is in the plan.
Yeah, we have started the discussion, and probably in about 15 to 18 months is how we are thinking about it. It's too early to comment on that, at this stage, but definitely on the radar.
I wonder, as part of this ecosystem and very vibrant ecosystem in Bengaluru, in many parts of the country now, as startups are coming, do you think that appetite and space for newer ideas is very much there when you sit outside as a successful founder and look at the ecosystem? Or is that golden period between 2016 and 2018 now tapped its potential?
I would say hardly so. I think we are a state of evolution always, which means new ideas and new opportunities will always be there. I don't think there will be ever a time when we say that all opportunities, all problem statements have been solved in the country like ours, such a diverse country with diverse population, right? So the short answer is no. I don't think that will ever be the case, at least in my lifetime.
Yeah, no, but has it become tougher? Has it become tougher to raise funding? Has it become tougher to find the newer ideas of problems that have not yet been solved?
Look, what we had solved 10 years back and all the companies that are successful today are what I would call problems that seemed like immediate, right? Like the e-commerce and the, or medical in transportation or commerce or healthcare. So relatively it may seem difficult, but I don't think if you dig deeper and if you're passionate about a problem statement, there's any dearth of that.
What do you think is the biggest mistake startup founders make?
One is when you're looking to work with your first is who are you working with, right? And I'll relate to the MyGate team, right? So when we decided that three of us, a co-founder, will come together, we realized that we all three have complementary skills. So the first mistake that founders can make is that bringing together a set of people with same skills, and that leads to conflict. Second is the mistake I would say is that if you put your personal dreams and objectives ahead of the company's objectives, that will cause things to break. In our case, we are fundamentally, obviously we argue on several aspects, but company well-being and the company growth is everything. It's about MyGate first, and our desires and our intent and objectives follows second.
इसमें से कितने मिस्टेक आपने किए हैं?
इसमें mistakes हमने जो I would call mistake is we had an opportunity to acquire a company couple of years back, which we I guess we did not do, and that was probably a mistake.
You have to tell me which company.
I cannot tell you that.
Hint to दीजिए.
No, I cannot tell you. So I can't do that.
Did someone else acquire it?
Yes, somebody else acquired it. Second, I would say कि जो mistakes किए नहीं, but we were very close to making that mistake, is कि we thought कि there was an attractive offer to make MyGate part of a larger enterprise. We started to delve into that for several weeks and realized that if we do that, if we had got down that path, it would be a big mistake. So if you're very sure of the idea, don't get lured by these kind of offers and all of that, then stick to your guns, which we did. So we avoided that mistake, but we were very close to making that.
Okay, so one acquisition missed is a mistake, and being acquired missed is something which is not a mistake.
Not a mistake.
To put simply. I want to come back to the H1B question, Abhishek, because that's an experience that you've had. And there's no dearth of aspirants even now, maybe many who are in the process of aspiring for an H-1B visa, and maybe this issue will be solved, whatever it is. Having lived part of the American dream, do you think it makes sense to tell young Indians today not to go out and experience it? Because, you've experienced it.
Yeah. It would be wrong on my part to say, if you have an opportunity, if you're getting the exposure, don't get that, right? That'll be wrong of me to say that. I would say that the first 10 years of your career, get all the different kinds of exposure opportunities, maybe it's US or different country, but I think that really opens your mind to a lot of things. But then it's your call after 10 years.
What is your advice to your younger self in 2016 at the start of the journey, knowing now what you do? Or even let me take it back further. If you could talk to your younger self, would you have said, start your entrepreneurial journey earlier? Take the plunge earlier? What would you have done differently?
Look, I feel this 9 years of entrepreneurial journey has been quite rewarding for me. And if there was one advice or one thing I would have done differently, is start this journey much earlier. I feel that my 16 years of work experience and the learning that I had in those 16 years was extremely comfortable, but the learning quotient was probably not as high as what it has been in the last 9 years.
Okay. It's been an absolute pleasure, Abhishek. Thank you so much for speaking with us and opening up on your fascinating journey.
Thank you so much for having me here.
The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
समझो जरा भी प्यास जिसके हम ना हो
जान रहे दिल ये तो जान दी है तू
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Right. Hello and welcome to NDTV Profit. Today I'm joined by S. Krishnan, Secretary of the Ministry of Electronics and IT. Sir, your ministry has been at the center of several sweeping reforms over the past year or so, right from online gaming to data protection, from AI to semiconductors. There's been a multitude of reforms that have come in that have shaped India's digital economy. So it's a fantastic time to be talking to you, sir. We caught up around the same time last year, and MeitY was buzzing then, and MeitY is buzzing now. So congratulations on a fabulous year. First things first, sir. The buzzword from MeitY that is coming out is the DPDP. When can we expect, sir, the final rules to come out? And what is the sort of all right, sir. Yeah.
No, on the DPDP rules, I think all the work that has to be done in MeitY has been done. We have taken on board. There were more than 7,000 independent inputs on the draft rules. So we took note of all of those, figured out what needed to be sort of cleaned up in the rules or what changes were needed. We've taken care of all of that. The changes are not very extensive over the draft, but it had to be carefully considered, which is why it took a little while. Now we've finished our part of the work. There is a process within government of a legal vetting which has to be done before it is finally issued. We are going through that process. So it's a matter of now fewer than days. I mean, it can be any time that it comes back to us for issue.
So with respect to the DPDP, will there be a transition period that companies can expect?
I should say that the minister had set us a goal saying by 28th of September the work should be done in MeitY. We beat that deadline, but we'll have to sort of.
So, with respect to DPDP itself, there were concerns coming in from the press itself. There were concerns from smaller players in terms of how they would be able to comply. Have those been put to rest very sufficiently?
They've more or less been put to rest. I think through the process of the consultations, we also had considerable awareness building about the rules. And I think most of the misgivings and misapprehensions have been addressed. So all of that has been taken care of, and I think as far as the media is concerned, they had also delegations from the media had also met us, and I think it was made adequately clear to them that the media is not seen as a data fiduciary. And also that most people who share data with the media do it on a voluntary basis, and that is with consent. So.
Fair enough, sir. So another very important piece of legislation that has come out of MeitY is, of course, the Online Gaming Act now. What we can, in terms of now that the draft rules are out, it's open for feedback. What is the sort of flexibility that the MeitY has in terms of, let's say, in a situation where there are several concerns that are raised with respect to perhaps softening the rules in terms of the fines or in terms of the imprisonment terms? What is the sort of flexibility that the MeitY can afford?
I think as far as the main provisions in the main act are concerned, there is nothing that we can do now in the rules. Those are well considered provisions, and I do not think we have received any representations relating to the criminalization element or the fact that the penalties should be softened or any such. I think that has not been a request or demand that MeitY has seen so far. And in any case, that the rules cannot deal with. The rules basically deal far more with procedural matters and matters in the way that various parts of the implementation of the act is to be approached. So, and that is what it primarily deals with. And also the second bit that the rules deal with is that in the act, there's clarity on how an online money game is to be dealt with. But the Act also recognizes that there are other categories of games, online social games and esports. So there was a requirement for categorization of how that would be done. And that has been spelt out in the rules. How the categorization would be done, how the determination would be done, the process of the determination and the consequences of the determination. very important, in my view, provision of the rules, which makes it easier for online, the gaming industry itself to flourish, not the online money gaming industry, but the broader gaming industry to flourish, is that the rules do not require an obligatory registration of online social games. There could be a large number of social games, and we know what they are. They are recreational, they are educational, they are not involved, and they are positive outcomes. There's good content which is created there. That is a segment of the industry which the government is keen to promote, and that was very clear even in the act itself. So for that, the rules actually do not require online social games to necessarily register. That is basically an ease of doing business provision. So some new startup or a small venture which wants to set up an online social game, and it's not intended as a money game, they can go right ahead and do it without a registration. The registration of an online social game is voluntary, and the registration of an online e-sport, of course, is obligatory. But on an online social game, you don't necessarily have to register. Only if you want that there should be clarity that it is an online social game before it is being offered at large scale, you may choose to register it, and a determination is made. Of course, the authority will also have the power to actually look at online social games or any other online game which is being offered and examine whether it falls within the definition of an online social game or not, or whether it falls within the definition of an online money game. So that power is vested with the authority.
So once a platform is registered with the Online Gaming Authority of India, is that when they come under the purview, or without a registration, they still...
Without a registration, they can offer themselves. If they are sure that they're not an online money game, they can well offer themselves. I mean, somebody offering a game of Sudoku or a game of one of those, or a crossword game or something, I'm sure they can continue offering.
Voluntary registration for online games. Very interesting.
Online social games.
Online social games, right. So yet another, and the last of the legislations is the AI governance framework that is also expected. Again, it's said to be a broad-based sort of a framework, though there are separate already existing laws that govern parts of artificial intelligence within the country. What is the aim, and when can we expect some sort of a framework with regards to a comprehensive AI governance?
I think the framework is, again, the committee which is dealing with this has met, and there's just the final dotting of the I's and the crossing of the T's, which is currently going on. It should be out fairly quickly. But I think more important than anything else is that it defines the approach that India intends to take towards AI governance. And the basic idea is that do not regulate or legislate when it is premature or not necessary. In the AI space, we are fundamentally looking at ways by which innovation can be promoted, and we will regulate or legislate only when it is necessary. So which then means that if there are existing laws which are governing the space and which seem to be adequate to address the issues, we will use the existing laws in whichever way that we can to make sure that those issues are addressed. If there is a necessity to either clarify a provision or to strengthen a provision or to make some provision clear, that will be done. So whether it is the IT Act itself, whether it is the BNS, whether it is the Data Protection Act or the Copyright Act, all of those provisions will be used.
Right. So moving on to a bit of hardware now, that's also something that this ministry has really promoted. And we heard from the minister a couple of days back on the ECMS, the Electronics Component Manufacturing Scheme, highly oversubscribed scheme as well. What is the sort of foreign interest that you've seen in that particular scheme. Apart from MSMEs, right, 60% you've seen a lot of interest from MSMEs. What is the sort of foreign flow coming in?
Global companies also which have come in and they wanted to invest. We've seen a number of companies. There are Indian domestic companies, and there are, as you pointed out, MSMEs which are also domestic companies. So I think in terms of coverage, the coverage of the scheme has been wide. In terms of 249 companies distributed across the entire range of components that we wanted to address. So each of the sub-schemes has also been subscribed fairly in a fairly substantial way. In addition, the nature of the companies also includes a wide range. There are Indian companies looking to scale up, which is part of the intent of the scheme. There are foreign companies coming in to invest either directly or through in partnership with Indian companies which address specific areas where we did not already have the technology or where production was not taking place, like assembly passives and some of these areas, laminates, flexible PCBs and so on. So there are specific areas where that investment is coming in. Likewise, you see the component industry, because it involves, and especially things like capital goods and so on, and some of the module-based industries require other suppliers and vendors to come on board, and that is where MSMEs are playing a big role. So all of that is coming together quite well. So this is precisely what we were attempting to do, build the ecosystem. And the fact that there is a wide range of these companies and a cross-section across the entire, whether you look at it by size or whether you look at it by sector, means that our goal is more or less in line to be achieved. The response that way has been extremely encouraging.
You mentioned about ecosystems. Another ecosystem that is being developed is the semiconductor ecosystem. And especially when we spoke on ISM 2.0, you said that it will be broader in terms of getting chemical suppliers, gas suppliers, other capital equipment manufacturers with regards to semiconductors as well. Could you give us some contour in terms of what we can expect from 2.0?
I think we've